Chapter number 9. Chapter number 9, Accounts of Company. One of the most important chapters of our syllabus will be ranging from section numbers 128 to 138. This chapter will become a lot more easy if you understand the flow of all sections. First 5 minutes we'll have a briefing of all sections flow, then we'll start the sections as such. So first what happened is, the basic understanding you have to remember is company as a business entity was the very first time where we have segregated the finance and skill. Until this point of time, let it be a sole proprietorship or let it be a partnership firm, the skill and finance was brought in by the same person. Because it was brought in by the same person, they manage their own finances. There was no problem on reporting or accountability. But when it comes to companies act, the finance is brought in by a different set of people called as shareholders. But the finance has been utilized or managed by different set of people called as board of directors. Board of directors, there's a chance that they might have misused the finances. Shareholders did not know what was happening in the company. Hence, it was the responsibility of the board of directors to report everything back to the shareholders, for which the board of directors were made mandatory to prepare something called as financial statements. End of the day, our agenda is not to prepare books of accounts. Our agenda was to prepare financial statements, but to prepare financial statements, we have to first prepare books of accounts. Books of accounts are not prepared for the shareholders' benefit. Financial statements were required to be prepared for shareholders, but to prepare that financial statements, I had to maintain books of accounts. Books of accounts are maintained for whose benefit? Board of directors, which will help assist them to prepare the financial statements. But financial statements are prepared for whose benefit? Shareholders. These financial statements to be prepared, first I have to prepare what? Books of accounts. That comes under section number 128. Once the books of accounts have been prepared, because the books of accounts are very bulky in nature, very hefty in nature, it is difficult for the shareholders to understand it. Hence, we summarize the books of accounts and we call it as financial statements under section number 129. But because these financial statements must be prepared with proper accounting principles and accounting policies, we cannot prepare as and when we want it. The accounting standards must be followed. Accounting standards given and notified under section number 133. Once the financial statements have been prepared as per the proper rules and regulations, accounting and auditing standards, these financial statements will be given to the board of directors. Board of directors will first verify the document. Once verified, if they are satisfied, they will sign it. They'll first consider, verify. After verification, if they are satisfied, they will sign it. They'll sign the document under section number 134. But before signing, it must be verified. But the point was, the board of directors might not always have enough knowledge to verify on their own. They used to appoint a person called as internal auditor. Internal auditor under section number 138. Now give me the flow here. First, we were required to prepare which document? Financial statements, because of which we were forced to maintain the books of accounts. Books of accounts under section number 128. Then summarize them into financial statements under section 129. But these financial statements must be standardized. Hence, we have to follow all the accounting and auditing standards under section number 133. Then they have to be verified and signed by the board of directors. Signed by board of directors under 134. Before signing, I'll verify it as per conducting internal audit under section number 138. Once the books of accounts is ready, I'll continue it here. Once the books of accounts financial statements have been ready, it is been signed, it is given to the auditor. The auditor, which auditor this time? Statutory auditor. He'll conduct the audit process. He'll perform his duties under section number 143, powers and duties of an auditor. Once audit has been completed, he'll come back and give us two documents. One, audited financial statements and his audit report. Now this audited financial statements, audit report and the board's perspective, that is board's report, has to be forwarded to the shareholders. That is forwarded to shareholders under section number 136. Once it is given to the shareholders will have knowledge about it. They'll do their research and then they'll come and attend the AGM. AGM under section number 96. In this AGM, they'll consider the document. This is ordinary business, consideration of financial statements, board's report, auditor's report. They'll consider, and if they are satisfied, they will adopt. Adopt means accepting the document. Once adopted, we'll go file it with the ROC under section number 137. Once the document has been filed with the ROC, the document has been finalized. It becomes a public document. Who can inspect it? anybody. Public will have knowledge, ROC will have knowledge, shareholders will have knowledge, board of directors will have knowledge. After the document has been filed with ROC, can I go back, reopen my financial statements and recast my financial statements? No, because these financial statements have already been disclosed to everybody. I cannot silently go and recast it. Recasting is allowed or not allowed? Except under section number 130 and 131. These are the only two sections under we can reopen and recast the financial statements. Then we have this topic of accounting standards linked with our new body called as NFRA. NFRA under section number 132, and CSR has been slapped into this chapter 135. It doesn't make sense to be in this chapter, but it has to be a part of some other chapter 135. What are all the sections here? On a flow with concept clarity. Start number first. We were required to prepare for the, because of which we have to first maintain the books of accounts under section number. Then we'll summarize them into financial statements under section number 129. Financial statements shall be prepared in accordance with the accounting standards notified by the central government under section number 133, accounting and auditing standards. Once this document has been prepared, the management will give it to the board of directors. Board of directors will have to verify and sign. Signed under section number 134. Before it is signed, it has to be verified. If it's a big company, will get it verified by conducting a internal audit under section number 138. Once the document is ready from the board of directors perspective, once it is signed, it is given to the auditor, stat auditor. He'll conduct an audit under section number 143. Once audit is completed, he'll bring back a document called as audited financial statements and his audit report. Along with these two, we'll add the board's report and we'll send it to all the shareholders, every member under section number 136, even before the AGM. Then they'll have knowledge about it. They'll come and attend the AGM under section number 96. They'll consider the document, that is ordinary business 102, and they'll adopt it. Once adopted, we'll go file it with the ROC under section number 137. Once it is filed with the ROC, we cannot reopen or recast unless as per the procedures of section number 130 or 131. Then we have 132 talks about NFRA, and 135 talks about CSR, and if you had to add 129A, periodical financial statements. Notified or not notified? Your favorite section, as my prescribed section. Periodical financial statements. We'll come to that. Start with the basic definitions. We have books and papers and books or papers. It is also called as books or papers, or it can also be referred as books and papers. Give me the flow and the same order we have learned in the classroom. First, during incorporation, I'll submit documents. After incorporation, I'll convert my subscribers into members. I'll mention their names in the registers. Second point, registers. Then I'll enter into contracts. I'll enter into agreements. What will be entered? Agreements. These agreements are here called as deeds. Once deeds are entered, I'll create vouchers. I'll create payments and receipts. All these deeds, vouchers will be maintained in a separate document, separate book called as books of accounts. After the end of the year, I'll conduct meetings. I'll maintain minutes or writings. Anything which is in written format is called as writing. All the points. First, order. Forget about the story. Order. Documents, registers, deeds, vouchers, books of accounts, minutes, writings. These can be maintained either in a paper format or in a electronic form. Either paper form or electronic form. Then out of the books and papers, we segregated the financial part of it and we call it as books of accounts. Books of accounts are again whose responsibility? Board of directors. They are prepared for whose benefit? Board of directors, so that it will help them to prepare the financial statements. But financial statements are prepared for whose benefit? Shareholders. Books of accounts includes, it's an inclusive definition, includes four things. Books of accounts includes all the assets and liabilities, all the sales and purchases of goods or services by the company. Not only sales purchases, all other sums which are received and expended by the company. This until here concept is done, but we have a special topic, cost records. Cost records as per section number 148, items of cost. Financial statement, this is important number 2 clause 40. Financial statement states it also includes 5 things. All 5 documents combined together will be called as financial statements. What are the 5 documents we have? Balance sheet, profit and loss account, cash flow statement, changes in equity, and explanatory note. All 5 documents combined together will be called as what? financial statement. If it is a non-profit organization, rather than profit and loss account, I'll use the word income and expenditure. But there is an exception. Exception is not for financial statement. Exception is only for cash flow statement. There are 4 companies which are not required to prepare cash flow statement: OPC, small company, dormant company, and a private startup company, if they have not defaulted under section numbers 137 and 92. Financial year, we were just discussing about it. Financial year, Companies Act covers the starting date or the ending date. Only the ending date. Financial year means a period ending on 31st March of every year. But if the company is incorporated on or after 1st January, the financial year will be ending on 31st March of the following year. But whenever we have consolidation required, the consolidation will be easy only when both the companies are following same financial year or different financial year. That problem does not arise when all the group companies are located in India. They're following a similar financial year. But the problem starts arising if the company is located outside India, then they might be following a different financial year. Can we straight away consolidate it? For consolidation purposes, we can make an application and try to understand. We are not asking which company you are, we are gonna compromise. Indian company is gonna compromise. 2 reasons, Amma. If Indian company is a holding company, who has to consolidate? Holding company or subsidiary company? First, holding company. It will be easy for the holding company for consolidation. I'll go make application to the central government. Or second scenario, I'm not a holding company. Indian company is a subsidiary company. Company outside India is a holding company. Who has to consolidate? Holding company, but I'll make their life easy. Otherwise, they'll not come and invest in India. I want to make their business activities ease of doing business in India. I'll encourage them. Our subsidiary company will adjust. Which company will adjust? That company which is in India will adjust. Let it be subsidiary company, let it be associate company, let it be holding company. I'll adjust. A company, give me the wordings here. A company which is having a subsidiary or holding or associate outside India. Give me the wordings here. Where is the company located? In India or outside India? Where are we located? Where is our subsidiary located? Now draft it in proper Companies Act wordings here. This company in India can be holding company, can be subsidiary company, can be associate company. This is a holding or subsidiary or associate of a company which is incorporated outside India. Because they are having different financial years, it is difficult for them to consolidate. I'll make an application. Give me the proper words. A company which is a company which is a holding company or subsidiary company or associate company of a company incorporated outside India can make an application to the central government requesting for a different financial year for consolidation purpose. If the central government is satisfied, they'll give you a different financial year which might not always be for a full year. It can be less than a year also. But who is giving the approval? Central government. This is only for what purpose? Consolidation. That's a proviso given for this logic. Then one more extra point here, IFSC companies. Where is the origin of IFSC company? In India or outside India? Outside India, but they have established their business in India, in Gujarat. Because they are coming from outside India, they will be having branches outside India, they will be following different financial year. They don't have to take permission, they directly prepare financial statements of whatever sort they want. They don't have to take permission, that's a privilege given to IFSCs. Then section number 128, one of the biggest sections, 128 and 129. 128 talks about books of accounts, etc. to be kept by the company. Start with the basics here. Which company has to keep the books of accounts? Every company, every financial year has to maintain 3 things. Books and papers, books of accounts, financial statements. Same order, Amma. Which company? Every company. Which year? Every financial year has to maintain 3 things. Books and papers, books of accounts, financial statements. Such books and financial statements maintained by the company shall provide a true and fair view. True and fair view of what? State of affairs of the company. While preparing such books, I have to follow 2 accounting principles. It must be on a accrual basis. It must be in a double entry system. Cash. Single entry system. Cash basis under LLP. LLP it can be either cash basis or accrual basis, but it must be in a double entry system. But Companies Act makes it mandatory. It must be in a accrual basis. It must be in a double entry system. Accrual and double entry. Where should I keep the books? All the legal documents of the company is always kept at the registered office. But don't forget the fact, books of accounts are documents belonging to the board of directors, not to the shareholders. Can I maintain it outside my registered office? It's my wish. Where can I maintain it? At the registered office or outside the registered office, but it must be within India. Who will decide where to maintain? Board of directors by passing a board resolution. But point is, these books of accounts can be inspected by the ROC. For the ROC to inspect, he must know where the books are kept. Hence, we have to intimate. Are we taking permission, consent, or intimation? When will we file the intimation? After resolution or before resolution? After resolution. First, we'll pass the decide to keep the books outside the registered office, then inform it to the ROC within 7 days from the date of passing of such board resolution. Informing what to the ROC? The address, full address of such other place where the books have been kept. Original answer, should it be kept at the registered office? Can I keep it outside registered office? Yes. At what place? Such other place, but it must be within. Can I keep it in Goa? Why? Okay, it is in India. Who will decide? Board of directors by passing what resolution? But we have to intimate or take a consent. Intimate within how many days? To the giving the full address of such other place where the books have been kept. Now coming to electronic documents, can we maintain the books in electronic form? If you are maintaining books in electronic form, these are the certain rules you have to satisfy. The books maintained in electronic form must be accessible in India at all point of times. TikTok, accessible in India. PUBG, accessible in India. There are certain Chinese apps which are accessible or not accessible. If they are not accessible, can I come to books of accounts? Can I maintain my books in such software which is not accessible in India? So it is accessible in India, but only between 10 a.m. to 12 p.m. It should be accessible in India at all times. It should be accessible in India at what point of time? All times. This is important, Amma. This can be asked as question. Audit trail is a concept which was made mandatory after 1st April 2023. What's the date? 1st April 2020. It was 2022. They made amendment in it. So it is kind of important. They're not asked a question on it. On or after 1st April 2023, every software which you are using to maintain the books in electronic format shall be having basic 3 features. It must be maintaining an audit trail. That means auditor can come and check what happened with the books of accounts, who modified, when was it modified, etc. will be maintained. Audit trail. Second point, audit trail must not be able to be disabled. It must be integrated into your software. Nobody should be able to turn it on, turn it off. Audit trail cannot be disabled. That means what happens here is, if for example you are very lucky, we will make payment on Wednesday, probably Wednesday or Thursday, for a new app being developed. That app will have entire attendance, biometrics. Did I tell you? You are very lucky. It got delayed by a couple of months. It will not be implemented for you, but September batch it will be implemented. The next January batch will be implemented from the classes itself. Himanshu, for you itself. If the biometric is not punched in within 10 minutes of the allotted time, automatic message will be sent to your parent. And attendance performance will be there in the app itself. The percentage of attendance, percentage of classes you have attended, the marks you are getting. Your marks will be directly notified to your parent through the app itself. They'll send a message directly. Everything will be automated. All have been discussed, all have been finalized. We just have to make payment on 12th or 13th. Once the payment is done, by February end, we'll start the implementation process. Not only this, this is something called as task management, where in this also, in the same app, we have ERP system. What is ERP? Is basically the inquiry. Whatever inquiries the college receives will maintain everything in the app itself. Inquiry will also happen there. Fees will also be maintained in that format itself. Assume your fees has been finalized. Can we modify it? With certain approvals, we can modify in certain situations. Fine. So what happens here? Once a particular fees has been entered, who entered the fees, which login ID entered it, which IP address, from which device have they entered it, at what date, at what time, at what place. Everything will be recorded in the app. Once it is entered, who will modify? Can they modify? Do they have access to modify or not? If they have modified, who modified it? From which login ID, from which mobile or device or which computer they have modified, at what place, time and situation they have modified. They should provide remarks of modification. Everything is mentioned in the app. This is called as Audit trail. We have to maintain it to make sure that organization runs in a smooth with a standardized protocol. Audit trail must be there, may be there in every software we're using, and nobody should be able to disable the audit trail. Then we have edit log, a separate feature where every edit done in the system will be maintained in a separate place. As an auditor, what will I check first? I'll not check the accounting software. I'll directly come and check your edit log. I'll start questioning. I'm a skeptic mindset. I'll start questioning every single edit that is done to give a reason. Edit log is something which is mandatory to be maintained. 3 points, Emma. First point, we have to have a audit trail. Audit trail shall not be disabled. We have to maintain a edit log. These are mandatory from which date? 1st April 2023. Then these books of accounts maintained must be accurately maintained. They must be unaltered. The original books maintained in physical format shall be replicated into the electronic format. There must not be any differentiation in between them. They must be in legible format. Can we understand Chinese language? We hardly understand English. If they maintain in Chinese language or binary language or computer, any symbols language, do we understand it? It must be in a legible form. The software, the system which you are using must be capable of 4 things. It should be able to store the information. It should be able to bring the information back, retrieve the information. It should be able to display. I can check it or I can take a printout. Storage, retrieval, display, printout. Same order. It must be able to store. It must be able to retrieve. It must be able to display. It must be able to print. But your books of accounts maintained in electronic format, what happens if the server in which you are maintaining it crashes? Entire data is gone. If entire data is gone, entire company's history is gone. Who are the shareholders? Whose assets? If the company's entire history is gone, this bench belongs to me. Company doesn't have any proof that this bench or asset belongs to them. They can misuse the power. So hence books of accounts must have a backup. Give me the logic here. This backup again for 2 reasons. One is for the point that the books of accounts the server might crash. Second point is, assume your server is located in Pakistan. That is Pakistan. Where is the server located? In Pakistan. What happens if there is a war with Pakistan in future? The Pakistan government will stop the connections between India and Pakistan. Obviously, India will stop it first. Though if the server is located in such country with which we have a bad relation and the communication stops, the company which is in India will be affected. Hence, we should always have a backup of those books of accounts in such servers which are physically located in India, where the Indian government will have power over them. The servers must be located where? Physically located in India, and the backup should happen on a daily basis. 2 words, 2 concepts. Backup must be there or may be there. Must be there in which server? Such server which is physically located in India, and the backup shall happen on a daily basis. Then we have something called as notice of the service provider. We'll send a notice to the ROC regarding the details of the service provider. There's slight differentiation but different concepts. We'll first provide the name of the service provider. We'll provide the location of the service provider. What do you mean by location of service provider? The physical address where he is doing business from. First point, name. Second, the location of the service provider. Then I'll provide the IP address, the device from which he is doing his business activities, IP address of the service provider. Are you getting the difference? IP address and location. Location is his physical address and geographical map. IP address is electronic address for the device which he is using. 3 points. Name of the service provider, location of service provider, IP address of the service provider. But the books are not maintained in his server. The books are maintained on the cloud. Cloud services. Under the cloud, a particular address where the books are kept have to be disclosed. The address where the books are kept on the cloud, because cloud can be sometimes shared, because cloud is very costly. It will have lakhs of rupees to maintain your data on the cloud. Usually what happens, we'll purchase one cloud, and this one cloud will be distributed between different people. I'll have one particular part of the cloud, not the entire cloud. That will save cost for the entity. Our documents will also be maintained on the cloud with a shared basis, where I'll not have the access to the entire cloud. I'll have access to only one part of the cloud. Give me the location of the books where they're kept on the cloud. Exact location where they are in the cloud specifically has to be mentioned. And if the service provider is located outside India, there will be one point of contact in India. The name and address of such person who is in control of those books in India, disclose it to the ROC. These all documents have to be filed by the company to the ROC. When should I file it? There's no specific date given. They have to be filed it along with the financial statements under section number 137. Whenever you're filing financial statement, file this notice also to the ROC. Any doubts in that? That was a difficult part of 128. Any doubts in that part? Clear? Next category. Books of accounts of a branch. We have discussed this. The books of accounts of the company shall be maintained at the registered office itself. Registered office. But it will be difficult to maintain the books of accounts relating to a branch at the registered office. Transaction happens at one place, books are maintained at another place. It will be difficult to maintain it. Then they have compromised and given stating that if you are having a branch, the books of accounts relating to the branch can be kept at the branch itself. But it must be periodically sent back to the registered office. I'll maintain at the registered office a consolidated document. But if at all this branch is situated outside India, they gave a specific rule stating that those must be sent back to the registered office on a quarterly basis. Give me the points here. Books of the branch shall be kept at the branch itself. If it is maintained at the branch, they have to be sent back to the registered office on a periodical basis. But if this branch is situated outside India, they have to be sent in they have notified it. What periodical? Quarterly basis, they have to send it back. Once the documents are received, I'll maintain it at the registered office. Inspection. I hope you remember the chart for inspection. Inspection is divided into two categories. Inspection of the books of accounts of the company or inspection of the books of accounts of the subsidiary company. What are the two categories we had? Inspection of books of accounts of what? Company and subsidiary company. If it is company, we'll again divide into two parts. Are the books maintained in India? Are the books maintained? Do you recollect in the chart? Should I show it? Divide the chart in how many parts? Two parts. What are the two parts here? Books of accounts of the company or books of accounts of the subsidiary company. Books of accounts of the company are again divided into two parts. Either it is maintained in India or maintained outside India. If it is maintained in India, who can inspect? Which director? Every director at what place? Registered office during the business hours. Any doubts on that? Regular point. If the books of accounts are kept outside India, can I go outside India for inspection? Because I have to still focus on conducting business activities. I am not only here for inspection of books of accounts. I'll not waste time and money to go outside India. I'll rather bring the books to India. I'll not go out of India for inspection, but I'll still bring the books to India for inspection. So every director has a right to request. Request whom? Company to provide such books which are maintained outside India, and the company has to provide such financial statements within a time frame of 15 days. How many? 15 days. Once it is provided, can the director inspect? Can the director appoint an agent to inspect? Attorney to inspect? Representative to inspect? No. This is his individual personal right. They are confidential information of the company. Who can inspect? The director himself. No other person can be inspecting. We cannot appoint an agent. Coming to subsidiary company. Can I say subsidiary company's financial figures will also have impact on my company? If subsidiary company makes a loss, indirectly who is making loss? Holding company. I am also responsibility to inspect. I am having the right to inspect the books of accounts of the subsidiary company, but not every director will go disturb them. Only such director who is authorized by the board of directors. Again, if it is my company, who has a right to inspect? Every director. But if it is subsidiary company, not every director, only such director who is authorized. That's your entire inspection process. Then we had the preservation of books of accounts. Books must be preserved or may be preserved. Preserved for a period of how many years? They have to be preserved for a period of 8 years. 8 years immediately preceding the relevant financial year. Is it possible for me to maintain relevant financial year? I'll talk about preservation only once the books have been finalized. Are the books finalized? We are still in the financial year. Books have not been finalized. I cannot maintain these books. I'll maintain books for the last how many years? 8 years. Not less than 8 years immediately preceding the relevant. Exclude the relevant financial year, maintain for the last 8 years. But if the company is incorporated for less than 8 years, I'll maintain it for less than 8 years. If the company is incorporated for 7 years, I'll maintain 7 years. If the company is involved for 10 years, I'll maintain for 10. 10 or 8. 5 years. 6 years. 7 years. 11 years. 15 years. 7.5 years. 7 years. That half year is relevant financial year. If it is, if the company is involved for 7.5 years, you'll maintain for 7.5 years. Excellent. For 7 years. During investigation, the central government has a right to investigate. While investigating, central government has a right to pass an order to maintain the books for a period longer than 8 years. Original topic is you have to maintain for 8 years. That is Companies Act. Who is superior? Central government or Companies Act? Central government may pass an order directing the company to maintain the books for a period longer than 8 years during investigation. 3 points you would remember. We are conducting an. Who is passing the order to maintain the books for a period more than longer than 8 years? Penalty, I don't care. This is this part. I care about this part. Who is liable? 50,000 to 5 lakhs is fine, but who is liable? That is more important. Who is liable? Managing director. Not all directors are responsible for financial statements. Who is liable? Managing director, whole-time director who is in charge of finance, or CFO, Chief Financial Officer, or any other person who is put in charge by the Board of Directors. These are the 4 set of people who are responsible under section number 128. For contravention, they will be imposed with a penalty of 50,000 to 5 lakhs. Then section number 129. This document is prepared for whose benefit? If you observe section 128, we prepared it, but we never gave it to shareholders. But the section 129, as soon as we prepare it, we'll lay it before the shareholders in the AGM. We'll give it to the shareholders. But let's prepare it first. Starts with section number 129, subsection 1. Remember, the financial statements of the company shall satisfy 3 conditions given under section number. Very careful with subsection here. 129. Subsection 1 provides 3 basic details of a financial statement. Financial statement shall provide a true and fair view of the state of affairs of the company. It must be in accordance with the accounting standards notified under section number 133. Explain me 133. Accounting standards are notified by central government, but they are on the recommendations given by the ICAI. But after 2018, to be more specific, 1st October 2018, we have established NFRA. NFRA also has knowledge about accounting standards. Now, central government has more power or more grip over whom? ICAI or NFRA? NFRA. Now, the central government doesn't have to blindly believe the document given by ICAI. They can get it consulted from the NFRA, given the proper wordings. Accounting standards and addendum thereto. Anything which is equal to thereto. What is the word? Accounting standards and addendum thereto. Addendum is anything which is equal. Addendum thereto are notified by the central government on the recommendations made by the ICAI in consultation with NFRA. The NFRA will give recommendations on the recommendations given by what? Who will give it? NFRA will give recommendations on recommendations what? Who gives recommendations first? But will we accept it directly? We'll forward this document to the NFRA. Will now, is it finalized or still recommendations? NFRA will give their recommendations on the recommendations made by the ICA. They'll give it to the central government. Central government will notify the document. That's your 133 done. Then last point. It must be in such form as may be prescribed under schedule number 3. But these 3 points given under section number 129 subsection 1 shall have an exception. Exception here is not for section 129. Exception is here only for section number 129 subsection 1. You have 3 specialized companies: banking, insurance and electricity. Try to get this very clear. Is the banking company still required to prepare financial statements? Yes, they are applicable with section number 129, but they are not applicable to prepare as per 129 subsection 1. These 3 points are not required, but they are still required to prepare financial statements. What are the 3 companies we have? Banking, insurance and electricity. These companies, try to understand the words here. If the special act does not require them to disclose certain matters. Certain matters are required to be disclosed as per Companies Act, but those specific matters are not required to be disclosed as per the special act. I'll follow which act? Will I disclose? I'll not disclose because it is not required as per my special act. Even though I have not disclosed it, it is still considered to be providing a true and fair view. I'll follow which act? Companies Act or my special act? Once a document has been prepared, late, where AGM, before the shareholders, then they'll consider, then they will adopt. Once adopted, go file it with the ROC. Then we have the second document we prepare, CFS. Until this point of time, we prepared what? SFS. Now prepare the CFS. Point is, SFS is required for every single company. But CFS is required only if you're a company which is having one or more subsidiary company or associate company or joint venture. Why did I mention joint ventures separately? For clarification. If you remember, associate company definition includes joint venture. You don't have to mention it separately. They gave it only for clarity. 3 points. Start. Which company is required to prepare CFS? Every company which is having one or more subsidiary company or associate company or joint venture company in addition to the preparation of SFS shall also prepare CFS in the same manner as they have prepared their SFS. This consolidated financial statement shall be including the details of the, don't forget, company and all its subsidiaries, associates and joint ventures. Once the document has been prepared, laid before the AGM, before all the shareholders, they'll consider, they'll adopt, go file it with the ROC. But to understand the consolidated financial statements, we have done this equation. CFS is nothing but a combination of two SFS. See, I was assuming A Limited and B Limited are there. SFS of A Limited plus SFS of the B Limited gives you the CFS. So to understand CFS, you should also have knowledge about the SFS of the group companies. But will you read the entire document? Sir, we'll not even read our financial statements. Will we read the entire document? They'll give you a statement containing silent features of all the subsidiaries, associates and joint ventures. So indirectly speaking, how many documents will you get, Amma? 3. 1. SFS of your company. Then CFS of the company and all its subsidiaries, associates and joint ventures. Because to understand CFS, you should have SFS knowledge. I'll not give you the entire SFS. I'll give you a statement. A statement which contains silent features of all the subsidiaries, associates and joint ventures, which will help you to understand what? CFS. There's a document prepared, but there is an exception. This is fine, right, Amma? Mutatis, basically whatever is applicable to the SFS will also apply to the CFS. If you are someone who is applicable with accounting standard, I don't remember accounting standard number 21, consolidation 21, AS 21 or otherwise Ind AS 110. Either of them. If you are applicable with accounting standard, will follow Schedule 3 format and accounting standard. If you are not applicable with accounting standard, you will simply follow the Companies Act, that is Schedule 3. Don't get confused, Amma. Schedule 3 is nothing but Companies Act. Accounting standards are a separate document now. So if you are a company which is applicable with accounting standard, you will apply what? Both Companies Act, Schedule 3 and the accounting standard. If you are not applicable with accounting standard, you will just follow the Companies Act procedure, that is Schedule 3 procedures. Exception, an important topic. They have not much tested it, but they can draft a question easily. It is a concept which deserves a question to be drafted. They can complicate it, but it is not drafted yet, but it can come. Exception to what? No suspenses, nothing. We'll directly jump into the concept. We have 3 companies here: ultimate holding company, intermediate holding company, and your faces. I cannot see those faces like that. Remember the chart we have drawn? Which document is it in? Have you drawn it in your notes? This one? Chalo. Start. What are the 3 companies we have? Ultimate holding company. Ultimate holding company, intermediate holding company and subsidiary company. Exception is given only for which company? Intermediate holding company. For preparation of which document? CFS. Why is it not required to prepare? We have to satisfy. How many exceptions are there? One exception with how many conditions to be satisfied? Three conditions to be satisfied. What are three conditions to be satisfied? The ultimate holding company has already prepared the CFS and filed it with the ROC. What the first condition? Which company? The ultimate holding company already prepared and filed CFS with the ROC. If it is already filed with the ROC, can I say ultimate holding company doesn't require you to prepare document? Because they already have information about B and C. They don't want this intermediate company to prepare it anymore. But who still wants it to be prepared? Which members? Other members. These other members are minority or majority. But if these other members give their consent for non-preparation, is it required or not required? But we'll have a different drafting. Whose idea was it? Company's idea. Company will intimate it to the members. The other members, including those members who are not entitled to vote, have been intimated in writing, having a proof of delivery. I'm not going to explain. Understood? Understood, right? We've spent more than 1 hour on this topic. I can't spend that time here. I'll just give the wordings. What was the logic? The other members, including those members who are not entitled to vote, have been intimated in writing, having a proof of delivery, have given no objection for the non-preparation of CFS. Basically speaking, other members don't care if you prepare CFS or not. If other members have given consent for non-preparation of CFS, I am being exempted. But SEBI does not allow me if I am a listed company. It must not be a listed company or not in the process of getting its securities listed. Give me all three conditions to be satisfied. First point, the ultimate holding company has prepared and filed CFS with the ROC. Second point, which members? Other members, which are minority. Other members, including those members who are not entitled to vote, preference shareholders, are intimated in writing, having a proof of delivery. I've had a proper intimation done to them, and they've given objection or no objection. No objection for the company non-preparing its financial statements. Which financial statements? CFS, consolidated financial statements. And this intermediate holding company is not listed or not in the process of listing. If all three conditions are satisfied, we'll give an exception to the which company? Intermediate holding company for preparation of which document? CFS. Then accounting standards are drafted specifically for a particular company or generalized for every company. Is it practically possible that is it tailor-made for you or generally drafted? Will it exactly fit you, the company? No. Hence, there are situations where following accounting standard will give you wrong information. Hence, Companies Act states that accounting standards can be deviated. If you are deviating from accounting standards, it is allowed if you believe that deviation is necessary to provide true and fair view, but you have to disclose. Give me one word answer. Can we deviate from accounting standards? Yes, but we have to make a disclosure in the notes to accounts. We have to disclose three things: the deviation which happened, deviation from accounting standard, the reason behind the deviation, and the financial impact, financial effect of such deviation. What are three categories? I will disclose the exact deviation which happened, the reasons for such deviation, and the financial effect of such deviation shall be disclosed. Exception is kind of important about one point, especially the segment reporting. Now you'll understand it better. Because accounts is also done on segment, you have segment reporting, right? It will better be understood now. Central government may exempt certain class of companies from the preparation of financial statements or certain provisions of section number 129. That's a general exception given. Specific exception given to a company, a government company, which is engaged in the production of defense activities, defense production. Now understand it. Will we disclose our defense power to the entire world? We'll explain how much money was spent in which category. We'll explain them how many planes are there, how many soldiers are there, which place, which camp, where are they located. We'll explain everything to them. Especially to Pakistan, we'll send a special post for Pakistan. Will we disclose all that? If the government company has complied with section 137(92), if they have not defaulted any filing process, they are required to prepare financial statements, but they're not required to give a segment-wise reporting. They'll give the entire budget of the defense activities. They'll give the entire budget, say $10 billion is my budget. But where this $10 billion was spent, was it spent for marine category? Was it meant for Air Force? Was it meant for artillery defense equipment? I'll not segment report it. Segment reporting will create information to the enemies which might be misused against India itself. A company which is engaged in what production? Defense production. Government companies, again, outsiders are not allowed again. Government companies which are engaged in defense production are exempted, are not applicable with section 129 to the extent of segment reporting. That means are they required to prepare FS? But they're not required to report on segment wise basis. Segment reporting is not applicable. Penalty, same old four set of people as we learned in 128. Quick answers. I hope you can answer it. First, managing director, whole time director who is in charge of finance, CFO, or any other person who is put in charge by the board of directors. They'll be held liable with imprisonment up to 1 year, fine 50,000 to 5 lakhs, or both. What was the extra point we have discussed here? Imprisonment up to 1 year. Rest it copy pasted from section 128. But extra point is, if these set of 4 people are existing, they'll be penalized. If none of the 4 people are existing, no specialized person is responsible for books of accounts or financial statements, then it is the responsibility of all the board of directors. If I have a specialized person, CFO, he'll take care of it. If none of them are appointed in their absence, all the directors will be held liable for such category. Section number 129. 129A. At least be active for this section number. I'll ask question, your answer should be as may be prescribed. Shall we start? What is it? Periodical financial statements. Basically, this is ego of companies, Companies Act. Listed companies have been already introduced with a concept called as quarterly financial statements. Who introduced it? SEBI. But they applied it only for listed companies. Now the central government comes and states that I am no less, I'll create laws for unlisted companies. Such unlisted companies, at least answer this part, Amma. That's the only answer you will give. Such unlisted companies, such class of unlisted companies as may be prescribed have to prepare periodical financial statements for such period in such manner. Once it is prepared, it must be verified by whom? Board of directors. Once verified, will conduct an audit. But is it possible to conduct full audit? We have inherent limitations. We have inherent limitations for the final audit itself, how to conduct audit within 30 days. Not possible, hence they have given a second option, either complete a complete audit or do a limited review. I will not even call it as audit, I will focus only on one part of the financial statements called as what? Limited review. Try to understand it. Can I conduct full audit for a dormant company? Dormant companies, quarterly financial statements, if they are notified, can I conduct full audit within 10 days? I'll go sign it, that's it. What will I verify there? Is it possible to complete a complete audit there? Yes, I have given the option full audit or otherwise conduct a limited review. Once a review is done, go submit it to the ROC. Government of India might be unclear about all other activities, but they are very clear on filing documents. Filing it to whom? Within. That is very clear for them. 30 days from where? From the end of such period as may be prescribed. Whatever period they have prescribed, from the end of such period, file it within 30 days. Section number 129, capital A, new section introduced. Is it notified? If I'm not wrong, this is introduced in 2020, 2021. Was it notified? Is it been notified fully as of now? No, it is still a section which is not fully notified. So is it required for exam perspective? Yes, they've asked it twice already. First of all, does ICA have brain? No. You're writing ICA exams and you're blaming ICA. No, ICA doesn't make sense to ask this question. There are a lot other sections which can be asked. 130, 131, they have barely been touched. They can be asked. They're good questions. Then 129 is barely been touched. A good section it can be asked. But they decided to ask what? 129 name. And you get 5 marks for this. 5 marks for what? Writing? Section 130, 131 we will do from the charts. Section number 130 and section number 131, both of them will do it from the chart itself. Start with section number 130. What is 130? Give me differences before we start on section 130 and 131. Both of them talk about reopening of financial statements, but under section 130 it is mandatory for the company to reopen. Under section 131 it is voluntary for them to reopen. Whose decision to reopen financial statements under section 131? Board of directors, they follow. 130 it will be a decision taken by an outsider. An outsider will make an application to the do you remember anything about it? Fast, 130 and 131. Voluntary reopening under section number 131, mandatory under section number 130, if an outsider makes an application for reopening, it applies section number. 130, if an insider, the board of directors themselves make application, it is 131. It is voluntary in nature. If there is a fraudulent activity conducted, outsider will make application under 130. If it is non-compliance, it is not fraud, no wrongful intentions were there, but it was non-compliance of sections, will apply section number 131. Quick answers, mandatory. 130, voluntary. 131, board of directors making application. 131, outsider making application. NCLT passing order. 130 and 131, both the cases NCLT will pass order. Financial statements, 130 and 131, extra power given under 131, they can also reopen the board's report. Board's report can be reopened only under section number 131. Financial statements can be reopened under section number 130 and 131. The basics should be fine. Start the process. What happens here? Outsider making application, we call them as applicants. Who are making applicants? Who are applicants? There are 5 category of people that have defined. Either the central government, same order I wanted. Central government or income tax authorities or SEBI or any other statutory regulatory body or any other person concerned. What are the 5 categories we have? Central government, income tax authorities, SEBI, any other statutory regulatory body or any other person concerned will make an application to the NCLT. NCLT will not directly pass an order, they'll forward this application to the rest of the applicants. And the other applicants will send their representations back to the NCLT. Then NCLT will pass an order. Before passing order, NCLT will pass order under section 130 if it is satisfied that the accounts of the company were prepared in a fraudulent manner or the financial statement, the affairs of the company were mismanaged, casting a doubt on the reliability of financial statements. Given the wordings here, NCLT will pass order in 2 situations. If they are of the opinion after conducting investigation, etc., if they are of the opinion that the financial statements, accounts of the company were prepared in a fraudulent manner. What's the keyword you have to remember here? They were prepared in a fraudulent manner. Second point, we don't know whether fraud is conducted or not, but the finances have been mismanaged. If they're mismanaged, I don't believe the financial statements anymore. I want to reopen and check it again. Affairs of the company have been mismanaged, casting a doubt on the reliability of financial statements. NCLT will pass an order. Once the order is passed, now can I reopen? Can I recast? Once it is reopened and recasted, the reopened financial statements under section 130 shall be considered final. We cannot reopen it again because, understand it, we have given importance to all the other applicants as well. If they had a problem, they should have given representation then and there. If they have not given representation and it has already been revised, can it be revised again? No. It will be considered final. But to revise, the books must exist first. Will I maintain books for the last 100 years? As per section 128, I will maintain books only for the last 8 years immediately preceding the relevant financial year. So NCLT can also pass order for the last 8 years. But if at all during, we have just done this, during investigation, who passes an order? Central government, giving directions to the company to maintain the books for a period longer than 8 years. If the central government passed an order to maintain for 15 years, NCLT can also pass order for 15 years. If the central government passed an order for 10 years, NCLT can also pass order for 10 years. Second category, section number 132. 131. What is section 131? Voluntary or mandatory? Given the heading also, what is section 130? Reopening of accounts, only financial statements. Reopening of accounts, but on whose order? Tribunal's order, NCLT's order. Then section number 131 talks about voluntary. Voluntary revision of what? Financial statements and board's report. Both can be revised under section number 131. A little more formality this time. I hope the chart is clear. Fine, start. Whose idea? They'll conduct a. They found that there was something non-compliance. Non-compliance of financial statements under section number 129 or non-compliance of board's report under section number 134. If they found any non-compliances, they'll pass a board resolution and make an application to the NCLT. Application to NCLT shall be made within 14 days from the date of passing of the board resolution. Again, this all concept has been newly added and they have not tested it after adding the syllabus. What used to be there is only this part of application was to be a part of your ICS syllabus. They have recently added this extra logics. After adding it, they have not tested it. Means there's a high chance they'll test it in the near future. Be very, very careful with section 131 especially. Both of them are important, 130, 131. Both of them have not been tested much, but 131 a little more importance to it. What's happening here? Whose intention? Was it fraud or non-compliance? Non-compliance of what? Financial statements with section number 129, or board's report is not in compliance with section number 134. They'll pass a board resolution, make an application to the NCLT within 14 days from the date of passing of board resolution. Once application is made, NCLT will not pass an order directly, they'll forward. But this time they'll not forward to all the applicants, they'll forward only to the first two category. They'll forward it to the central government and income tax authorities. And they, if they have any representation, they'll send it back to the NCLT. Any doubt as of now? Then NCLT will pass an order. Little more practical answers. NCLT will not directly pass an order. They'll ask you to come to the NCLT, to the court. They'll discuss matters. They should give you a reasonable opportunity of being heard. Which party must be given an opportunity of being heard? One or both the parties? All the parties to the suit. Here we'll have only one party, the company. They must be given an opportunity of being heard. Once they have given a chance to speak, then we'll make an order. Is the NCLT free enough to pass order tomorrow morning? Forget about passing order, they'll not even hear you tomorrow morning. It'll take a number of months to hear you. So what's going to happen? As soon as you have made a suit, practically try to imagine this. Once you have filed a suit today, assuming, NCLT will check the dates on which they are free enough to start hearing you. It will be called as date of hearing. The NCLT will announce a date of hearing, stating that 2 months later, I have a slot ready on this particular date at this particular time. Come to the NCLT, I'll hear your problem. Once I've heard about it, I'll not blindly pass an order. I'll do my investigations, I'll do my inquiries, then later I'll pass an order. So what's going to happen? As soon as the application is made to NCLT, NCLT will not pass an order. NCLT will first give you a date of hearing. Once a date of hearing is given, the Companies Act states that go make an advertisement of this application. Advertisement to public at large. If public have any problem, they'll send it to the NCLT. Proper words. Advertisement shall be made by the company at least 14 days before the date of hearing. Now, link everything, put points together. Date of hearing is given by, which will be in the future. As soon as the date of hearing is given to you, 14 days before the date of hearing, you have to make an. But that means before even hearing starts, central government knows about it. Income tax authority know. Company knows about it. Shareholders, creditors, public at large, everybody knows about it. They'll send there. By the time hearing comes in, NCLT is not just hearing you, but also is hearing from all other parties. Once they've heard about from every party, then they'll pass an order. What's the process? We have to make an advertisement. We have to make an advertisement at least 14 days before the date of hearing. Once the hearing is done, they'll pass an order. They'll hear from one specific person, especially the auditor. Before we come to this, make the application first. While we are making application to the NCLT, there are certain points to be applied with. We have first prove that we have passed a board resolution. Copy of the board resolution, the financial year for which the documents are to be revised for, financial statements or the board's report for which we are seeking the revision, the reasons for, the grounds for seeking the revision. 3 points are comfortable first. First point, copy of the board resolution. The reasons, the grounds why we are seeking for revision, and the financial year for which we are seeking the revision. Which financial year we are talking about? Again, here it can be passed only for how many years, Amma? 3 years. Preceding 3 financial years, not for all years. Now problem comes in. If the management could have maintained the books of accounts correctly, will there be non-compliance? Whose mistake? Gopi sir's mistake? Gopi sir should have maintained the accounts correctly. If he had maintained the accounts correctly, we would have not been discussing this section at all. Whose mistake? Come to the NCLT, I'll talk to you. NCLT wants the names and contact details of the management. Entire management, board of directors, CFO, managing director, give me their details, I'll call them and I'll talk with them. Forget about Gopi sir, he'll do okay, he'll do mistakes. Okay, he has done mistake, I agree. If board of directors, the management has done mistake, what was Damu sir doing? He should have verified it at least correctly. That means there's a chance that he is also involved in the fraud. Gopi sir is fraud. You told it. But if there was a misstatement, if there is a non-compliance in the financial statements, who should have verified it correctly? Namu sir. If he did not verify it, what was he doing? Was he sleeping? I'm not asking whether you are sleeping. You will sleep. Whether auditor was sleeping, give me his details, I'll talk with him. Name and contact details. Name and contact details of the management, name and contact details of the auditor. Give me those details, I'll talk with them, I'll understand what's happening in the company. Then, before the passing of the order, I'll specially talk with the auditor of the circumstances in which he has missed out that. Again, we cannot blame the auditor completely. Auditor is not giving an absolute assurance, he is giving a reasonable assurance. The auditor will be asked, auditor will be heard, then the NCLT will pass an order. As soon as order is passed, we'll go to the ROC. ROC. Who passed an order? We have not revised it, just informing that order has been passed. Order has been passed, we'll go give it to the ROC as usual within 30 days. The copy of the NCLT's order will be passed. Once it is done, we'll now be allowed to reopen the financial statements. Do me the procedure part from here. Once the order has been passed, we are now allowed to reopen and recast our financial statements or board's report, for which we are doing it on a voluntary basis. We have to get our approval from shareholders. So we have to conduct a general meeting. The notice of general meeting has to be sent. Because the notice of general meeting, again, notice of general meeting is sent to one member, every member. And also make an advertisement of it. Why advertisement? Sir, we have already made advertisement once. The previous advertisement we have made was only to intimate public that we made an application to NCLT. Now the application has been accepted by NCLT and we are actually revising it, intimated again. That notice has to be advertised. And this notice shall contain the reasons for such revision very, very clearly. Why we are revising the financial statements must be clearly mentioned in that advertisement. Now public all know about it, then we'll conduct the general meeting. In this general meeting we conducted, they will first, you know these wordings, first they will adopt or consider. Consider, they'll check the documents. Once considered, they will adopt. Once the document has been adopted, which document? Financial statements or revised financial statement? Or if it is board report, it will be revised board's report have been adopted. Once adopted, go file it with the ROC as usual within how many days? 30 days. 30 days from the conclusion of age. This is not conclusion of AGM. This is not AGM at all. Usual process was I'll file it within 30 days from the date of conclusion of the AGM. This time I'll file it within 30 days from the date of conclusion of such meeting. Or I can use the word from the date on which it has been adopted. I'll file it with whom? ROC. This is again, both the note points are important. Can I revise it multiple times? Yes or no? Because it was not sent to every applicant. Can they come back and revise it again? Yes. They can revise it. They can revise it multiple times. But can they revise it twice in the same year for the particular year? No. Can I revise it if I am in the financial year? Same example we'll take. If I am in the financial year 25-26. We are in which financial year right now? 25-26. Can I revise for 24-25? In the same financial year 25-26, can I apply for revision of financial statements in 24-25 again? No. Next year, can I apply? Yes. Can I apply for board report? Board report is separate concept. Financial statement is separate concept. I can apply for financial statements or board report for the same particular year also. That's one note point. And once I'm revising, the scope of revision shall be confined, will be restricted to only rectification or correction of the non-compliances. While such rectification, if I found a fraud, can I rectify that also? So any which ways you opened it, let's rectify the fraud also. Is it allowed? 131 allows you to rectify only the non-compliances. Say assuming the inventory calculation have gone wrong, the closing stock was wrongly calculated. So this non-compliances, we reopen financial statements, we change the closing stock from rupees 10 lakhs to 12 lakhs. If the closing stock got changed, next year's opening stock will also change. I'll make rectification correction in the non-compliances and the consequent amendments can be made. Because of this change, whatever consequent changes will happen, I'll also make those changes. But can I go beyond non-compliances? No. I'll be confined only for rectification of non-compliance and consequent alterations if possible. That's your section number 131. 130 and 131, both of them. Any doubts in them? Be a little cautious with both the sections, both of them are important. 130 and 131. Chalo, let's start section 132. What is 132? NFRA. Again, this is also something they'll ask. They've asked it once, only once in the new syllabus. And what was the question they've asked in the new syllabus? Write a brief about NFRA. That was the question for 5 marks. You write whatever you know about NFRA, they'll give you 5 marks. They've not asked a specific question, they've given a generalized question, write a brief of NFRA, they've given it for 5 marks. But again, this is very, very important now, NFRA. Start. Very quick answers, Amma. I'm not going to spend much time on the background of it. Quick on it. It was established, notified in the year 2018. 1st of October 2018, it was established by the central government. It is having head office in New Delhi. It is working underneath the central government. People under NFRA are appointed by the central government. NFRA concept is not applicable to every company. It is applicable only to prescribed class of companies. What is prescribed class of companies is not given on our syllabus. Just remember, it is not applicable to every company. It is applicable to only certain companies. But similar to CSR concept, once it is applicable, it is continued to apply for how many years? 3 years. After 3 years also, if it ceases to apply, then I'll stop the procedures of NFRA. But there's a special point here. A lot of people get confused with this logic. If it is... Okay, fine. That is it. I have removed that from the material, but still I'll explain it here. If you are someone who is not applicable with NFRA, you still have to inform the details, particulars of the auditor to the NFRA within 30 days from the commencement of the rules. That happened in 2018. Outdated completely, but just remember, even though you're not applicable, you still have to give the particulars of your auditor to the NFRA. NFRA basically wants to maintain the entire details of auditors in entire India. Whether you are applicable or not applicable, I want to maintain the details of the auditor. I'll want the details, file it. Okay. Basics are done. Functions, will come to it. Start with the constitution. Who will sit in this NFRA? We'll divide them into 2 parts. This is very similar to IEPF. You must remember this. NFRA is divided into 2 categories. We'll have the chairperson and we'll have the other members. What do you mean by other members? Chairperson is also a member. How many chairperson will be there? 1. Other members shall not exceed 15 in number. What's the wordings here? Chairperson, 1 guy. Other members shall not exceed 15. Chairperson, 1 person shall be an expert in the fields of 4 points. We have learned this. LAFA. I'm not scolding you. Law, audit, finance, accountancy. What are the 4 categories? Law, audit, finance and accountancy. He must be having expertise in these categories. Other members shall not exceed how many? 15. But they consist of 2 categories of members, part-time members and full-time members. And they have defined who are the part-time members of NFRA. Part-time members include 1 person representing MCA for Companies Act. 1 person representing RBI for finance category, 1 person representing CAG for audit purposes, 1 person representing SEBI for securities law. What are the 4 categories? 1 person representing, 1 member representing any order is fine. MCA, 1 member representing RBI, 1 member representing CAG, 1 member representing SEBI. People from authorities have been done. Now let's drag the ICA into NFRA. President of ICA will become a part-time member of NFRA, chairperson of Accounting Standard Board of ICA, chairperson of Auditing and Assurance Standard Board of ICA will sit in the NFRA. Basically, what's happening here? Let's discuss the accounting standard part. Accounting standards are notified by Accounting standards are notified by central government, but on the recommendations made by, in consultation with. Practically, what happens? Central government will step aside. You guys both fight with each other, bring me a document end of the day. I'm not going to be a postman sending documents from one authority to another authority. You fight with it within yourself. What's going to happen? Who will draft it still today? ICA, and they will send their documents to the NFRA. NFRA will receive a draft from the ICA. While reading this draft, if they have any doubts, they can seek additional information from ICA. After getting additional information, they'll provide their recommendations to the central government. Are we getting the points clear? The NFRA will get information, will receive information from ICA. They'll ask for additional information if required, and they'll make their recommendations to the central government. Can I say they're already in contact with each other? Now start the answer. the intentions of ICA will be known only by the persons who are sitting in ICA. Let them come to my meeting so that the discussion will become easy. Rather than communicating to them back, why don't we call them to sit in the meetings of NFRA? The intention of ICA will also be projected in the NFRA, but they'll not dominate it. Who will still dominate? People of NFRA will dominate, but people of ICA will also form part of NFRA so that their intentions or their ideology is also being projected in the NFRA meetings. I want 3 people from an ICA. Directly bring the president first. President of ICA, chairperson of Accounting Standard Board of ICA. We have separate boards. I've explained this in the classroom. We have multiple boards for the council. Chairperson of Accounting Standard Board and chairperson of Auditing and Assurance Standard Board of ICA will come and sit in the NFRA as a part-time members. And last, 2 experts in the fields of again law, audit, accounts, finance, 4 parties. Then we have minute points regarding this constitution of NFRA. NFRA is again a single body which has to tackle entire India, entire process of entire fields, entire industries, entire different category of businesses have to be covered. Because of which NFRA has been divided into subdivided for their working purposes into divisions. Each division, each department we have has to be led, has to be headed by either the chairperson himself or a full-time member. Part-time member or full-time member will lead it. Full-time member. If the chairperson is existing in this division, who will lead it? Chairperson. If the chairperson is not existing, let at least the full-time member lead that particular division. Then these persons who are sitting in the NFRA, chairperson members, they must be independent. They'll be working for whose benefit? Not central government's personal benefit, it is for the benefit of society. Public's benefit, shareholders' benefit, stakeholders' benefit, then the society's benefit. They'll act for the auditor's benefit as well. They'll mention auditor's benefit, they'll not act for auditor's benefit. NFRA is working for the shareholders or the investors' benefit. They have to maintain independence. To maintain independence, we are asking them to give a declaration. NFRA gives a declaration to the central government. The constitution of NFRA, chairperson and other members will give a declaration to the central government stating that they are not lacking independence, they are maintaining independence and there is no conflict of interest. Our interest is in line with the interest of the NFRA. If NFRA wants public to get benefit, my intention is also for the public to get benefit. My interest is in line with the interest of NFRA. There is no, given the wordings, there is no conflict of interest and we are not lacking independence. There is no lack of independence. But this lack of independence or conflict of interest will arise if you are associated with an audit firm. If you yourself are associated with an audit firm, there is a chance that you will give advantage to your audit firm. You shall not be associated. Shall not be associated with any audit firm during your appointment. Say you are appointed for 5 years. During 5 years, can you be associated? No. After your appointment, can I say you are still carrying the inside confidential information of NFRA? You are not allowed to be associated with the audit firm, not only during appointment, even after appointment for a period of 2 years. 1 second, Amma. Where were we? Shall not be associated, shall not be associated with any audit firm either during the appointment or even after appointment for a period of how many years? 2 years. Both of them can be asked as a question. During his appointment or 2 years after his ceasing to hold such appointment, he shall not be associated. Coming to investigation part, can the NFRA conduct investigations? Yes, either on a suo motu basis on their own or on a reference made by the central government, they'll conduct investigation on an auditor to prove that they have done some kind of a misconduct. It can be either professional misconduct or other misconduct. Once it is proven that you have done a misconduct, will you be punished? Who has the right to punish you also? NFRA. The NFRA, either on a suo motu basis or on a reference made by central government, has a power to conduct an investigation to decide whether it is any kind of professional or other misconduct. If it is proven, they also have a right to punish. But a special note point for NFRA. Once NFRA has initiated a investigation, no other investigating body shall continue, they shall vacate. Even ICA has to vacate if NFRA starts the investigation. If NFRA starts it, all the pending investigation shall close. Whatever documents you have collected, give it to NFRA. Even ICA has to bow down before NFRA for investigation. Or if NFRA started investigation, no other investigating body shall initiate investigation until I am done. Basically, I'm given a complete freedom while I'm doing an investigation. No, I don't care about no other body, even ICA. Who has more power in investigation logic? NFRA. Once investigation, during investigation, I'll have all the powers of a civil code. Can I search? Can I seize documents? Can I ask them to come to my office? Can I discover documents? I can search documents. I can ask them to submit documents. I can go speak with their employees, etc. All the powers a civil court, a high court, district court has, those powers are existing in the hands of NFRA. Then NFRA will pass an order for punishment. Important punishment. They will divide them into two parts. You will be punished with penalty and you will be debarred. Debarred from acting as a stat auditor, internal auditor, and conducting valuations, actuarial services for a minimum period of 6 months to a maximum period of 10 years. You are not allowed to act as stat auditor, internal auditor, as well as conducting valuation for a minimum period of 6 to a maximum of 10. You are debarred and you will impose with a penalty. Penalty is divided into two parts for individual and firm. Who is be having more penalty? Who will be punished more? Firm. More number of partners or more number of CAs are involved there. If it is an individual, he'll be punished with an amount of 1 lakh rupees, minimum 1 lakh to maximum of 5 times his remuneration. If it is a partnership firm, they'll be punished with an amount of 5 lakhs to a maximum of 10 times the remuneration. So if you have earned a remuneration, if it's a partnership firm, you have earned a remuneration of 10 lakhs. What's the minimum penalty? 5. What's the maximum penalty for this particular case? 1 crore. It will depend upon the amount of remuneration you have received. And again, don't forget, this is not the only part. You will also be debarred. But if you are not liking the order passed by NCLT, passed by NFRA, you can make an appeal. Where can you make an appeal? You will make appeal to the NCLT and NFRA are treated equal with each other. That means if NFRA passed an order, you cannot make appeal to the similar body. You will make appeal to a higher body. You will make appeal to the NCLAT. Because NFRA is treated equal with the NCLT, their equal order passed with NCLT, you cannot make appeal to the similar body or lower body. You have to make appeal to a higher authority. You will make appeal to which authority? NCLAT, National Company Law Appellate Tribunal. Last point, books of accounts exactly copy pasted from IEPF topic we learned yesterday. Should they maintain books of accounts? Will there be financial statements or annual returns, annual reports? Annual reports, such annual reports as may be prescribed by the central government in consultation with CAG. These accounts must be audited. Once audited, they will give the audit report to the central government. We have two documents. One annual report coming from NFRA, then audit report coming from CAG. Both the documents will be verified and laid in the both the houses of parliament. Exactly copy pasted from where? IPF. This is not only for IPF, any government authority will have the same procedure. All the government authorities will have the same procedure of maintaining, conducting audit, giving documents, laying it in the financial state, laying it in the houses of parliament. Now with this knowledge, we'll understand the functions better. What is my responsibility as an NFRA? I am here to protect the interest of public investors, creditors and others who are associated with the company. I'm basically going to protect the public at large. While doing so, my first and foremost function would be to provide quality of accounting and auditing standards. Why did I mention and stress the word quality? I believe that ICA have failed to do so in the last 70 years. Till 2018, who was the body giving accounting and auditing standards? ICA, and we believe that ICA has failed to provide quality standards. Hence, NFRA clearly stresses it out, states that you have failed it. Have they mentioned it on the face? No. But they have indirectly mentioned that you have failed it. I'll provide what? Quality accounting and auditing standards. So my responsibility is to recommend accounting standards, auditing standards to the central government. How would I recommend? I'll first receive recommendations from ICA. I'll seek additional information if required from ICA. Then I'll give my recommendations to the central government. Can I see we have drafted accounting standards? And we have learned this we have had the small history of Pakistan-India surgical strike. Remember, what is more important? Legislation creating law or executing the law? Executing law is more important. ICA might have created accounting standards, auditing standards, but they have never enforced the accounting standards correctly. So until this point of time, what happened? My first function as NFRA is to create quality standards. Once the quality standards have been prepared, I'll monitor whether you're doing it correctly or not. If I found any non-compliances, I'll come and enforce it. I'll force you to follow accounting and auditing standards. I'll not only prepare, I'll also monitor and enforce the compliances of accounting and auditing standards. Which is more important, just preparing or monitoring and enforcing it? With the help of this extra function, can I say more people will actually follow accounting and auditing standards correctly? Monitoring and enforcing. How will I enforce it? Start the process. This is regarding company. Company has to maintain financial statements correctly. While preparing their financial statements, they have to follow all the accounting standards. If the financial statements are not correctly prepared, I'll take an action. So I'll come and randomly review your financial statements. Once I'm reviewing financial statements, if I'm not satisfied, I'll ask for further information. If further information is also not satisfactory in nature, I'll ask you to come to my office. Require personal presence. Are you understanding the story? Just imagine this as a movie. What happened? NFRA will randomly come and verify, review your financial statements. While reviewing, if they're not fully satisfied, they'll ask you additional information. If they're not satisfied with additional information also, I'll not sit in your office to do it. There's a lot more investigation to be done in a deep manner. Come to my office. Require your personal presence. Then I'll give you directions on how to maintain your books of accounts. If during this entire process, if I have found any deviations, I'll impose penalty upon you, but not only penalty, I want you to be humiliated. I'll post it on the website of NFRA. Whatever findings I have found, I'll post it on the NFRA's website. Everybody in the public will know that you have done something wrong. There will be huge buzz in the market that you have not maintained your quality standards. I'll publish all your findings in the websites of the company, and if I believe that publishing such findings will have a detrimental impact to the society, I'll not do it. If the board of director has done a fraud, just imagine this. One of the director has done a fraud, I'll publish it. His reputation will be lost. Or second case, if the company has done such kind of activities which are illegal in nature, because of which thousands of people have been killed in the past, I'll post it on the, it'll create distrust on the society. I'll not post it. I'll publish all my findings except when I believe that it is for the benefits of the public. I'll not post it. If it is usual process, I'll post it out. Again, can I say they'll conduct investigation also in the process? This is all regarding whom? Company. Now let's talk about auditor. Irony here is, who can conduct financial audit? Only a chartered accountant in practice. We are the only persons who can conduct audit. No other person in India is allowed to conduct audit except CA. And we have been trained for 4.5 5 years to do so. Now NFRA will come and teach us how to conduct audit. NFRA will come and pass an order on how to conduct audit on the auditor. We have been trained for the same thing, but they are still giving directions to the auditor. Who will give directions? NFRA will direct the auditor on how to maintain quality and how to conduct an audit. Then they'll not simply give you directions and go. They'll give you directions. Whether you have followed your directions or not, give me a report. Send a report. They'll come and send a report on the directions given by NFRA, whether you have followed it or not. Then after receiving the report, the NFRA will monitor whether you're improved from your quality standards or not. If you have not improved, I'll start investigation upon you. Investigation might lead into punishment and debarment also. So can I say still we have to accept the provisions of NFRA now. We are coming under ICAI, but also NFRA. NFRA can pass all such orders, and this is a regular process. Promote the awareness of accounting, auditing standards, conduct multiple seminars whenever a new standard amendment happens, or cooperate with all the national and international organizations for maintaining proper quality standards. IFRS, GAAP, Generally Accepted Accounting Principles, or IFRS, International Financial Reporting Standards, all these are global standards. I'll regularly be in contact with them. Whatever amendments they make, and I'll also make amendments in my accounting and auditing standards in India. Regular contact and cooperation with such and your favorite. So such other functions as may be prescribed. Any part of NFRA can be asked as question. I'm expecting NFRA. Be a little careful with that. Section number 134. What is section 134? What is section 134? Financial statements, board's report, etc. Financial statement shall be signed, board's report shall be signed and prepared. Financial statement shall be signed by the chairperson if he is authorized by the board of directors. If he is not authorized by the board of directors, it shall be signed by two directors, out of which one shall be a managing director. These are the first category will sign. The second category is CEO, CFO, company secretary if they are appointed. Given the entire signing process, it will be signed by the chairperson if he is authorized by the board of directors. If not authorized by board of directors, it shall be signed by two directors, out of which one must be managing director if any. But second category we have CEO, CFO and CS if they are appointed. If they are not appointed, not required. If they are appointed, we'll get it signed from those set of people. Same signing process repeat for board's report. Board's report shall be signed by how many categories? One. Only the board of directors. It will be signed by the chairperson if he is authorized by the board of directors. If he is not authorized by board of directors, it shall be signed by two directors, out of which one shall be a managing director. That's the end of signing process. This is a special point number OPC. How many directors might be there? Maximum? Minimum? If there is an OPC having only one director, we'll get it signed by the chairperson who is authorized by board. There's only one director. There's no logic of chairperson authorized by board of directors, two directors, nothing. It will be signed by one director. OPC it will be signed by one director. Board's report will come back. 136. Okay. Fine. When I have little work come up, 136, 137, 138 we'll try to close it off now. In the next session, probably charges will not also happen today. Little work is there, Mulisa called. So I'll close it off for today after these three sections, 36, 37, 38. Charges is not that difficult chapter. We'll do it tomorrow if required, and we'll do section number 135 mandatorily tomorrow. 135 will be done, but tomorrow try to complete it for exam, for today's weekend exam, at least for today's daily exam on your own. Try to complete 135. I'll do the revision tomorrow. It'll take more time. It's gonna at least take half an hour from here to complete the next three sections. Not half an hour, at least 20-25 minutes to complete the next three sections. We'll close on that part. We'll continue tomorrow after that. Fine. We'll come back and do this pending topics on accounts of company tomorrow. Start with section 136. Section 136 talks about right of a member, obligation of the company. It is the obligation of the company after the audit is completed. Now try to understand this. I want the clarity on this concept. 136 arises only once the audit has been completed. Once audit is completed, once we have the audited financial statements, that's where the story of 136 starts. Once the financial statements have been signed by board of directors, they'll be given for audit. Once audit is completed, that's where the section 136 story starts, where we'll give the audited financial statements to the shareholders. Can you give the unaudited financial statements to the shareholders? These are not reliable. They are not trustworthy. Board of directors, the shareholders will not believe such documents. I can give the only what kind of documents? Audited financial statements. If the audit is not completed, can I complete section 136? Without 136, I cannot conduct an AGM. Without AGM, I cannot consider or adopt financial statements. Without adopting, I cannot file it with the ROC. So link between only 136 and 137. What will happen first? 136 or 137? 136. I'll give it to the shareholders. When will I give it to the shareholders? In the AGM or before the AGM? Before the AGM. So start the process. It shall be given to the shareholders. Who is giving it? Company. Giving it to which member? Every member, all the members, including a special person, debenture trustee. What was the logic behind is it? This was the first point. This was the second point actually. All entitled persons. But I wanted to give special importance to the debenture trustee. I especially mentioned it. That's it. Will I send it to auditors? Yes, all entitled person. Will I send it to creditors? Will I send it to my bank which I've taken loan from? Yes, I'll send it to all such people, but I'll include them in what category? All entitled persons. Give me the brief introduction here. Who is sending it? Company. To whom? All members, debenture trustee and all entitled persons. I'll send three documents out. The first document I'll send is audited financial statements, including the consolidated financial statement. Second, I'll give a special importance to the word auditor's report and all such other documents which are required to be annexed or attached to the financial statements. Am I sending board's report? Yes, but included in the third logic. all such other documents which are required to be annexed or attached to the financial statements. But what is given special importance? Auditor's report. Financial statements, I'll send it, but along with it, I'll send all other documents which are required to be annexed or attached. But I've given a special importance to my auditor's report. So I'll send how many documents? 3. I'll send it to the shareholders when? Before the AGM or after the AGM? Before the AGM, how many days before the AGM? 21 clear. This is not notice of general meeting. It will be sent with a length of 21 days before the general meeting. But if at all it is a Section 8 company, I'll consider that as 14. 14 or 14 clear. 14 days before the. This is not wrong printing. This is the concept. 21 days. 101. Notice of general meeting. I'll send it with 21 clear days. Here I'll send it with 21 days. If it is a Section 8 company, 14 days. 14 days in case of Section 8 company. But there's a shorter notice topic. If the documents were sent with a shorter period, shorter length, it is still considered as valid if it is ratified. Ratified by whom? Shareholders. Originally less than 21 days, valid or invalid? Invalid, but it can be ratified by the shareholders. This is again copy pasted from section 101 itself, but a part of it has been copy pasted. Remember the chart? If we'll divide them into 2 parts. It is concept of EGM was copy pasted here. It was divided into 2 parts. Company having share capital or company having no share capital. If the company is having share capital, I have to satisfy 2 limits. Majority of the members representing not less than 95% of the paid up share capital carrying voting rights. Remember the words? If it is company not having share capital, it shall be members representing not less than 95% of the total voting power. They can ratify the documents. Once ratified, document has been sent out, original process done. Problem arises if you are a listed company. If you are a listed company, because listed company will have more number of members, it is difficult for the listed company to send documents to every single member. Hence, they have given a specialized process for a listed company stating that you don't send out every single document, send out only a single document but containing the silent features of all such documents. Original process was we were supposed to send how many documents here? 3 category of documents, but for listed company, because the number of members will be large in number, will not ask them to send every document, will ask them to send only a statement containing silent features of all such documents. Because not every document is sent out, I'll keep the original documents open for inspection. Inspection at what place? Registered office during the business hours. I have to keep it open for how many days? Basically, I wanted to communicate for 21 days. I'll keep it open for 21 days. But the problem is, not every shareholder can come to the registered office. I'll post it on the. Are you getting the 3 stages hierarchy? First point, what was the problem? I am a listed company. I have raised money from public. I have lakhs and lakhs of members. Sending every single document to every single member will be a costly affair for the company. It is not practically possible. Hence, I'll not send the entire document. I'll send only the silent features of all such documents. Because I'm not sending full documents, I'll keep it open for inspection. Because not every member can come to the registered office, I'll post it on the website. But special point in website, what will I post in our website? FS including CFS, all of the documents which are required to be annexed attached, and SFS of my subsidiary company. Because any which was posting on the website is not going to incur cost. Post the extra document. What's the extra document you're posting? SFS of my subsidiary company. Don't get misinterpreted here. Is the audit report still included? Where is it included? In the second point. All the other documents which are required to be annexed attached is still including the word audit report. But we have to post the SFS of the subsidiary company. The problem arises here again. If this subsidiary company is a foreign subsidiary, where is it located? Outside India. They'll follow Indian law or foreign law. If they are following the foreign law, the law or the country in which they are incorporated is not making it mandatory for them to conduct an audit. As per India, audit is. Even for a dormant company, audit is mandated in India. But if the subsidiary is situated in such country where the law of such country states that audit is not required and they have never conducted audit, I'm not going to put extra burden upon you. Post that unaudited financial statements, I'll accept it. Where should I post it? Website. What should be posted? Unaudited financial statements. When can I post it? If the law of the country in which it is incorporated is not making it mandatory to conduct an audit and they have not conducted an post the unaudited. If the company is located in Japan, if the financial statements are prepared in Japanese language, I'll post the I'll translate in Chinese language. Translate to, if the financial statements are prepared in a language other than, we'll translate it to and post it on the website. Again, a special point which is again not as per Companies Act 2013 or any of the Indian laws. Which company is required to prepare a CFS? Holding company or subsidiary company? Holding company. But if as per the law of the country in which it is incorporated, if the subsidiary company is required to prepare CFS, is it required in India? As per the foreign law, if the subsidiary company is required to prepare CFS, post it, I'll accept it. What is being posted? CFS prepared by the foreign subsidiary can be posted on the website. But while you are posting, make sure that it is in the format as prescribed by Companies Act 2013 Schedule 3, because I want it to be comparable. If you are not able to prepare as per our format, give me the reasons why deviations happen. It should be as far as possible in the same format mentioned under schedule 3, Companies Act 2013. If not possible, give me the deviation of such format. This is for your foreign subsidiary. Don't forget, this is not a separate point. This is a part of the website which we are talking about. There's a continuation of website topic. What should be posted on the website? Which company is gonna this required for? Listed. Listed company has to post certain documents on the website. But if this certain documents happens to be a foreign subsidiary, we have special clarification for it. It's a single continuation logic. Then we have Nidhi company. We have done this couple of days back. Section number 20. Copy pasted from there. What is section 20? Service of documents. Copy pasted from there itself. Start the logic. Nidhi company will not send documents to every single member. We'll divide them into two parts. Either you are a specific member or other member. For other members, I don't care much about them. I'll not send documents, but I still communicate it by making an publication and place it on the notice board of the Nidhi company. But if you are a specific member, I'll send a notice to you. I'll send an individual document to you. But when will you be called a specific member? If you are holding. Give me the proper words. If you are holding, start with the sentence more than. More than how much? 1,000 rupees in face value or 1% of the paid up share capital, whichever is lower. If you are holding this amount, you will be getting separate documents. Last topic, manner of circulating the documents. Which is easiest way of sending these documents? Post or electronic mode? Physical or electronic mode? Electronic mode. You choose whatever way of sending documents as you like, I'll accept it. But if at all you are applicable with this category, I'll tell you how to send it. Are you getting the logic clear? If you don't fall under this applicability, can I send documents? How? My wish. Nobody is gonna stop me. But if I am applicable as per these regulations, then I have to send it as per the manner specified by the law. Start the process. Applicability is slightly different. You will forget this. Have more importance on this applicability. Where are we? Section number 136. Manner of sending documents has an applicability. It is applicable to every listed company and a public company specifically which is having a net worth of more than 1 crore and a turnover of more than. It is not more than equal to. It is not or. It is not paid up share capital. Everything is different here. It is net worth of more than 1 crore and turnover of more than. If the public company is having these two limits both satisfied, then they have to send the documents in a specific manner itself. Start the logic. If the shares are held in a dematerialized format, that means you have a demat account. That means you have purchased shares physically or electronically. If you have purchased electronically, that means you have access to internet. I'll send documents in electronic form. I assume that you have access to internet. I assume that you'll understand electronic documents. I'll send it in electronic way. But if the shares are held in a physical form, there's a chance that you might not have knowledge about electronic documents or you might not have access to electronic documents or electronic devices. I'll ask you. I'll get your consent. Consent to receive the documents in a electronic form. If you have provided your consent, if I have obtained consent from the member to send the documents in electronic form, I'll send it in electronic form. If the consent is not received, then I'll send it in a physical form. Or the two categories, I'll divide them into two. Either the shares are held in a dematerialized form or physical form. If they're held in dematerialized form, I'll take the assumption already. I'll send it in E mode. If the shares are held in a physical form, I'll get your consent to send the documents in E mode. If you have consented, I'll send it in. Which is easy for the shareholder also. Physical or electronic? Lot more quick and lot more easy to handle them than compared to physical documents. Section number 137, we'll do it from the entire chart directly. Fast, give me the first basic concept first. Who is filing? Fast number. Section number. What is section 137? Financial statements. A copy of financial statements to be filed with the registrar, ROC. Is it fine? Copy of financial statements to be filed with the registrar. Who is filing it? First, which company? Every company. 1 year, every year. Every financial year. I have to file it with the ROC. What should I file? Financial statements including consolidated financial statements and all other documents which are required to be. Which includes your audit report also, board's report also, valuation report, expert statement, everything is included. Financial statements, what financial statement should be filed? The financial statements must be adopted. Have to file it within, as usual topic, within 30 days from the date of conclusion of the AGM. Is it fine? But that's where problem starts arising. If it is a company which has chart, is it fine from the chart? Okay, just give me the briefing of the chart, then I'll show you the chart. Time limit of filing was divided into two parts. Either it is an OPC or other companies. Other companies, we had the first question, have you conducted AGM? If you have conducted AGM, different category. If you have not conducted AGM, different category. If you have conducted AGM, there are two possibilities. Either financial statements got adopted or not adopted. Let me complete the process, then I'll show the chart later. Don't read the chart, just I'm putting it here, but don't read it. Start the process. Original topic was it has to be what documents to be filed? Adopted. That means we have to first conduct a AGM, we have to consider the document, then we'll adopt it. Once the shareholders have adopted it, go file it with the ROC within 30 days from the date of conclusion of the AGM. If the financial statements were not adopted, AGM was conducted, but financial statements went unadopted, will I file it? Can I close the AGM? I will adjourn it and then conduct a adjourned AGM. But ROC is curious why this document was not adopted. I'll file which document? Unadopted financial statements with the ROC within 30 days from the date of conclusion of the AGM. But ROC states that I am not fully satisfied with this document. I'll accept it only on a provisional basis. What basis? Only on a provisional basis. Then we have to conduct which AGM? Urgent AGM. Get the document. Adopted. Go file it with the which document this time? Adopted financial statements within 30 days from the date of conclusion of the adjourned AGM. But the problem is, what happens if we never conducted AGM at all? If AGM itself was not conducted, we'll have which document? Adopted or unadopted? Go file it with the ROC within 30 days from the last date on which AGM should have been conducted. Don't stop there, continue that along with the statement containing the reasons and facts why the AGM is not conducted. We have to mention the facts and reasons why the AGM is not conducted. This is important, don't forget it. Once it is filed, that's gone. Then OPC. Do they conduct AGM? Section 96 had the basic introduction wordings. Which company? 96. Every company except an OPC shall conduct an AGM every calendar year. OPC is not even required to conduct an. Are you getting the point? They have not failed to conduct AGM. They are not required to conduct AGM. Are they still required to file it? But they cannot base it from the AGM. They'll base it from the end of the financial year. They have to file it within 180 days from the closure of financial year, from the end of the financial year. Is it fine? This is for which company? OPC. Any doubts? Section number? We have two more points to discuss under 137. We have one logic called as foreign subsidiary. What happens if there's a foreign subsidiary? And one logic regarding the XBRL form. XBRL is important for exam now. Coming to foreign subsidiary first. This concept is easy. My background was a little difficult, but concept is easy, fast. We'll submit documents to the ROC. Will the ROC verify? Say, assuming I am a holding company, I have a subsidiary company located outside India. Where is my subsidiary company? Outside India. Or otherwise, I'll take a simple example first. I'm a holding company, I have a subsidiary company in India. Am I applicable with Indian law? Is my subsidiary company applicable with Indian law? Both of us are applicable with Companies Act. Both of us are applicable with section number 137. Both of us will file financial statements with the ROC. But how many documents will I file? Two. SFS of the company and CFS of my company and my subsidiary company. Then subsidiary company will file how many documents? One. What's the one document? SFS of the subsidiary company. Now coming from ROC's perspective, ROC has how many documents? Three. He'll read which document first? SFS of the holding company. Then he'll read. See, to read the CFS, he must have knowledge about SFS of the subsidiary company. First he'll read the SFS of the holding company, then he'll read the SFS of the subsidiary company, then he'll be able to understand the CFS of the holding and subsidiary. This was the original general process. Problem starts arising if this subsidiary company is situated outside India. Are they applicable with Indian law? Are they applicable with Companies Act? Are they applicable with Section 137? Will they file documents with the ROC? I'll file two documents, SFS and. But to check CFS, they should have knowledge of. Can the ROC demand them? Does ROC have egoistic mindset? Yes. Can they demand foreign subsidiary? They'll kick them out. They don't have authority outside India. But they can show their authority, they can show their power with whom? Holding company. They'll demand holding company or request holding company. Demand holding company to submit how many documents? Not 2, 3. What are 3 documents to be submitted? SFS of the holding company, CFS, original document, CFS of the holding and subsidiary. Also submit SFS of such which company? Foreign subsidiary. But same points copy pasted from 136. If it is a foreign subsidiary and they're not required to conduct audit, they'll file an audit. If they're not in language of English, translate to English. We have to prepare as far as possible in the same format as given under Schedule 3, Companies Act 2013. Is it fine? These are the extra points for foreign subsidiary. Then XBRL format. I want all the form numbers very, very clear. Financial statements is filed in form number. Form number AOC 4. You should remember this entire table we have drawn. Normal companies we have to file in form number AOC 4. CFS will file it in form number AOC 4 CFS. But if at all it is a specialized company, it is a NBFC complying with Indian accounting standards. What is it? NBFC which is complying with Indian accounting standard, we created a separate format, and MCA was not creative enough. They created the same form with names. That's it. What is the form to be filed? AOC 4 NBFC Ind AS. If it is CFS, AOC 4 CFS NBFC Ind AS. But if it is a specific type of company which is applicable with XBRL, they have to file it in form number AOC 4 XBRL. CFS will also be filed in form number AOC 4 XBRL. There is no separate CFS form for it. XBRL will be for both SFS and CFS. But what are these specific companies we have? Specific companies includes 5 points. I hope you guys remember this. These are important for exam. This applicability can be asked. First point was every listed company or a subsidiary of such listed company or all companies which are having a paid up share capital of more than equal to. Have you made change in the material? This is more than equal to, not more than. Printing mistake was done in your material. It was more than equal to. More than equal to how much? 5 crores or all companies which are having a turnover of more than or equal to 100 crores. Or all companies which are complying with Indian accounting standards. Write this sentence also. Companies which are complying with Ind AS. These are the 5 points, 5 category of companies which are applicable with XBRL reporting. Extensive business reporting language. What are the companies? All listed companies, subsidiary of the listed companies, all companies which are having paid up share capital of more than equal to 5, all companies which are having turnover of more than equal to 100, all companies which are complying with Indian accounting standards have to report in XBRL. But there are certain exceptions. There are 4 exceptions given. Banking company, insurance company, no electricity is given in exception, NBFC and HFC. What are the 4 exceptions we have? Banking, insurance, NBFC and HFC. Electricity company is applicable or not applicable? Applicable. These are the 4 exceptions. Applicable to these companies, but we have exceptions. Section number 137. Then we'll complete section 138. What is section 138? Did we write it? Fine. 138 doesn't require material much, but let's start it directly. Okay, we have it. Section 138. What is section 138? Internal audit. Quickly run through that. Can an employee be an internal audit? Employee be an internal auditor? Can an employee be a stat auditor? He'll be disqualified under section number 141 subsection clause section number 141 subsection 3 clause B. An employee or officer of the company is disqualified to act as a statutory auditor. But an employee, can he act as an internal auditor? Yes, internal auditor may or may not be an employee of the company. Now, give me the wordings proper. Listen to the words and give me the answer proper. Can a chartered accountant conduct audit, financial audit? Is a cost accountant having knowledge to conduct audit? Is a cost accountant having knowledge to conduct audit? Is he eligible to conduct audit? No, but he is having knowledge to conduct audit. Internal audit process states that I don't care about eligibility, I don't care about the certificate you have, I care about the knowledge you have. It can be, internal audit can be done by who can do internal audit, either a CA or CMA, whether or not in practice. I'm a CA in practice, can I conduct financial audit? I'm a CA in practice, can I conduct internal audit? I'm CA but in service, can I conduct financial audit? Can I conduct internal audit? Yes. I'm a CMA in service. What? Yes. Can I conduct cost audit? CMA in service, can I conduct cost audit? No. CMA in practice, can I conduct cost audit? I'm a CMA in practice, can I conduct internal audit? Internal audit can. You decide the answer, then I'll ask questions, Sama, better. What are the two options we have? Either he's a CA or CMA, whether or not in practice. I don't care whether you're CA or CMA, you're a CA interqualified. You're completed or not completed your final, but can you still conduct it? I care about your knowledge and don't care about your certification or the professional qualification you have. Only thing I care about is your knowledge. Any other professional as may be determined by the board of directors. Give me all three options. First, CA or CMA, whether or not in practice, or any other professional as determined is decided by the. But this internal auditor may or may not be an employee of the company. But applicability is important. Again, one of the easiest but one of the most important sections of accounts of company 138. I don't know what ICA finds interesting in this section, but they'll ask it. Divide into three parts or two parts. It's up to you how to define it. First, every listed company. Second, we have unlisted public company and unlisted private company. Start with unlisted public company. They will be applicable to the internal auditor if they have satisfied any one of the four conditions. I hope you're not looking at the board and answering. How many conditions are there? We have to satisfy any one of them or all of them. Any one of them will be using the word or and. Or start in the same order. We have to remember the same order. First, outstanding deposits. Outstanding deposits of 25 crores or more. Because these deposits can be manipulated, they can be increased or decreased. I'll not check on the balance sheet date. I'll check at any point of time during the financial year. Given the entire sentence. Outstanding deposit. If a company is having outstanding deposits of 25 crores or more at any point of time during the financial year, or the company is having paid up share capital of 50 crores or more during the financial year, they'll check at what date? Balance sheet date, because I cannot manipulate paid up share capital. Or they're having a outstanding borrowings from banks or financial institutions of. We decided we'll remember the words. Will not, this doesn't make sense, but we'll remember the words. What were the words? Exceeding 100 crores or more. Is it exceeding 100 crores? No. Is it 100 crores or more? No. They have used the word exceeding 100 crores or more. We'll still remember that, but we'll, if at all the situation comes in, we'll write it as what? More than 100, but in the exam hall, we're gonna not use symbols at all. We'll use what? Exceeding 100 crores or more at any point of time during the financial year, and turnover of 200 crores or more during the financial year. If any one of these conditions are satisfied, we'll be using or and in between them. Any one of them or all of them. If any one of these conditions are satisfied, you are applicable with internal audit. Same thing for private company, but we'll have how many conditions? Two. So the last two conditions are copy pasted. Give me the proper words for last two conditions. Outstanding borrowings from banks or financial institutions exceeding 100 crores or more at any point of time during the financial year, or a turnover of 200 crores or more during the financial year. If you remember this, we'll just double them up. 25, 50. What's the order? What's order 100? 25, 50, 100. What's the order? Outstanding deposits, paid up share capital, outstanding borrowings, and turnover. We'll close it off on this. The terms and conditions, timing, scope, periodicity, how to appoint, whom to appoint, recommendation, everything is taken care by board of directors. Their agenda, their ballpark, nothing will be from the shareholders part here. Everything will be done by board of directors. If the company has an audit committee will interfere into the process. Section number 138. What is left out for the next session for this particular chapter? We still have 134, the board's report and the DRS, director responsibility statement, and we have section number 135. Last section we had section number 135. What is section 135? This is completely out of the box from the regular chapter we have. The chapter we have was accounts of company, where we have prepared accounts, we have prepared the financial statements, we got it audited, we gave it to the shareholders, we filed it with the ROC. There was a streamlined process where we have a linkage between all sections. But the section 135 is completely separated. This is nowhere linked with accounts of company. This is completely a different logic altogether. But it is at end of the day very much important topic for exam perspective. One of the important topics of this chapter again, 135 will be very important. And again, not all parts of section 135 are usually asked in exam hall. There are only two parts which are usually asked: the applicability and the constitution, the introduction part. Then they're also asking the concept of how much to be spent, the 2% unspent CSR, excess spent CSR, surplus amount. That's where they're asking more questions upon. We'll devise basically all the process, but we'll stress on these two topics a little more. Coming to the applicability part, you have to remember this subsection also here. Section number 135, subsection 1. Start saying that CSR, before I go into the concepts of CSR, let me give a brief about what is CSR. Corporate social responsibility is a responsibility. Let's understand the word clearly. It's a responsibility towards the society for the corporate entity. A corporate social responsibility, my responsibility to give it back to the society. There are multiple authors, multiple philosophers who have given this particular definition that company is not a separate entity. Company is an extension of the society. Without the help of the society, company cannot exist. Without the help of society, company cannot make profits. Without the help of employees, board of directors, trade unions, warehousing, customers, consumers, government authorities, or the basic infrastructure provided by the government, all these factors fall together to make the company successful and profitable. But always the Companies Act stated that profits of the company will end of the day belong to the shareholders. Now our concept under CSR was, if the society entirely helped you to make that profit, you have to bring back some benefit to the society. That's one aspect. Second aspect is, knowingly, unknowingly, intentionally, unintentionally, while you are doing business, you will exploit natural resources. You will exploit human resources. You are exploiting the country's environment. For such exploitation you have to compensate that exploiting you have done by giving back to the society. Two major reasons. First reason was, society is the reason why you made a profit. Second reason was, you by doing business have affected the society. Give it back to the society. We have to contribute back to society for charitable activities. Initially, when the logic of CSR came into existence, it was a voluntary concept. It was an ethical concept. People may or may not do it based on their own ethical aspect. But knowing India, will they donate money? Will they donate money? They're already snatching 40% as taxes and they're asking us to donate again. Will we donate it? Very rare cases, very few set of companies were ready to donate back to the company on a voluntary basis. Then the company side decided we'll make it a mandation. We'll make it as a mandation under section number 135. But if I make it mandation for every single company out there, the company itself is not able to sustain itself. If I ask to help the society, the company would say, sir, forget about society, I need help first place. I'm not a company which is fully established. I'm not a company making huge amount of profits. I myself need help in the company. How would I help the society at large? I'm not going to make this mandatory for every scale of a company. I'll make it mandatory only for larger businesses. And section 135 was also very clear. I don't care what type of company you are, what classification of company you are. You might be listed company, you might be public company, you might be even a private company, or even a small company, one person company. I don't get type of company. I start with the word every company. Every company which is having a large business will be applicable with CSR. Obviously small companies will not meet that limit, but are we getting the point? We did not bifurcate any type of company. Starts with the word a company. A company which is having any of the three limits have to start applying CSR. Once you apply CSR, I'll come to the limits in a bit. Once you're applying CSR, the board of directors have to make sure that we are spending at least 2% for charitable activities. But what is charity? Where to spend? How to spend? How much to spend? When to spend? These are all activities which will be known and understood and can be implemented rightfully only by a person who is having ethical aspect. But do we expect all the board of directors to have ethics? Do we expect all the board of directors to have skill for the business? Yes, but the board of directors with skill for the business might not be having ethical aspect, ethical perspective. Hence, we separated the board of directors and constituted something called a CSR committee. That's where section 135 starts. Section 135 subsection 1 states that a company shall constitute the CSR committee. What's the wordings here? A company, which company? I don't care. A company shall constitute a CSR committee if in the immediately preceding financial year they have either of the limits satisfied. If either of the three limits are satisfied, they have to constitute CSR committee. When am I going to check these limits? Current year, preceding financial year. Which preceding financial year? Immediately preceding financial year. All the limits are important. Net worth of 500 crores or more, or turnover of 1000 crores or more, or net profit of 5 crores or more. To be applicable, I can satisfy any one of the limits. I will be applicable. If I am applicable, first thing I have to do is constitute the CSR committee and start spending money. I have to spend at least 2% of the average net profits of the immediately preceding 3 financial years. How much must be spent? At least 2%. This is given under section number 135 subsection 1. Half of the questions will be on applicability, so remember the subsection. Section 135 subsection 1. Give me the wordings here. A company shall constitute a CSR committee if in the immediately preceding financial year they have either net worth of 500 crores or more, or net turnover of 1000 crores or more, or net profit of 5 crores or more. They have to constitute the CSR committee and start spending money. How much should be spent? They have to spend at least 2% of the average net profits in the immediately preceding financial year. While we are talking about this net profit, how to calculate net profit is given by Companies Act. Net profits are, again, we discussed this in dividend chapter as well. Net profits is always calculated as per section number 198. Section number. But while calculating section 198, there are certain exclusions from the net profit. Net profit does not include. Try to understand the logic behind it. Have you exploited Indian market? Give it back to the Indian market. But if I am a company having a branch outside India, I'll call it as overseas branch. If I have a branch outside India, that branch outside India doing business where? Outside India have exploited resources, not in India. That means the profits generated by this overseas branch has not affected Indian market. I cannot come and force you to spend money on those profits. Those profits have exploited, but exploited resources belonging to another country. Will I care about it? If you have exploited whose resources? Indian resources, I'll force you to spend money 2%. So they have included or excluded? Excluded the profits which are arising from a overseas branch, a branch which is situated outside India. Or second case, where this is a complicated but interesting logic. We have both the companies in India, try to understand it. We have, say, company A, who is in India, and company B, which is also in India. Company A is assuming Reliance Industries. It has huge amount of profits, huge amount of turnover, net worth, etc. They're obviously applicable with CSR. And because they're applicable with CSR, understand the profits of the company now. Out of this entire profits they have, at least 2% have already been spent for CSR. Try to make the numbers simple. If say I have rupees 100 as a profit, out of the 100 rupees 2 has been already spent. And indirectly, how much is left in my pocket? 98. This 98 rupees was distributed to the subsidiary company as a dividend. Not even subsidiary, it doesn't have to be subsidiary, just an investment. B Limited has invested into A Limited. A Limited has paid dividend to B Limited. If the CSR was not applicable, how much dividend should have been received in total? 100. But because the CSR is applicable, how much is already spent out? And how much is distributed as dividend? That means this 98 rupees of profit which is distributed is already been adjusted with CSR, out of which certain profit will be received by B Limited. Now B Limited will also make business. B Limited will also make profits. Now come to B Limited. Say assuming B Limited's total profit is rupees 20. Total profit of B Limited is rupees 20. Out of this 20, 5 rupees is coming from the dividend received from A Limited. That 5 rupees is already adjusted with CSR. But they do have other profits. Are they still required to spend? Are they still applicable? But they'll spend on 2% of what? 20 or only 15 rupees? 15, that means this 5 rupees is included or excluded? What is excluded? Dividend received from a company in India. Dividend received from a company in India which is applicable and complying with CSR under section number 135. If it is receiving a dividend from such company which is complying with CSR, they are already adjusted this amount. There is no need to spend the money again. Then coming to the constitution. Again, wrong drafting, but still we have to learn it in the same manner itself. What was the process here? Once a CSR is applicable under section 135 subsection 1, you have to constitute a CSR committee with 3 or more directors, out of which one must be a independent director. Sorry, ma. Results have been declared. So I was a little busy. First, where are we? My mind is not working. Where are we? Constitution. Section number 135 subsection 1. If at all CSR is applicable to you, you have to constitute CSR committee with at least 3 directors. The words used are 3 or more directors, out of which one must be a independent director. But the independent director is not required to be appointed as per section 135. They have a separate section. Section 149 subsection 4. You don't have to remember that. If at all you are a company which is applicable with independent director, your independent director will also form part of the CSR committee. But if at all you are a company which is not applicable under section 149 subsection 4, you are not even required to appoint a independent director, but you are applicable under section number 135 subsection 1, you have to constitute the. But CSR committee, now we don't have an independent director. Can we include him in the CSR committee? Hence, they have changed the logic. If it is a company which is not required to appoint independent director, they will constitute the CSR committee with not 3 or more. They have basically removed the position of independent director. They have used the word 2 or more directors. But if at all, we were just discussing about it. Can a private company be applicable with CSR? We don't care what type of company you are. It can be a private company. But if it is a private company having only 2 directors, CSR committee will also be constituted only with 2 directors. And if it is a foreign company, give me the basic definition of foreign company. It is incorporated outside India but having a place of business in India. Try to understand, they are not having their company in India. They are only having one small place of business in India. Their company is originally located outside India. All the directors will be usually existing or residing outside India to run the business in India, to communicate with the ROCs in India. We appointed a person called as authorized representative. This authorized representative was appointed under section number 380. Remember, this representative will basically communicate with the ROC on behalf of the foreign company. He is the person who is going to be taking care of activities in India. So for this foreign company, we cannot expect the board of directors of the foreign company which are located outside India to come to India and constitute the committee. We will have at least 2 persons. Are you getting the words clear? We did not use the word director also. At least 2 persons, any of the 2 persons, but out of the 2 persons, one must be that authorized representative we appointed under section number 380. Are we getting the logics clear? Where are the board of directors located of this foreign company? Outside India. Are you expecting them to come to India and do CSR? No. End of the day, our point is that we have to spend money to society. We have to spend money to the Indian society. Indian market should get benefit out of it. If the directors are not expected to come in, let's at least appoint 2 persons. I don't care who these 2 persons are. I don't care the title in the company. I want 2 persons, out of which one must be a authorized representative. Then this is something which is interesting logic. We have the CSR committee's duties. I'll come back to this in a bit more. Otherwise, start discussing the duties and we'll come back to this suggestion point. When does a CSR committee apply? When does a CSR apply? If in the which year? Immediately preceding financial year. You have met any of the 3 limits. But once you have satisfied the limits, you will continue to apply for a period of 3 years. If for 3 years on a continuous basis, on a 3 consecutive years, you have not met any one of those limits, you will not be applicable for CSR for the fourth year. That means you will cease to apply, you will cease to comply with the CSR logics if you have not met the limits. Ceases to meet the limit for how many years? Three consecutive financial years. If it is not meeting for 3 consecutive financial years, give me the answer. Is CSR applicable or not applicable? If CSR is not applicable, you don't have to constitute CSR committee, you don't have to spend money. How much you are supposed to spend usually? At least 2%. Now are you required to spend that money? Now start the process of spending money. Before we start spending money, we have to analyze and understand where to spend, how much to spend, what activities to invest upon. That decisions will be having taken by, there are two parties in my hand now, CSR committee and the board of directors. Who have more power? Board of directors. But who will have more knowledge? CSR committee. The CSR committee is a committee which is working underneath the board of directors. They cannot approve the transaction, they cannot implement the transaction, they can only give recommendations to the board of directors, and the board of directors will implement it on their own. End of the day, it will be approved and implemented by board of directors, but on the recommendations received by. Hence, the story always starts from the CSR committee. The CSR committee will do their research and prepare a document called as CSR policy. Technical words. The CSR committee will have the first duty is to formulate, prepare and recommend. Formulate and recommend a document called as CSR policy, which shall include such activities which are within the purview of schedule number 7. Companies Act has clearly mentioned what is CSR, what is not a CSR. There is a huge debate on this. People started misusing the point and stated that they have done. Say for example, Aditya distributed alcohol in the society and stated that this is as per me, this is CSR. Companies Act states that don't apply your brain. I'll tell you what is CSR. I have provided the category of activities which will be called as CSR. I have provided them not in the section 135. I provided them under schedule number 7. So what happens here? While the CSR committee is formulating the CSR policy, they have to draft it in such a manner that the activities mentioned in this policy are within the areas specified by schedule 7. Schedule 7 has a total of 12 category of areas mentioned. How many categories? While you are reading each of these categories mentioned under schedule 7, the government has clear given instructions. You have to read them in a wider sense rather than a narrow sense. If I am using the word education here, this includes every kind of education. Even the awareness for COVID vaccination was included in education. It should be read in wider or narrow sense. Wider sense. For example, I have given the word healthcare. This healthcare includes donation of blood. They have not specifically mentioned donation of blood is a CSR activity. But if they have used the word healthcare, I have to read the healthcare in a very wide sense to include as much as possible. How many categories are there? How many categories are there? 12. 12 categories will be considered as CSR or not as CSR? Will be considered as CSR. Hence, the CSR committee, while drafting, formulating the CSR policy, shall indicate only such activities which are in the areas specified by schedule number 7. Sir, we have done with the CSR policy, we have given all the activities mentioned in it. We gave it to the board of directors, but board of directors don't know how much to spend for each activity. If they don't know how much to spend for each activity, they cannot plan the implementation process. Then the second duty of the CSR committee was to recommend the expenditure for each of the activity mentioned in the CSR policy. If I have mentioned 5 activities, I also should mention the expenditure which will be incurred for 5 activities. What are the 2 points? First, the CSR committee shall formulate and recommend a document called as CSR policy, which shall indicate the activities in the areas specified by schedule 7. Then because they don't understand how much to spend, I will recommend the amount of expenditure. But try to understand this entire logic in a timeline basis. What will happen? CSR committee will formulate the policy. They'll give it to the board of directors. Board of directors will consider that. Then they'll approve it. Once it is approved, they'll start implementing it. And it is mandatory that I should spend 2% in the current financial year. That means usually the CSR policy is given at what point of time? End of the financial year, as early as possible. I'll give it at the beginning of the financial year so that the board of directors will have enough time to implement it. Hence, try to understand, if I have drafted this at the beginning of financial year, there's a chance that the circumstances might have changed. The policy might not still hold the same meaning while the time it was drafted. The CSR committee has a third duty to monitor the CSR policy from time to time. If required, they'll also make changes. But remember, can they make changes on their own? No, they'll again give recommendations to the board of directors. Board of directors can modify the policy on the recommendations received by the CSR committee, but board of directors have to clearly justify the reasons for such modification. That's an extra concept added because we are drafting it at the beginning of financial year. The circumstances might change. What are the three categories you have to remember? Just the keywords, Sama. Formulate and recommend the document called as CSR policy, recommend the expenditure, and monitor. Monitor the CSR policy from time to time. Now, while giving this document, we'll also give a document called as annual action plan. What is it called? Now, CSR committee has knowledge, but the CSR committee's knowledge has to be given to board of directors so they can choose which particular activity we have to implement. Is it possible with the limited budget we have to choose all the activities? Can you stop poverty in India by tomorrow morning? Let's be a little realistic. All the activities you have mentioned in policy are good enough, but I cannot spend everything. I cannot indulge in every single activity. I have to choose the right activity which is going to be technically, financially, and implementation possibilities are existing for such company. For deciding that, they have given a document called as annual action plan. Don't get this wrong. This is not a separate document. This is a part of the CSR policy. A document again formulated by whom? CSR committee and recommended to the board of directors. A document called as annual action plan, which is a part of the CSR policy, which will explain certain insights about each activity so that they'll understand it better. Understand it. Each activity mentioned in the CSR policy might have multiple projects that are existing. I'll give you all the pathways to reach the end goal. Multiple projects will be given, a list of projects. Each of the project, how should it be implemented? How should the execution process will happen? I'll explain it clearly. Manner of execution. First, I'll explain all the list of projects. Try to imagine yourself as board of director and try to understand the step-by-step process. First, I'll give you all the list of projects. You'll understand different possibilities that are existing. But each possibility has a different way of implementation. For say, assuming that for one of the activity, I need a technical support, but my company doesn't have technical team. Will I choose it? No. I'll understand it only when I understand how to implement the transaction. First point was list of projects. Second was manner of execution. Fine, sir, there are two categories, two pathways, two projects which are feasible for me. But the first pathway, the first project requires a cash outflow on day one. The second category, second activity requires cash outflow in a phased manner over a period of 5 months, which is less burdenful for the company. First or the second one? Second one. I'll choose the second one. Utilization of funds. When will the funds be utilized? At what installments will be utilized? How the phases will be there for implementation? If I had to have a cash outflow on the day one, I should arrange money. If the company doesn't have that liquid cash ready, they can start the project. So they have to understand the utilization of funds to start the process. Once everything is ready, we'll start implementing it. While implementing, will everything go as planned? Last 10 days your study hours, everything went as. Not even a single day went as a plan. Will the plan always work? Point is, plan will never work. But are we going to give up on the plan? Are we going to give up on the goal if the plan is not working? What will we do? Change the plan. For changing the plan, we have to understand that we have deviated from the plan. Continuously monitor. Monitor and review whatever you are doing. Monitor and report it so that they'll take a corrective action to bring you back to the track. You'll have a monitoring policy on a regular basis during implementation. Once the plan is completely implemented, why did we do all this? For our companies? No, it was done for whose benefit? Society's benefit. Now just understand, you have spent this amount of money, you have spent time and efforts into the process. Have the society actually got benefit because of you? Do a logic called as impact assessment, or otherwise simply called as CSR reporting, where we will do impact assessment whether this CSR activity we have done, have it left an impact on the society or not. Spending money was not our goal at any point of time. Our goal was only to bring benefit to the society, because of which we were supposed to spend money. It was not that we'll distribute money, we'll burn money and we'll call it a CSR. It was the point that money should be used for benefits of the society. Have you given benefit to society? Do a concept called as impact assessment. Now give me all 5 points combined together. First, the annual action plan is a document formulated by the CSR committee, recommended to the board of directors by mentioning that in the CSR policy, it's a part of the CSR policy. It will mention 5 things which will make sure that the board of directors will understand which project to select. First, I'll give you all the list of CSR projects existing for me. Second, I'll give you the manner of execution of each of these projects. Not only execution, I'll also provide the utilization of fund and the investment or the implementation phases which will happen at a periodical time limits. Then I'll explain you the monitoring and reporting through the implementation process. After implementation, we do something called as impact assessment. All 5 points will clearly explain why a particular project has to be selected or not to be selected to the board of directors. Now the ballpark is in the hands of board of directors. What will the board of directors do? Board of directors will directly approve or consider the recommendations given by CSR committee. Then they will approve the CSR policy. Once it is approved, whose money is this all? They should know about it. This money is spent for whom now? Society. They should know about it. Disclose it. Disclose this approved CSR policy and the constitution of CSR committee. Why constitution of CSR committee? If the CSR committee itself is fraudulent, if people like Karthik are appointed in CSR committee, entire CSR is a failure. Are you getting the point? Entire CSR depends on one pivot point, CSR committee. CSR committee will be the starting point of CSR, entire CSR activity. If that CSR committee is fraudulent, if that CSR committee fails, entire CSR policy logic completely fails. I want the rightful persons in the CSR committee. Can I put people like Karthik in CSR committee? Seshu in CSR committee? No. I have to put rightful persons who are having proper ethics into the CSR committee. Hence, disclose 2 things. Disclose the approved CSR policy. Disclose the constitution of the CSR committee. It must be disclosed 2 places. I should post it on the website of the company mentioned in the board's report. We'll remember this as what? 2 things, 2 places. What are the 2 things we'll have to disclose? CSR policy. Which CSR policy? Recommended or approved? Approved by the board of directors. CSR policy and the constitution of the CSR committee has to be mentioned, disclosed 2 places. What are the 2 places? I'll disclose it. Website of the company and board's report. Then once it has been approved, our point was not to just approve and sit down. Once approved, we have to start implementing. It is the responsibility, duty of the board of directors. They have to ensure that the CSR activities are actually being implemented. Money is actually being spent for the benefits of society. Activities have been actually undertaken by the company. These are the duties of CSR committee and the board of directors. Now come back to this logic. If the amount of expenditure for a particular financial year is not exceeding 50 lakhs, small amount. If it is not exceeding 50 lakhs, Companies Act states that you don't have to constitute a CSR committee separately because the amount of money is less in nature. We don't have to spend time and efforts for a committee altogether separately. Hence, try to understand the word. CSR is still applicable to you, but you don't have to constitute the CSR committee. Are you still required to spend money? But there is no requirement to constitute the CSR committee if the amount of expenditure is not exceeding 50 lakhs. But sir, my doubt is, there are certain functions and duties of CSR committee. Who will take care of those committees' functions and duties now? Board of directors. If the CSR committee is not existing, their functions, duties will be now taken care by board of directors. They will be discharged by the board of directors, but this is all required only when the expenditure is not exceeding 50 lakhs. If it is exceeding 50 lakhs, one word, are we applicable? Yes, are we required to constitute CSR committee? Are we required to spend? If the section 135 applicability is met, but the amount of expenditure to be spent is less than 50 lakhs or exactly 50 lakhs, are we required to spend? Are we applicable? Are we required to implement? But we don't have to constitute. That means the activities of CSR committee will be taken care by the board of directors. Now coming to the amount to be spent, small note points we have. We already discussed this. How much should be spent? At least 2% of the average net profits in the immediately preceding 3 financial years. But if the company itself is incorporated for less than 3 years and it is applicable, I'll make average for those years for which it is incorporated. If it is for 2 years, I'll make average for 2 years. If the company is incorporated for 5 years, I'll make average for. If the company is incorporated for 3 years, I'll make average for. If the company is incorporated for 2 years, I'll make average for 2 years. If the company is incorporated for 1 year, I'll make average for 1 year. But try to get the logic behind CSR. You exploited my resources, spend it back to the society. If you have exploited resources, if you are doing business, India is a very vast country. If you are doing business in Hyderabad, you have exploited resources in Ladakh. No, you have exploited resources where? In and around Hyderabad. Then you have to, while spending money, give preferences to the local area. If the local area preferences are not possible, then you can spend it outside local area. But preferences, priority must be given to the local area. If not, then you can spend it outside local area, but it must be spent in India. Distribution of food to people in Nigeria. Is it charitable activity? Is it charitable activity? Yes. Is it constituting a CSR activity? No. It will be constituting a CSR activity only when the amount is spent in India or outside India. Hence, there are certain category of amounts, certain category of money spent which will not be considered as CSR. Activities which are CSR or not CSR, not considered as CSR. Interesting and important topic. Very important. Market is important. This can be asked. Amounts which are not considered as CSR. Now try to understand the background before we start the categories. We have 6 points which are not considered as CSR. Get the logic clear. Distribution of food to people below poverty. Is it charitable activity? Answer to the question specifically asked. Is it charitable activity? Yes. Is it mentioned under schedule number 7? Distribution of food. Eradicating poverty or hunger is one of the points of CSR activities. It is mentioned in category 1 of schedule 7. So distributing food is, as per schedule 7, is it CSR? But even though it is satisfying schedule 7, there are certain exclusions. So whatever we're going to discuss from here on, the next 6 points, they're actually part of schedule number 7, but they're still not considered as CSR. Because they are not bringing benefit for some other reason, they are not bringing benefit to us, we will not consider that as CSR. Are you getting the point? We are discussing those activities which are still part of schedule number 7, but which will fall not part of CSR activities. What is the first category? Any amount of expenditure done by the company in the ordinary course of business, in the normal course of business. If they are doing it in the normal course of business, they are not doing charity, they are expanding their business activities. It is not considered as a CSR. There is an exception, outdated. I don't want to spend much time on it. Pharmaceutical companies, during COVID-19, they were allowed to do research and development. One word answer. Pharmaceutical companies doing research and development for their medical support is their ordinary course of business. But during COVID-19, the government of India gave exception to them, stating that pharmaceutical company can do research and development for COVID-19 vaccines, etc. during the 3 years 2021, 21-22, 22-23. It will be not considered as their ordinary course of business. I'll consider that as CSR. But there's a condition. You must do it in collaboration with the government of India. Otherwise, you'll get the CSR benefit, or also you'll get the benefit of vaccines also. If you do it in collaboration with government, I'll distribute it free of cost. I'll also get benefit out of it. And entire India, entire world will get benefit out of it. I'll allow it. I'll allow it if it is only for research development of what COVID-19 activities during these 3 financial years, if it is done in collaboration with the government institutions. But again, outdated. Which year was the last? 22-23. They'll not draft questions on it. Just read it once and leave it off. What's the keyword you have to remember? If it is done in the normal course of business, ordinary course of business, it is not considered as a CSR. This is important. Any activity which is done outside, we were just discussing about it. Any activity which is done outside India is not considered as a CSR, but there is an exception. We do agree that the infrastructure facilities for sports people in India is lacking. Hence, we have given this exception stating that a sports training provided to a personnel outside India, a personnel who is going to come back to represent either a state or a union territory at the national level or India at the international level. If he wins anything, He'll bring a lot of reputation back to India. I'll allow it. Even though it is done outside India, I'll still allow it as a CSR activity. Again, sports, whether it is CSR or not a CSR, it is CSR, right? Next, any kind of benefits which are given only to the benefits of my employees. There are questions on this. If say assuming there was a particular question on this, we have opened a school. We have provided free education to say 100 students. Out of the 100 students, 2 of the students were children of my employees. Is it called a CSR? Yes. My intention was not to bring benefit to employees. My intention was to give benefit to students. Coincidentally, one of those or 2 of those students were my children of my employees. Was it intentionally done only for employees? If the same case I provided education to 100 students and all 100 of them are students of my employees, are children of my employees, then will it be CSR? It will be basically a perquisite activity. I'm giving benefit to my employees. Will it be called a CSR? No. Any benefit which is received by the employees will not be considered as CSR, or any kind of activities done for sponsorship purposes. Sponsorship purpose is a logic where I'll promote my brand there. If I'm promoting brand, I'm doing marketing purpose, not for benefits to the society. Tata IPL. Tata is doing charitable activity by promoting IPL. They're doing business. They're promoting their brand, they're marketing themselves, they're not doing charitable activities. Sports is a charitable activity, but IPL promotions, IPL sponsorship is not a charitable activity. Or recently, the Indian jerseys are now being provided by Apollo Tires. Apollo is not doing charitable activity by giving jerseys to the players. They're giving jerseys for promoting their brand. Is it CSR or not a CSR? CSR must be done with the intention to bring benefit to the society, not to the company itself. I'm not going to do marketing activities there. Or any kind of money which is contributed to the political parties under section 182. Remember, how much can we donate to political party? Entire company can be donated as contribution. Will they stop it? How much can be donated? Is there any percentage limit? Is it required to be approved by shareholders or board of directors? Without the approval of shareholders can donate the entire company, and shareholders should accept it. That's how the law is drafted. But still, contribution to political party. If I contribute to the government will spend money for society. But if I contribute to a political party, they'll use it for political purposes rather than for society. It will not be considered as a CSR activity. Or I am fulfilling the requirements or obligations imposed by other statutory body. Remember, we had this example on environmental laws. The environmental law of India have asked you to plant say 600 trees. Afforestation is considered as CSR, but if it is done to fulfill the obligations of other statutory body, was it done voluntarily or forcefully? Will it be called as CSR? No. So I have planted 1,000 trees in the process. How much will be CSR out of it? Only 400. 600 was to fulfill the obligation of other statutory body. Rest of 400 is done on a voluntary basis. That will be considered as CSR. Then coming to this unspent and excess spent CSR, we'll go through the chart itself. Remember the chart we have done? Start. We have to spend how much money? At least 2% of the average net profit in the immediately preceding financial year. If you have failed to spend it, if you have not spent the money, it will be called as unspent CSR. If it is unspent CSR, we'll bifurcate them into 2 parts. Is it an ongoing project or not an ongoing project? If it is an ongoing project, what do you mean by ongoing project? A project which is going to be completed within a time span of not exceeding 3 years. Not exceeding 3 years, excluding the year in which the project has commenced. If the project has commenced in the year 25-26, I'm not going to count 25-26. I'll count from the end of that year in which the project has commenced. I'm going to give you a time limit of 3 years in which you have to complete the project, which is considered as what? Ongoing project, where basically it's going to take 1 year or more than 1 year. More than 1 year. If it is not taking more than 1 year, I'm distributing food. Will it take more than 1 year? I'm constructing a water tank, constructing an orphanage. It might take more than 1 year. If I'm constructing a hospital, take more than 1 year. I'm donating blood. It'll take more than 1 year. They'll juice out the entire blood for 1 year. It will happen on a ongoing project or not an ongoing project. So we have two options. Either it is an ongoing project or not an ongoing project. Now start with this category. We have to remember the logics behind it. If it is not an ongoing project and you have not spent it, can I say you have failed to spend it? If you have failed to spend it, does the government believe you? Does the government have trust upon you? Because you are not spending, but the society should still get benefit out of it. Transfer this money. Transfer this money to the government. To where specifically? Fund specified under Schedule 7, or you can simply call it as Schedule 7 fund. Who is transferring? Company. What is being transferred? Unspent CSR amount is being transferred. If it is not relating to an ongoing project, is transferred to Schedule 7 fund within 6 months from the end of the financial year. But if it is an ongoing project, government states that I believe you have not failed to do it. As a nature of the project that it will take more than 1 year. Transfer this money and keep it with yourself. But if I keep it with myself and I will adjust it with my business profits, can I use it for business purpose? I have to use it only for that particular project. Create an escrow account. Transfer it to a separate bank account in a scheduled bank. Within not 6 months. If you take 6 months to just transfer it, when you will spend it? You have to transfer it within 30 days. 30 days from the end of the financial year. This separate bank account, scheduled bank, is called as a unspent CSR account, and you have to spend this money in how many years now? 3 years. If you have failed to spend this money after 3 years, government doesn't trust you anymore. Now transfer this money. Transfer this money to where? Schedule 7 fund within 30 days from the end of the third financial year. But sir, what happens if I have spent more than this 2%? It will be called as excess spend. This excess spend had an amendment. After the amendment, now this excess amount you have spent will be given as a benefit to you. You are allowed to carry forward this amount for the next 3 financial years and set off this whenever the board of directors will pass a board resolution. Always remember, set off will not happen on its own. It has to be done by passing a board resolution. You can carry forward for how many years? 3 years, and you can set off whenever it is approved by the board of directors by passing a board resolution. But during the CSR activity, you might have received a surplus. What do you mean by surplus? Any extra benefit received from the CSR activity. We started distributing food, and somebody randomly on the road came and gave you X amount of money, stating that distribute this also. We got surplus money. Or we opened a hospital, we had a donation box, we had X amount of money dropped into the donation box. It is called as surplus. Can I use it for business purpose? Personal purpose? Withdraw the money? Purchase properties? No, I should use it again for CSR activities. If I've used it for CSR activities, was it spent from my pocket? If it is not spent from my pocket, will it be called as excess spend? No. If it is not spent, I have to spend it. I'll treat it as if it is a unspent CSR. If it is spent, I'll not call it as excess spend. If it is not spent, I'll treat it as a unspent CSR. The two questions we'll have. If it is relating to an ongoing project, it is transferred to unspent CSR account. If it is not relating to ongoing project, I'll transfer it to Schedule 7 fund. Basically treat it as what? Unspent CSR. But if it is spent, will it be called as excess? No. Penalty is also important. Try to understand the flow. Should I spend? If I'm applicable, should I spend? Spending is mandatory or optional? Mandatory, must spend. But if I don't spend, I have to transfer. If I don't transfer, then I will be punished. Punishment is for non-spending or non-transfer. Non-transfer. Company will be punished with an amount of twice the money which is required to be transferred, or rupees 1 crore, whichever is lower. How much amount? Twice the amount which is required to be transferred to this fund, or 1 CR, whichever is lower. And every officer who is in default will be punished with an amount of 1/10th of the amount which is required to be transferred, or rupees 2 lakhs, whichever is lower. 1/10th or 2 lakhs, whichever is lower. Is it fine? Clear? Now come to the point that we are clear with how much to spend. We are clear with where to spend. Start spending the money. Start implementing it. Who will implement? Board of Directors. The Board of Directors, while implementing it, if they have constructed a capital asset, what have been constructed? Can I recognize that as an asset in my books of accounts? It is not going to give me economic benefits in the future. If it is not providing me economic benefits, I cannot account it, but there is an asset that is created. the asset will be held in the name of, I'll give it to the government. I'll give it to the government, asset will be held in the name of the public authorities. Or I'll give it to a Section 8 company who will run that asset. The asset will be held in the name of Section 8 company. Or we have constructed houses. I'll give it to the person who is going to get benefit out of it. I'll transfer the title to such person. The beneficiaries of the CSR projects. Three options if it is a capital asset. Can I account it first? No, I'm not going to get benefit out of it. It will be in the name of the authority or Section 8 company or a beneficiaries of CSR project. If the amount of money which I have is not sufficient to spend, if it is not big amount of money which is bringing impact on the society, I can do something called as collaborative project. Only thing you have to remember, I can do collaborative projects, but each of the company in collaborative projects shall be able to report it separately. Otherwise, if the company reports on a consolidated basis, they'll give wrong impression to the investors, wrong impression to public at large. They are allowed to go for collaboration, but they have to make sure that they are able to report the process of CSR on a separate basis on how much you have spent. The implementation of CSR is having three options. First and foremost, don't always forget, it should be implemented by board of directors themselves. Company itself. If the company itself is not able to implement, we have three options. Either we can create a charitable entity which can be either Section 8 company or trust or a society which is established either by the company itself. But if the company doesn't have enough money or enough resources to establish it by itself, they can do it on collaboration basis. They can establish a company along with another company, or they can establish this Section 8 company along with the government, central government or state government. What have we established? Something called as charitable entity, which can be either a Section 8 company or a trust or a society. Try to understand the flow of process. Board of directors should have spent the money on their own. Because they already have the burden to manage the business activities, it is difficult for them to spend. The board of directors, the company, will transfer money to the charitable entity. Charitable entity will spend the money on behalf of the company. Or second option, I'll give it to the statutory entity. What's the difference between charitable entity and statutory entity? It is completely established by the government. It is established by an act of parliament or the state legislature. Here it was a company establishing along with the central government or state government, but second case it is established directly by the parliament or state legislature, completely by the government. It is called as statutory entity. And the last, this is important, charitable entity with a track record of 3 years. This is a charitable entity which is not established by me. It is a charitable entity which is already existing in the market. I'll give money to such Section 8 company, trust or society, and they will spend money on behalf of me. I am not a part of this entity. Are you getting the difference in the first and third point? First logic, I was a part of it. Company was a part of the charitable entity. Third case, company is not a part of it. It's a random charitable entity which will spend money on behalf of the company. But point is, if the company is not a part of it, there's a chance that they'll misuse the money. I have to verify, check and appoint such charitable entity which is genuine in nature. Hence, to be tracking whether it's genuine or not, they must be having licenses or exemptions under section 1023C or otherwise section number 12A as trust, or they are having approvals under section number 80G. If they are having those benefits, can I say the other authorities have already verified them? Now they are a little more genuine as compared to the normal section 8 companies. And they should have a track record of how many years? At least 3 years in the similar activities. While they are spending money, how much money is spent for my CSR activity? I should have a clarity on it. Hence, they have clearly mentioned the CSR activities can be conducted by such section 8 company which is exclusively involved in CSR activities. If it is involved in other activities other than CSR, there can be a chance that they divert money to other activities. I don't want that to happen. I want a charitable entity which is exclusively into CSR. Or if it is not exclusively into CSR, at least create a corpus fund. Corpus fund can be used, again, escrow topic. Corpus can be used only for a specific purpose, only for CSR mentioned under schedule number 7. But all things changed in 1st of April 2020. Why? Because of COVID, lot of people stated that we have done charitable activity. But there was no proof that they have done actual charitable activities. The government got fed up of it and the government stated that I'll introduce a concept called as registration number for CSR activities. Any entity today in the market, if they want to do CSR activities, they have to make an application to the central government. If central government is satisfied, they'll provide you a unique registration number, a CSR unique registration number, because with this registration number you can now conduct CSR activities. If you are, try to understand, you are a section 8 company but not having this unique number, can you do CSR today? Not allowed, you must have it. So how to make an application? Again, this was newly introduced, remember? If it is newly introduced, we are still under chapter accounts of company, the form numbers are AOC. But because this was newly introduced, it was not following the regular chain of AOC. They have given a new form for it altogether separately. It is not a separate chapter, but there is a separate form for section 135, CSR 1. Electronically filed, which is already verified by CA, CMA or CS in practice, filed with the central government. Once central government verifies it, if central government is satisfied, they will provide you the unique CSR registration number. That's it. More annexures are not required for you. Reporting is important. You can expect a question out of it. Reporting format. What's happening under reporting? I'll do it from the material itself. What's happening in the reporting process? CSR reporting. And again, this is something you can go through from material. COVID-19. Everything relating to COVID-19 is accepted as CSR, either in category 1, that is healthcare, or category 12, which is notified disasters, or if it is creating awareness, it will fall under category 2, education. Usual answer will be, it will always be category 1 and 12, healthcare and notified disasters. If not, it can also fall under education. If you are creating awareness, it can also fall under category 2. Otherwise, simple one word answer, CSR is always a, COVID-19 is always a CSR activity. And IFSC companies, remember IFSC? They are given privileges. They have given privilege stating that for the first 5 years of your incorporation in India, you don't have to apply. Even though you are applicable under section number 135 subsection 1, CSR will not apply for how many years? 5 years from the date on which you have commenced business in India. Reporting. This is important, Amma. This can be a question asked. Reporting is very niche topic. Try to understand. Reporting is something which is applicable only when you spend money. You spend money only when you are applicable under CSR. But not every company which is applicable under CSR is required to do reporting. Only those companies which are having an average expenditure of more than 10 crores in the 3 preceding financial years. How many? What expenditure? Average. I'm not talking about your net profit amount. This is a very huge company. They have an average CSR expenditure of more than 10 crores. Just imagine. This 10 crores is 2% of their net profits. It is not their net profit, it is average CSR expenditure. Average CSR expenditure of more than 10 crores. In the preceding how many years? 3 years. That means it's a very huge company. They are applicable with reporting. Once they are applicable, they'll not do reporting for every project of CSR taken up. They'll do CSR reporting of such projects which have a cash outflow of more than equal to 1 crore. But the first 2 points to remember. Reporting, is it applicable to every company? No. Reporting is applicable to such companies which are having a CSR expenditure. Average CSR expenditure of more than 10 crores in how many years? Preceding 3 financial years. And they'll do CSR reporting only for such project which is having a cash outflow. Cash outflow of how much? Expenditure of 1 crore or more. More than equal to 1 crore. Be very careful. This here it is more than 10 crores average expenditure, but they'll do impact assessment, the reporting only for that project which is having an expenditure outflow of how much? More than equal to 1 crore. But try to understand. Sir, I have implemented the project yesterday. Yesterday was the inauguration. Today morning, will the project be still intact? Still the project will be shining. It will be still having the new implementation process. Will not find mistakes in it. When will you start finding mistakes in a project? After a certain time or just after the inauguration? I inaugurated yesterday. Today everything will be perfectly fine. Everything will work perfectly fine. The mistakes or the problems will start arise after a certain time of implementation. Certain time of usage of such project, I'll get problems in it. Hence, reporting states that will not do the impact assessment right after implementation. It should be at least 1 year old project. If I'm doing impact study today, I'll do impact study of such projects which got completed not earlier than 1 year before the impact study. There should be how many years old at least? 1 year. Basically 1 year gap must be there. Putting in simple words, if the project is completed today, can I do impact assessment tomorrow? I have to wait for After 1 year, I'll do the impact assessment. It has to be not less than 1 year before the impact study. It shall be more than 1 year. That means it should be a gap of more than 1 year there. But who will do this impact assessment? You will write your grand test exams and you will correct your grand test exams. How many marks will you get? How many marks are you getting on daily papers? Daily exams? 25 to 25? Obviously, nobody is correcting it. So you correct your own paper. How much are you getting? 25. If the impact study is done by the company itself, they'll obviously boast about themselves. This study must be done by independent third party agency. A third party shall come and do the impact study. But if third party is coming, will they come free of cost? They'll charge money. That money is also a burden on the CSR activities again. Then the logic stated that you can spend money but maximum of 2%. 2% of the total CSR expenditure or rupees 50 lakhs, whichever is higher, not lower amount, shall not exceed 2%. Maximum of 2% or 50 lakhs, whichever is higher. Whichever is, this limit can be asked as a question. What is the maximum you can spend for CSR reporting? 2% of the total expenditure or 50 lakhs, whichever is higher. We also have one more limit called as administrative expenses. While doing CSR activities, we have to go through certain administrative expenses, which is inevitable. Try to understand. Without administrative expenses, we cannot implement CSR. But this administrative expenses we incur is not directly bringing benefit to the society. Transportation cost from my company to the factory or the place where I am conducting CSR. The transportation cost, is it bringing benefit to society? But without the transportation, I cannot actually conduct CSR. There will be certain administrative general expenditure that will incur. But can the company state that out of the 100 crores of budget I had, I spent 95 crores on administrative expenses? Then what did you bring benefit to the society? You can give, you have to spend administrative expenses, I agree with it, but you can spend a maximum of 5%. 5% of your total expenditure. But there are certain activities which are not forming part of admin expenses, which are forming part of the CSR project exactly. Designing a project is a part of CSR. Implementing the project, part of CSR. Monitoring the project, part of CSR. Impact study, the reporting format is also part of CSR. These 4 activities will not be called as admin expenses. That will be forming part of. They will ask a question on this. They have spent X amount of money for admin expenses, including the monitoring money of X amount. That monitoring shall be or shall not be a part of admin. I'll remove that, then I'll count 5%. Are you getting the logic? The question will be asked, they will draft this question in the near future in this manner. The company has spent a total admin expenses of 5 CR. Out of this 5 CR, 1.5 CR was spent for the purpose of impact assessment. Is the admin expenses spent by the company within the limits given by CS Companies Act? What should I do? I should eliminate this impact assessment because it is forming part of the CSR project, not of admin expenses. How much is admin expenses exactly? 3.5. Now check the limit whether it is satisfied or not. There will be questions on this part. That's your CSR activities. Will be very, very important. 90% they'll ask questions on CSR. CSR internal auditor is one of these 2 questions. Will definitely show up. CSR will be very important. Fine. Any doubts in this? Let's start with the next chapter, chapter number 10. Audit and auditors, which will be ranging from section numbers 139 to 148. The last chapter which we have done was accounts of company, which was chapter number 9, which was ranging from section numbers 128 to 138. Now we are going to continue the process with section number 139 to 148, chapter number 10. This chapter basically talks about how an auditor is appointed, how we fix the remuneration of auditor, how the auditor conducts his audit, how he signs the audit report, how he gives it to the shareholders, how the penalties are imposed upon him, and how he conducts a cost audit specifically. To be honest, entire chapter is focused on everything about an auditor. We'll learn how to appoint him, we'll learn how to select him, we'll learn how to remove him, we'll learn everything about auditor in this particular chapter. And majorly there are a couple of sections which are important for exam perspective. Let's start with section number 139 and have the very basic answer. Auditor is always appointed by the shareholders in the annual general meeting by passing an ordinary resolution. This was the original process, but the problem in this process was the shareholders do not have knowledge on whom to appoint as an auditor. Hence, the selection process, not appointment number, selecting who can be acting as auditor will be done by the board of directors who have better knowledge as compared to the shareholders. So what happened here? The process remained the same. Appointment is still done by shareholders, but the selection process is done by the board of directors. But we are not expecting every single board of director to have knowledge about audit process or knowledge about auditor. We segregated certain set of board of directors who have financial literacy, who have more knowledge on financial aspect or audit aspect. We call them as audit committee. Now the process got delegated to the audit committee. Originally speaking, it should have been done by the shareholders. Because they did not have knowledge, they gave it to the board of directors. Because the board of directors had no much knowledge about it, they delegated their powers to the audit committee. So the process technically or practically speaking will start from the audit committee. Audit committee will do their research and will find a particular person who is qualified as an auditor. Qualified, before we start with section 139, we have to give a brief about section 141. The person we are selecting, who is selecting this? The audit committee. If the company does not require to appoint audit committee, then the selection, because audit committee is not required and not appointed, the selection will be done by board of directors. Either the audit committee or board of directors have to check whether this person is eligible or not under section number 141 subsection 1 and subsection 2. If these persons are found to be eligible under these sections, then we'll check whether these guys are disqualified or not under section number 141 subsection 3. If they are eligible under 141 subsection 1 and 2 and they're not disqualified under section number 141 subsection 3, then we'll select such kind of person. But selection process is not that easy. Try to understand this. As soon as you've completed your chartered accountancy, you got your certificate of practice, where Tata Group will come to you and ask for audit. Are you eligible? Are you disqualified? No. But will they come and ask you? If you apply to Tata Group, will they accept your application? No. Why? You don't have enough experience. You don't have the right team. You don't have the resources to conduct an audit. It is not only about the qualification. It is not only about the disqualification. It's about how well you can handle the audit. This all has to be done by the audit committee or the board of directors. Because who does not have knowledge? Shareholders. But don't forget the fact it is appointed still by the shareholders. Start with this chart of selection we have done, where we'll start with the difficult part first. If the company is required, very careful with this word, it is not a company having audit committee, it is a company which is required to appoint audit committee. So what happens if it is a company which is not required to appoint audit committee, but they have voluntarily appointed audit committee? We don't give importance to audit committee. Process will still start from the board of directors. The words are very carefully used. A company which is required or not required to appoint a audit committee. We'll start with the difficult part again. If the company is required to appoint audit committee, the process will start from the audit committee. They will select, they will choose a person and they will recommend it to the board of directors. The board of directors have two options. Either they can agree or disagree with the recommendations given by the audit committee. If at all they agree with the recommendations, the board of directors will forward the recommendation to the shareholders for appointment. But if at all the board of directors are not satisfied with the selection that is done by the audit committee, they will send their recommendations back to the audit committee, asking the audit committee to reconsider their recommendations, citing the reasons for such disagreement. What is the proper wording, Sama? They'll send it back to whom? Audit committee, asking them to do what? Reconsider the recommendation, citing, providing the reasons for disagreement. Now the ball is again in the park of audit committee. Now audit committee has two options. Either they can agree with the reasons given by board of directors or disagree with the reasons. Now try to understand it. Who has more knowledge, audit committee or board of directors? Audit committee, but who has more power? Board of directors. Now audit committee states that board of directors did not understand my recommendations correctly. My knowledge is greater than them. I disagree with the recommendation given by them. Or I can also agree with the reasons provided by the board of directors. We'll take the easy route first. If it is agreeing, who agrees? Audit committee agrees with the reasons provided by the board of directors. Then audit committee states that I will trash this recommendation out, but we still have to appoint an auditor. we'll start the process again. We'll give a new recommendation. We'll give a new recommendation to the board of directors. But if at all the audit committee disagrees, they will send their original, the same recommendation back to the board of directors stating this is the person whom we want to be appointed as an auditor. Who is still stuck with the same recommendation? Audit committee. Now the board of directors ego got hurt. I've sent it back stating that I don't agree for it, and you have sent the document same again to the board of directors. Board of directors will put this recommendation aside and they'll make their own recommendations to the shareholders. End of the day, the process will always end in the AGM by passing a ordinary resolution appointed by the. But this all background that is happening is not known to the shareholders. This is a concept called as manner of selection. We will select a person. Once the selection process is done, let's start appointing the person. Appointment, I hope you guys remember the section numbers properly. We always start the appointment logic and always learn it conceptually from section number 139 subsection 1. Appointment of a subsequent auditor of a which company? Non. Should I show the chart otherwise? Remember the chart we have done? Auditors topic. Appointment process. Is this visible? Or should I show the chart on the material? Is it fine, Amma? Sure? So, we will divide the appointment process into two parts. Either we are discussing about appointment of a first auditor or subsequent auditor. Though the chart is drafted in this manner, we will always start discussing from where? Subsequent auditor of a non-government company. That's our basis foundation for every other concept. From this is what we have drafted the rest of the logics. If you remember in the class, the original topic we discussed was this. Then after that we had made certain specific special scenarios and modified this concept into multiple aspects. It was modified. The rest of it was not created as such. It was modified from the original topic. What is the original topic? Which auditor are we talking about? Subsequent auditor of a non-government company. Be a little quick on the concept here. Section number 139 subsection 1 states appointment of a subsequent auditor of a non-government company. Appointment of subsequent auditor of non-government company given under section number 139 subsection 1 simply states it is appointed by the shareholders in the AGM by passing a ordinary resolution. But if at all it is a government company is defined under section number 2 clause 45, which states not less than 51% of paid up share capital is held by the government. If it is held by government, who will have the majority shareholding? Government. What do you mean by government? It can be either the president or the governor. Now, indirectly speaking, even though we conduct an annual general meeting, who will pass that ordinary resolution? Government. But does the government have enough time and resources or knowledge to come and appoint? Then they have appointed a separate authority and delegated their powers to appoint to that authority. What was that authority? CAG. Who appointed CAG? President directly appointed the CAG. Now start with the government company point. Appointment of subsequent auditor of a government company is appointed not by the president, not in the AGM, not by shareholders. It is appointed by the CAG. He doesn't need or require to wait till the AGM. He'll appoint outside the AGM within 180 days from the commencement of the financial year, not from the end of financial year. It is commencement from the financial year, not closure. It is from what period? Commencement. From the start of the financial year, we will appoint within 180 days. This is 139 subsection 5. Then going on to section 139 subsection 6, talking about a first auditor of a non-government company. The problem in this logic was the company has not yet conducted its first AGM. To conduct the AGM, we have to conduct an audit first. But to conduct an audit, we have to appoint an auditor. To appoint auditor, we have to conduct an. Because this loop will never continue or never fulfill the logic, we created a new process for them stating that because the shareholders are not available, because we are not able to conduct the AGM yet, it will be now delegated to the board of directors. The board of directors will appoint within 30 days from the date of registration. If the board of directors fail to do so, then it will be appointed by the shareholders in the AGM. There's an emergency in the company. It will be appointed by the shareholders in the AGM in the next 90 days. What's the first logic? Board of directors within 30 days from the date of registration. If not, the board shareholders in the EGM by within how many days? Next 90 days. But if at all it is a government company, they any which ways don't have to wait till the AGM. The appointment will be always done by the CAG. Because it's in government office, it will take more time. They have given them a time period of 60 days. 60 days from the date of registration. If the CAG fails to do so, then the powers are delegated downwards to the board of directors. Board of directors will appoint in the next 30 days. If board also fails to do so, there is an emergency in the company. Will conduct an EGM. It will be appointed by the shareholders in the next 60 days. What's the wordings here? Give me all processes. Give me only one word answers. Fast. Section number 139 subsection 1. This is the order in which you have to learn. 139 subsection 1. Appointed by the shareholders. I hope you are able to imagine which auditor, which company, then you will start answering it. Who will appoint? By passing a. That happens in the AGM. Then we'll learn section number 139 subsection 5. Ready? Who will appoint? CAG. In AGM or outside the AGM? Within 180 days from the commencement of the financial year. Then we'll learn section number 139 subsection 6. Appointment of a first auditor of a non-government company appointed by the board of directors within 30 days from the date of registration. If the board fails to do so, there is an emergency. It will be appointed by the shareholders in the EGM by passing a ordinary resolution, but within next 90 days. But if it is a government company, it will be first appointed by the CAG within 60. If not, board of directors within the next 30. If not, shareholders in the next 60 days by conducting an EGM. But talking about tenures, I'll only discuss on section based on section numbers. 139 subsection 1. An auditor who is appointed by the shareholders with their own liking and with their own intentions, he'll continue in the office for a period of 5 years. He is appointed in the first AGM. He'll continue for 5 years. He'll continue until the conclusion of the 6th AGM. But when it comes to government company, CAG states that I'll not appoint a person for multiple years. I'll check his audit. I'll verify his audit every year. If I'm satisfied, I'll reappoint for the next year. Otherwise, I'll appoint a new auditor. That means auditor will change on a yearly basis when it comes to a government company. CAG will appoint 1 year or every year? Every year they'll appoint until the, hence his tenure will be until the conclusion of next AGM. But talking about a first auditor, because they were never originally appointed in the original process which we were discussing, it was temporarily appointed. He'll always work until the conclusion of which AGM? First AGM. That's the appointment process. There are a lot of questions on this appointment process itself. It is not difficult to remember. If you understand the logic, it is easy, but there are a lot of questions on this topic, especially when it comes to government process. There are a lot of questions drafted. Very, very important with subsections. If you're able to write those subsections with the rightful wordings, you'll definitely get full marks and you'll also create that impression with the examiner. Then let's talk about the procedure for appointment here. I'll go back to the material. We have to appoint an auditor. The auditor is appointed and selected by the audit committee, but appointed by the shareholders. Now, end of the day, it is a legal contract. A contract entered between the company and the auditor, where auditor has promised to provide services. We, the company, have promised to pay remuneration. This contract to be entered, we have learned this from the very beginning of foundation level. A contract to be entered, there must be how many parties? 2 parties. One is the company, one is the proposed auditor. And these 2 people have to enter into agreement with coercion or with consent. Consent. We have learned this. One of the essentials of contract is to have free consent. Both of them have to give consent. How does a company give consent? By passing an ordinary resolution. How does the auditor give a consent? By giving a written notice. A written consent will be provided by the auditor, and we always have believe this logic. Which is easier to obtain? Auditor's consent or company's consent? Auditors. Because for the company, you have to conduct an AGM, call for a notice, conduct a meeting, put the motion into consideration, then pass a resolution. It will take time to do it. If at all, after the efforts are put in by the company, the auditor does not agree, the entire efforts of company will be wasted. So we have always done this for all appointment processes. We'll first obtain a written consent of the auditor, then we'll discuss about appointment or not appointment in the AGM. So first we'll obtain his written consent. When is this written consent obtained? Before or after appointment? Even before the appointment. Along with this written consent, he should also give a certificate declaring about himself, declaring that he is eligible under section number Give me section numbers proper. Eligible under section number 141 subsection 1 or otherwise subsection 2, and he is not. Disqualified under section number 141 subsection 3. Then his appointment is as per the terms or provisions of the Companies Act. His appointment is within the limits given by Companies Act. As an auditor, you can conduct audit, you can act as an auditor for how many companies? 20 companies at the same point of time. If you are appointed for 21st company, you are qualified or disqualified. These limits is given under, if you remember, section 141 subsection 3 clause G, one of the important clauses, where it states that if a person is appointed as an auditor for more than 20 companies, he is disqualified. Up to 20 companies, it is allowed or not allowed? Allowed. And if there is any professional misconduct pending against such person, is it proven or pending? If it is pending, can I still appoint? Yes, but there's a risk that that case which is pending today might have been passed as an order against the auditor tomorrow. If it is passed, so can he continue? We will remove that person. That means the audit will be abruptly stopped in between. It will be difficult for me. I'll consider, I'm not stating that I'll not appoint, I'll consider all the proceedings which are pending against him. If I am still satisfied that he is the right person, I can appoint. But I have to consider all the proceedings which are pending. But do I know his proceedings pendings? He has to give a declaration. He has to give a declaration of all the proceedings which are pending against him for professional misconduct, and he has to disclose that the proceedings which he has disclosed are true and not true and fair, true and correct. Absolute correction, absolute accuracy must be maintained in it. We disclosed everything correctly. Once the auditor has been appointed in the general meeting, who appointed them? Shareholders in the AGM. Now try to understand. The auditor was never present in the AGM. He was not part of the company yet. Does he know that he was appointed? Let's intimate him. The company has to intimate it to the auditor and file it with the ROC. But special point, file it with ROC within how many days? 15 days. Then we had the topic of rotation. Rotation of auditor was newly introduced under Companies Act 2013, which states that rotation topic today is not applicable to every company. It is applicable only to certain companies. It is applicable to every listed company and an unlisted public company if it is having a paid up share capital of more than equal to 10 crores or outstanding borrowings from banks or financial institutions or other companies is more than equal to 50 crores. What are the two conditions? Paid up share capital more than equal to 10, borrowings of more than equal to 50 crores. If any one of these conditions are satisfied, they have to apply the concept of rotation. But if at all you are a unlisted private company, you still are applicable if you are satisfying two conditions, same two conditions, paid up share capital and borrowings, but this time the limits will be 50 and 50. Limit for public company will be 10 and 50. For private company will be 50 and 50. If they are applicable, they have to apply tenure of an auditor. An individual as an auditor can act for one term which shall not exceed 5 years. A firm can act for a period of 2 terms where each term shall not exceed 5 years. After completion of their first or the second term respectively, they have to go through a concept called as cooling period. In this cooling period, they must be distancing themselves from the company. They must not be associated so that they are not losing their independence. They shall not be associated with the company or any of the group companies for a period of 5 years, either directly or indirectly. No connections must be there. Distance yourself completely. Once you are distanced for a period of 5 years, can I say you lose all the connections? If you have lost all the connections, can I say you have regained your independence? Can you come back and act? Everything will be reset. You will be given 1 term or 2 terms respectively back again. Cooling period for how many years? 5 years. But if this cooling period of 5 years was given, can I say auditor will lose his job? He has to find a new client. Then people got smart and they have started to find loopholes in this topic of 5 years. Then companies states that I'm smarter. If you found loopholes, I'll come and cover up those loopholes. They have created 3 specific note points for the same rotation topic. Start with the first logic. If it is a partnership firm which has a common partner, if they have common partner, the other partnership firm will also be disqualified. They'll also go through a cooling period for 5 years. Try to understand. Firm A was appointed as an auditor. They have completed their 2 terms. Now firm A has to go through cooling period. Along with firm A, firm B will also be applicable with cooling period because they have a common partner. But there's still a loophole in this process. The common partner has to be verified at what point of time? On the date of appointment. The wordings used are as on the date of appointment. If you have a common partner with that other audit firm which has recently completed their audit, you're also disqualified. Disqualified for how many years? 5 years. Same cooling period will apply. Second category, we have two firms. This time firm A and firm B are not having any common partners, but this firm A and firm B are working under the same network. Say assuming all of them are registered under Deloitte, a single network. Deloitte will have same procedures. We have discussed this extensively in the classroom. Multiple companies, multiple firms of India are getting registered under the brand name of Deloitte. Who will conduct the audit? Practically speaking, an Indian firm, but it will be done in the brand name of Deloitte. They share brand name, they have same network, they have same resources, they have same operations. End of the day, Deloitte is a company which is gonna regulate the audit process, but audit is actually done by a firm. If they are falling under the same network, they'll be following the same procedures. Are they losing independence? Hence, they are not allowed to act as an auditor. And the last point was, if an engagement partner retires from a partnership firm and joins another partnership firm. This is also very smart. Mr. S here has retired and joined firm B. Now, after his retirement, he is no more a part of firm A. Now he is a part of firm B. Can I use the word common partner? I cannot use the word common partner. There is no common partner. He exited from a partnership firm. But they also created a rule for this, stating that if an engagement partner retires from a partnership firm and joins another partnership firm, that other partnership firm will also be disqualified. But be very careful. We are talking about only such partner who acted as an engagement partner. Sir, I am a part of a partnership firm, but I have never signed it. I have never acted as an auditor for that particular company. Can I be appointed? Yes. But if it is an engagement partner, then you are not allowed. That's your entire rotation topic. That should be enough. This is something interesting logic, which is again given as a recommendation. They have used the word may. What do you mean by may? Recommendatory or obligatory? Recommendatory. They have used the word may. The company may do so. We are not rotating the entire auditor. We are rotating a partner within the audit firm. This is a rotation of auditor or rotation within the auditor? Within the auditor. Within the same auditor, we are not changing the auditor. The same firm will act as auditor, but to maintain more independence, the first couple of years, Mr. A, Mr. P will conduct the audit. Then after 2 years, to maintain independence, we'll rotate it and Mr. Q will conduct the audit for next 3 years. This will maintain more independence. Are you getting the point? 10 years is still a long time. A firm being appointed for 2 terms, 10 years is still a long time. To maintain better independence, we'll have rotation of auditor or rotation within auditor. This is a logic called as rotation within the audit firm. Same audit firm but will rotate the partners within it. Or this is an interesting topic, joint auditors. Usually joint audit is appointed only when there is a complications in the business, where the business transactions are complex in nature. If it is complex in nature, can I say you as an auditor will not understand it on the day one on which you are appointed. If it is a traditional trading business, traditional manufacturing business, I'll understand it from the very day. But if it is a complex business and we are appointing joint auditors, it will take time for them to understand the business. Hence, they have stated that appoint joint auditors in such a manner that not all joint auditors will retire in the same year. If say we have auditor 1 and auditor 2, the auditor 2 will retire after assuming 4 years, auditor 1 will retire after assuming 5 years. Now auditor 1, after he retires, will replace him by appointing another auditor, and this another auditor appointed, so we will call him as auditor 3. Auditor 3, for the very beginning of his office, he'll work along with auditor 1. Then can I say auditor 1 will pass on his knowledge to auditor 3? Whatever experience he has gained, whatever understanding he has for the business will be forwarded to auditor 3. This is possible when both the auditors are retiring in the same year or different years. So the joint audit topic stated that if you are appointing a joint auditor, appoint them in such a manner that not both the joint auditors will retire in the same year, so that a continuing auditor will forward his knowledge and experience of the business to the new auditor. What will happen after this? He'll retire after 1 year. Auditor 1 will retire after 1 year. By the time, who has knowledge about it? Auditor 3. Now we will appoint another person. Say we are appointing here auditor 4. Does auditor 4 have knowledge? Where will he get the knowledge? auditor 3. This cycle will continue so that the complexity of business is eased for the auditor to understand the business. This is in case of which auditor? Joint auditor topic. This is appointment we have discussed. Again, one of the most important topic, casual vacancy. Section number 139, subsection 8. Very, very important. Forget about the wordings, just directly come to the chart. Casual vacancy under section number 139, subsection 8 arises when the auditor vacates his office for whatsoever reason before the expiry of his term. Before the expiry of term, before the audit is completed, if he vacates from the office, we have to fill his vacancy. But the problem is, to fill the vacancy, he might not vacate exactly before the AGM so that shareholders will come and fill it. He can vacate at any point of time. Say, Jagu, one of the auditor of the company, have died in the month of October. Do we have AGM conducted? We recently, couple of months back, we conducted AGM and he died in the month of October. It is whose default? Jagu's default. He should have planned his death correctly. He should have died at what point of time? Just before the AGM, so that we can come back and appoint a new auditor who will be able to appoint shareholders. But because of his default, company doesn't have an auditor now. Who will fill the auditor? Because shareholders are not available, the auditor will be appointed by the board of directors. Are you getting this logic first clear? Shareholders are not available. Hence, the appointment will be done by board of directors. Now, if board of directors are appointing, there's a high chance that they can appoint the person whom they like. They can appoint a person who will be working in their favor. Not to make sure that they're misusing this law, they've created an extension stating that if at all the auditor's vacancy arises because of resignation, we highly believe that the resignation was forced by the board of directors. Can we believe the board of directors now? No. If we cannot believe the board of directors, but we don't have a choice left, it will be still appointed by the board of directors, but it has to be ratified. Ratified by the shareholders within the next 3 months by conducting an general meeting. Be very careful, this is not AGM, general meeting. If within 3 months we are able to conduct AGM, we'll do it in the AGM. Why to spend extra money and conduct another AGM? If within this 3 months AGM is not going to be conducted, then I'll do it by conducting an AGM. Give me the basics here. If at all casual vacancy arises and the reason for casual vacancy is resignation, I have a doubt on the board of directors. They might have forced their auditor to resign. Then it will be still appointed by board of directors within 30 days of such vacancy, but it has to be ratified by the shareholders within 3 months in the next general meeting. And again, all the casual vacancy topic is temporary. Hence, he'll be working only for 1 year until the conclusion of next AGM. Whatever next AGM is, for 3 months, 5 months, 7 months, he'll work only for till next AGM because it is temporary in nature. Sir, what happens if the auditor auditor vacates, but it is not because of resignation? Do we doubt the board of directors now? No. It was a genuine category. It might have been death. It might have been removal of auditor. It might have been an unsound mindedness of auditor or some other reason where the board of directors are not blamed off. If they are not blamed off, we don't have to doubt them. It will be appointed by the board of directors within 30 days, but there won't be any logic of ratification. Ratification arises only when the vacancy arises because of resignation. But when you talk about government company, this is an interesting logic to remember. If you talk about government company, even though casual vacancy is created, can I say we don't have to wait till AGM? If you're not required to wait till AGM, we are not required to wait for the shareholders. CAG can appoint. Even though it is for resignation, try to understand, even though it was a resignation, even though actually it was forced by the board of directors, it will be still filled by. That means board of directors cannot misuse their position. Hence, we will not even ask whether it is resignation other than resignation. Why are we not asking? Because board of directors are not filling it. Who will fill the vacancy? CAG. CAG will fill the vacancy within 60 days or 30 days. Originally, CAG will take its own time to do it, but here it is casual vacancy. The audit is in between. The audit is abruptly stopped. We don't have much time to complete the audit. We also have to act within 30 days. But if CAG fails to do so, then it will be appointed by the board of directors within the next 30 days. But tenure will always be till the next AGM. Once a person is appointed as an auditor, if rotation topic does not apply, can he reappoint? Yes. When will he be able to be reappointed? If he is disqualified or not disqualified? If he is not disqualified, we can reappoint. Or if he has, when will he be reappointed? If he gives his written consent. But if at all he provides his written unwillingness to act as auditor, give me the proper words, don't read it, you will get confused, just listen to me. If at all he gives his written notice providing his unwillingness to act as auditor, can we force him to act as auditor? Now draft the sentence. If he does not give a notice of unwillingness to act as auditor, two negative points among. He does not give a notice expressing his unwillingness to act as an auditor, that means he is still willing to act as an. Can he be reappointed? When can he be reappointed? He has not given his unwillingness. That means he is indirectly giving his willingness. Can he act as an auditor? Yes. Or otherwise, this is something which is linked with 140, where no special resolution has been passed expressly providing that the retiring auditor shall not be reappointed. Are you clicking any bells? 115, special notice is received expressly providing the retiring auditor shall not be reappointed. If that special notice and special resolution have been passed, he cannot be reappointed. That's your section number 139. One of the biggest section. I mean, half of the chapter is section 139. Biggest section, but any doubts on that? Will be easy, Amma. It is easy section, but it's a little hefty section. Coming to section 140, always remember, before we start with section 140, you have to go through this chart first, get understanding of all subsections, then we'll start it. Don't start it directly. Section 140 is divided into 5 subsections. Section 140 subsection 1 talks about removal of auditor before the expiry of his term, where the removal is instigated by the board of directors. But section number 140 subsection 4 also talks about removal of auditor, but it is instigated by the shareholders, removed by the shareholders. Now if you observe both of them together, 140 subsection 1 and subsection 4, both the cases removal is still done by the shareholders, but 140 subsection 1 it is instigated, started by the board of directors. But the idea, if it comes from the shareholder, will apply section number 140 subsection 4. Both the, what's the common point in both the cases? It is still removed by the shareholders in the general meetings. Start with section number 140 subsection 5. And again 140 subsection 5 also removal again, but this time who will remove it? NCLT. NCLT stated who are shareholders, I'll have more power to it. Originally speaking, who has the right to remove? Shareholders. But NCLT states that I don't care, I'll pass an order. Who is passing order? Removal of auditor by the NCLT. Or subsection 2 talks about resignation of an auditor. Start with subsection 1, we'll do it from the notes. Start the removal process. Section number 140 subsection 1 is a process where auditor is removed by the shareholders, but it is instigated by the board of directors. Who had the idea to remove? Board of directors. They'll conduct a board meeting, they'll pass a board resolution. Once a board resolution has been passed, they'll make an application to the central government. Now it is delegated to RD, but making application to the central government within 30 days from the date on which you have passed a board resolution. Now the central government, will they remove the audit or will just give an approval to conduct the meeting? Approval to conduct the meeting in which we can remove the auditor. Why is this all process added? Why this central government logic is added? To protect whom? Auditor. Why? The auditor might have been intentionally wanted to be removed by the board of directors. Auditor always works against the board of directors. There's a chance that board of directors want him to be removed intentionally. Hence, the Companies Act has added an extra step, extra layer of protection, stating that don't directly conduct general meeting and influence your shareholders. First, make an application to the central government. If central government is satisfied with the reasons you have provided, central government will give you an approval to conduct the general meeting in which you can pass a resolution to remove the auditor. So what's going to happen? We'll first pass which resolution? Board resolution. Make an application within 30 days to the central government. If central government is satisfied, they'll give you an approval to conduct the general meeting. In this general meeting, we have to conduct the general meeting within 60 days. In this general meeting, we will first give the auditor an reasonable opportunity of being heard. Let him also speak out what he wants to say about the allegations. Once a reasonable opportunity is given, then we'll pass a resolution. Technical words, this is done in GC already. If a person has a power to appoint, the person also has the power to suspend or dismiss or remove or amend. Now same logic apply here. Who had the power to appoint? Shareholders, who will have the power to remove. If the shareholders had the power to appoint by ordinary resolution, they'll also have the power to remove by passing ordinary resolution. But under section 140 subsection 1, to protect the auditor, we have escalated and increased it to a special resolution. Remember, general topic is he should be removed by passing ordinary resolution. But to protect him, we have increased the ordinary resolution to a special. We have three safeguards for the auditor under this section, under this subsection. What are the three safeguards? First, approval from the central government, or giving him the reasonable opportunity of being heard, or passing of a special resolution. Originally, we have to pass which? Ordinary. This usually will not arise in 140 subsection 4, where it is instigated by the shareholders. Resignation process, very quick on it. Can the auditor resign? Appointment as an auditor is voluntary or forced? We have obtained his written consent. If the appointment is voluntary, the point to continue as an auditor is also voluntary. He can resign at any point of time. But once he is resigning, he has to come and intimate it to the company and ROC. Who should intimate? Auditor has to make an application to the company and the ROC, a document called as notice of resignation. Document called as what? Notice of resignation. This notice of resignation will be in form number ADT2, which has to be filed indicating the reasons for his resignation. What has to be mentioned? His reasons. If he fails to provide his reasons, he'll be punished under section number 140 subsection 3. He has to resign under section number 140 subsection 2. If he fails to resign or provide those documents correctly, then he'll be punished under section number 140 subsection 3. Give me basics here very quick. Who is filing this document? To whom? Company and ROC. What is the document being filed? Notice of resignation, which will be in form number ADT2, which has to indicate the reasons for his resignation. Must be filed or may be filed. And if you're talking about ROC, it has to be filed within 30 days. 30 days from the date of his resignation. Once it is given to the company and ROC, we are satisfying the procedure. If you fail to give it within 30 days, or you fail to provide the reasons, you will be punished under section number 140 subsection 3. But if at all it is a government company, along with company and ROC, you will also file it with CAG. Entire process is same ADT2, but it will also be given to only to CAG or also to CAG. So I'll file it with three people now: company, ROC and CAG. 140 subsection 3 is not part of your syllabus, but try to note it down. They've asked it in the last couple of attempts back. They've asked it. Last attempt, if I'm not wrong, they've asked it. So note it down. If the person fails to provide proper notice or reasons under section number 140 subsection 2, he'll be punished under section number 140 subsection 3, where he'll be punished with an amount of 50,000 rupees or his entire remuneration, whichever is lower. What's the point? 50,000 rupees or remuneration, entire remuneration, whichever is lower. Along with this static penalty, he'll also be punished with an amount of rupees 500 per day. 500 per day, subject to a maximum of 2 lakhs. It used to be 5 lakhs, they got amended to 2 lakhs. But this was not part of syllabus. This is something we will not find in the ICA material, but they've asked a question on it. There was a penalty for the resignation process. So note it down. Is it fine? Section number 140 subsection 3. Just note the number somewhere. Sentence is not required for you. 50,000 or remuneration, whichever is lower. Along with it, rupees 500 per every day of default, subject to a maximum of 2 lakhs. Section number 140 subsection 3. Fine. Can we move on? Aditya. Done? Chalo. 140 subsection 4. Quick. I am not gonna explain the timelines here. We will directly go through the wordings. Whose intention to remove the auditor? Shareholders, where the process starts under section number 115. The removal happens under section number 140 subsection 4. Lot of background is there. If you have any doubts, stop me. Otherwise, I'll go through the process. A specific member, this is again copy pasted. This is all copy pasted from section number 115. A specific member will send a special notice delivered at the registered office of the company, asking the company two things: either expressly providing that the retiring auditor shall not be reappointed, or a resolution for appointment of an auditor other than the retiring auditor. I want both the words very careful. Expressly providing that the retiring auditor shall not be reappointed, or resolution for appointment of an auditor other than the retiring auditor. For any of these two reasons, the specific member will send a special notice to the company. But to be called a specific member, you must be having at least 1% of the total voting power or 5 lakhs of paid up share capital, whichever is lower or higher. We cannot compare these two. There was no lower higher, there are two separate limits. 1% of total voting power or 5 lakhs of paid up share capital. As soon as the company receives it, now don't jump to 140 subsection 4, still give me 115. Once the company receives it, company has to forward it to one member, every member. Every member, the company has to forward it to every member at least 7 days before the AGM. But now link it here. If the company forwards it to the members, can I say all the members will have knowledge on the allegations put by a specific member, but they'll not hear the story from auditor. To take a decision, we have to hear from one side of the story or both the sides of the story. To hear from both the sides of the story, Companies Act had added a logic stating that company shall immediately, forthwith, send the special notice to the auditor and ask the auditor, if you have any representation, you may provide it. Can the auditor choose not to provide representation? There will be questions drafted on this point. The auditor may provide it. The auditor may provide his representation, requesting the company to forward this representations to all the members. If this representation is received on time, because there is no time limit specified for the auditor, he may or may not give it. He can give it at any point of time. If he gives it a day before the general meeting, can I forward it to all the shareholders? By the time they'll conduct general meeting, they'll remove him, go back home, they'll receive the post. Will it be useful? If the representation is received too late, I cannot send it. If I cannot send it, but still I have to communicate it, I'll read it out in the general meeting. But if it is unless received too late, that means it is received on time or little late. What's the logic here? First concept was it was received too late. I cannot do anything. I'll read it out. Second situation, it was received unless received too late. If it is unless received too late, if you remember the classroom we have done, we had divided into two categories here. It is received on time or it is received little late. If it is received on time, can I send it along with the special notice itself? I'll send it along with the notice. But if it is received little late, that means I've already sent the special notice, but I still have enough time to send the representation separately. I'll send it as a separate copy. When is this possible? Unless it is received too late. But if it is received too late, I cannot do anything. Read it in the general meeting. But I'll also forward this representation to the ROC. ROC will also have a copy of it. But if this representation which you are talking about is shared, forwarded to lakhs and millions of shareholders, can I say auditor might misuse it? The auditor in this special notice started using unparliamentary words against Jaggu. It will be forwarded to all the shareholders. Lakhs of people will read all the unparliamentary words against Jaggu. It will be defamatory to such person. Any aggrieved party or the company itself will make an application to the NCLT. Who is making application? Company or aggrieved party. Making application to NCLT, asking the NCLT to investigate into such representation. If after investigation, if NCLT is of the opinion or is of the intention that the auditor has abused his right of representation, he has not used it, he has abused his right of representation, then NCLT will pass an order stating that the representation need not be sent, nor it is required to be read out. Need not be sent, nor it is required to be read at the general meeting. But who is passing this order? NCLT, where application can be made either by the company itself or by a aggrieved party. That's your section number 140 subsection 4. Then 140 subsection 5 was also interesting logic, where it is removed by whom? Removed by whom? NCLT. Who will pass the order? NCLT, but NCLT states that I care and I'll interfere only when they have conducted a fraud. If they have not conducted a fraud, if they were not having any fraudulent intentions, 140 subsection 5 will not touch the process. I'll interfere into the company's affairs only when I believe that the auditor has conducted a fraud. But I'll start the investigations either on a suo motu basis on my own, or on an application made by the central government, or on an application made by any other person concerned. Now try to understand this clear. Sir, I'm a shareholder who is not meeting these limits. Can I send a special notice? But can I still make application to NCLT at least? Yes. It is better to go for 140 subsection 4 if you are having eligibility. If not, apply under section number 140 subsection 5. Either application made by CG or application made by any other person concerned, the NCLT will investigate. After investigation, if NCLT is satisfied, I want 3 words remembered here. If NCLT is satisfied that the auditor has acted in a fraudulent manner, or he has colluded in a fraud, he has been a part of the fraudulent activity, or he has abated a fraud, he has encouraged another person to do a fraud. He has either acted in a fraudulent manner, he is directly involved in fraud, or he has colluded, he is a party of the fraudulent activity, or he has abated, he has encouraged another person to do an fraud. Fraudulently, colluded, or abated. Then they'll pass an order to change the auditor. A special point. The order has to be passed within 15 days if the application is made by the central government. If it is suo motu, when can I pass order? I'll take my sweet time. But if it is an application made by the central government, order has to be passed within 15 days. And once an order is passed, the vacancy that is created will be not filled under 139 subsection 8. It will not create casual vacancy. That vacancy will be filled by appointing a new auditor by the central government. If central government instigated that removal, central government will fill that vacancy. Usual answer, if it is not central government, who will fill the vacancy? Board of Directors. As per section number 139 subsection 8, it will create a casual vacancy. But the persons who are removed by an order by the NCLT will be disqualified to act as an auditor. He cannot be appointed as auditor of any company for the next 5 years. He is disqualified for how many years? 5 years to act as auditor in which company? Any company. Again, obviously he has done fraud. He will be punished under section number 447. But these penalties and punishments will be imposed on only such partner, if it is a partnership firm, only on such partner who have acted in a fraudulent manner. Say if we are all partnership, we are in a partnership firm, you have conducted a fraud, I am innocent, obviously. You are. We are all fraud Gadama, we are all in a partnership firm. You have conducted a, I am. Will I be punished? No. Which partner will be punished? Only such partners who have acted in a fraudulent manner. If I will be able to prove that it was done without my knowledge and consent, I will not be punished under 447, nor I will be debarred to act as an auditor. So that's your section number 140, all 5 subsections here. Any doubts in them? Very important. Then section number 141, subsection 1, 2, 3 and 4. We'll start with subsection 1 and 2 first. Who can act as an auditor? What is the eligibility of an auditor? A person shall be able to act as auditor if and only if he is a chartered accountant. What's the keyword you have to remember? He is a chartered accountant holding a valid certificate of practice. Subsection 2 states that a firm can also act as an auditor. A firm including an LLP where the majority of the partners practicing in India are eligible to be appointed as auditors as aforesaid. What do you mean by aforesaid? As per the above rule, they should be CAs and having a valid certificate of practice. But remember, how many partners? Majority of the partners must be eligible as auditors. Then the firm can act as an auditor. Say, assuming, imagine this, we have a partnership firm with 3 partners. How many partners are there? 3. Out of which the first 2 partners are CAs and having certificate of practice. Third partner is a doctor. Is this allowed? Can this firm act as an auditor? Because we have majority. Now this doctor can act as an audit. He'll conduct audit. He'll sign the audit report. Who can sign the audit report? If it in case of partnership firm or LLP, only such partner who is eligible to act as a auditor, that means a CA in practice, is authorized. Remember the technical words correctly. He is authorized to act and sign as an auditor on behalf of the firm. What are the words you have to remember? Authorized to act and sign. So who will conduct the audit at the end of the day? Even though we appoint the firm, who will actually conduct the audit? A CA in practice. One of the partner who is a CA in practice will conduct the audit. Not everybody can do it. Then the disqualification points under section number 141 subsection 3, very quick. Again, all of them are important. All the disqualifications are important. Who will be disqualified to act as an auditor? First category, a body corporate other than LLP. A body corporate is disqualified, but LLP is a body corporate but still allowed to conduct an audit. Second point, a person who is an employee or officer of the company. He'll be influenced by the board of directors. He cannot act as an auditor. Are we getting the clarity here? The person himself is an employee or an officer. Third case, he is not an employee officer, he is a partner, or he is an employee of a person who is an employee or officer of the company. What's the wordings here? Second point, clause B talks about a person who is an employee or officer of the company. Clause C talks about a person who is a partner or employee of an employee or officer of the company. Clause D states that not only about this person, let's talk about his relatives and partners as well. Starts with the wording, a person either. Are you observing the words clear? I'm not using the word auditor. He's not still appointed. I'll use a word, person. A person either himself or his relative or his partner. Any order is fine. Relative or his partner have not fulfilled any of the sub clauses 1, 2 and 3. Give me section number here. Section number 141, subsection 3, clause D, subclause 1, 2, 3. Subclause 1 is the most important of all the disqualifications. We have the relative logic. A lot of questions on relative point. Start with the wordings. Give me proper wordings here. A person either by himself or his relative or his partner is holding any securities in the company or any of the group companies, holding subsidiary, associate or subsidiary of the holding company. Then he'll be considered disqualified. Straightforward answer. If I'm holding one share, I am. Not only in the company but in all the group companies. Even though I'm holding a single share, I am disqualified. But there is a small exception. Exception is given only to a relative. If the relative or relatives on an aggregate basis may hold securities of face value not exceeding 1 lakh. If they are holding securities of more than 1 lakh, exceeding 1 lakh, then they are again disqualified. Again, we are talking about one relative or all relatives on aggregate basis. We are talking about market value or face value. It shall not exceed 1 lakh. If after appointment it exceeds 1 lakh, will he be disqualified immediately? No. We'll give him a chance to take a corrective action within a time frame of 60 days. If he takes the corrective action within 60 days, can he continue as an auditor? But if at all he does not take the corrective action within 60 days, he has to vacate his office under section number 141 subsection 4. If he vacates under section 141 subsection 4, it will create a casual vacancy. That casual vacancy will lead and direct to section number 139 subsection 8. That's your subsection, subclause 1. Subclause 2 is very straightforward. He is indebted. He has taken a loan. Loan from any of the group companies of exceeding 5 lakhs, or he has given a guarantee. Indebted or he has given a guarantee. Guarantee for the indebtedness of a third party towards the company or the group company is exceeding 1 lakh. Give me one word answer. Holding securities. Qualified or disqualified? Disqualified. Indebtedness of exceeding 5 lakhs or given a guarantee for another person's indebtedness exceeding 1 lakh. But this security logic has an exception where who can hold securities? Only the relatives. Can a partner? Can either auditor hold securities? Even a single share I will be disqualified. But if the relatives, they can hold securities on aggregate basis of face value not exceeding 1 lakh. But if at any point of time it exceeds 1 lakh, we'll take a corrective action within 60 days. Then clause E talks about, give me section number, where are we? Section number 141 subsection 3 clause E. A person who is having a business relationship with the company either directly or indirectly. But this word business relationship has an exception, states that business relation is something which is entered for commercial purposes and it does not include any activities done in professional nature. If you are providing professional services, we assume that you will maintain your independence, you will not lose it. If the services are of professional nature, or if the service is the transaction is entered in the ordinary course of business at an arm's length price. Have I got any special pricing from the company? No. It is a regular price in which company sells it. It is arm length. What do you mean by arm length? You maintain the arm distance. Don't let the other person come close to you. Maintain the arm's length distance. That means this person is not close enough to influence you. That word comes from the topic that maintain distance. Maintain distance so that he'll not influence you. If he's a person who is very close to us, can they influence? If they are able to influence, I'll lose my independence. But if I'm purchasing at what price? Arm's length price, acting as a regular customer. Am I getting extra benefit? If I'm not getting extra benefit, why would I give benefit to the company? Will I maintain my independence? Yes. Business relationship does not include the services which are done in professional category, or if it is done in the ordinary course of business at a arm's length price, acting as a customer. Then this is important. The question on this. Remember the shopkeeper question we have done? My relative is acting as a storekeeper of a particular company. They're acting as a normal employee of the company. Will they be disqualified? No. They'll be disqualified only when the relative is acting either as a director or relative acting as a key managerial person at the top level management. If the relative is acting as a general employee of the company, are you qualified or disqualified? Still qualified. You can still continue as an auditor. This is question asked on this. We had the question on a storekeeper. If your relative is acting as a storekeeper of a company, a regular employee of the company, are you qualified or disqualified? Still qualified. Clause G is interesting. They have given two concepts in here. A person who is in full-time employment or a person who has been appointed or reappointed as auditor in more than 20 companies shall be disqualified. But while counting these 20 companies, there are certain exceptions. Very important. We will, as an auditor, as a chartered accountant, you can act as an auditor for how many companies? 20. But if this 20 limit is there, can I say I'll choose companies only in such a manner that I'll get more remuneration? Dormant company, does it have much work? If it doesn't have much work, then I'll not get much. If it is not giving me much remuneration, I'll not even conduct audit for such companies. Why to waste my 20 limit? If that is the situation, all these small companies which we have will never be able to find an auditor. They gave an exception. For which companies? 4 companies. Third company is fourth company is important. One person company, small company, dormant company, and a private company which has a not turnover, paid up share capital of less than, not it is less than equal to less than 100 crores. If it is not defaulted under section number 137 and 92. So indirectly speaking, sir, audit is required. This 20 limit will be counted for which companies? It will be counted only for public companies, and it will be counted for a private company having paid up share capital of more than equal to 100 crores. For these two companies, I'll count. Otherwise, I'll not count it. Can I say this is an advantage for us as an auditor? You can act for multiple companies even beyond 20 if this limit is given. Then last two clauses we have, clause H and clause I. Clause H talks about if you have been convicted. You have been convicted for an offense involving fraud and you have been imprisoned. Once you have been in prison, convicted, you will be disqualified for a period of 10 years. 10 years from the date of such order. So try to understand it. If you've been convicted for 2 years, in this 2 years period of time, are you disqualified? Even after coming out of the imprisonment, you are still disqualified for how many years? 8 more years. Indirectly speaking, you are disqualified for total how many years? 10 years. When will you be qualified again? After 10 years. When will you be disqualified during this 10 years? If more 10 years has not elapsed yet, you are still considered as disqualified. Or last point, you have provided those services provided under section number 144. What is section 144? Auditor not to render certain services. Auditor not to render certain services under section number 144. Quickly run through that. What are the services which I am not allowed to render? Where are we? Section number? Give me the linking points more. If I provide those services, if I provide the services under 144, I will be disqualified under section number 141 subsection 3 clause I. If I am disqualified, I have to vacate my office under section number 141 subsection 4. If I have vacated, it will create a casual vacancy. I'll apply section number 139 subsection 8. Give me only section numbers. Provided service under. Disqualified under 141 subsection 3 clause I. Vacate under subsection 4. Then casual vacancy under section number 139 subsection. So whenever section 144 questions is asked, always remember we have to link all the 4 sections in the process. Start. What are the services which I am not allowed to provide? I am not allowed to maintain the accounts of the company or provide any bookkeeping services. I am not allowed to render any outsourced financial services, any kind of financial activities of the company. I am not allowed to design. This is one of the regular question asked. I'm not allowed to design and implement or maintain the internal financial controls of the company. I'm not allowed to conduct an internal audit. Link it out. Internal audit under section number 138. Or management services. Management services include two categories: investment advisory service or investment banking service, or even actuarial services. What do you mean by actuarial services? Basically valuation process or such other as may be prescribed. Put all of them together fast. First, accounting or bookkeeping services, any kind of outsourced financial services, design or implementation or maintenance of the financial control system of the company, internal controls basically, internal audit, management services, investment advisory service, investment banking service, actuarial services, or such other as may be prescribed. These services shall not be provided by auditor, shall not be provided by a chartered accountant or auditor. If I'm a chartered accountant, can I conduct these services? If I'm acting as an auditor, I'm not allowed to provide these services for that particular company in which I'm acting as an auditor, either directly or indirectly. What do you mean by indirectly? I cannot provide it by myself, obviously. I cannot provide it through my relative. I cannot provide these services with my partnership firm. I cannot provide these services through my partner. I cannot provide these services with an entity in which I have significant influence. I cannot provide these services with the entity in which I have common trademark or common network firms used. These are all indirect way of providing services which are also prohibited under section number 144. If I provide these services, I will be disqualified. Talking about your remuneration, is it important? Why did you act as auditor? For society's benefit? No. You acted as auditor for your remuneration. Will we fix the remuneration? When shall we fix the remuneration? After the audit or before? Before the audit. Who will fix the remuneration? Concept remains the same. The person who has the right to appoint will also have the right to fix the remuneration. Talking about the first auditor appointed by the board of directors. Remuneration is fixed by the board of directors. I want very technical concept, not the regular words we use, technical logic. Subsequent auditors are appointed by the, don't use the word shareholders, we have learned this. It is appointed by the, if you remember board of directors topic also we have done this, we have explained this logic. Board of directors are appointed by the company with the help of the shareholders. Remember this logic? Similar process. Shareholders, auditor is appointed by the company with the help of the shareholders. Hence the process, the words used are, the remuneration of that subsequent auditor is fixed by the company. If it is the first auditor, fixed by the board of director, subsequent auditor is fixed by the company. But where does the company fix it? In the general meeting. Indirectly speaking, who is fixing it actually? Shareholders. But the words used are technically used as company in the general meeting. Or there are situations where company will not fix exactly in the general meeting. Company in the general meeting mentions, whatever we have paid last year, I'll pay 5% extra. Did we fix it, or we provided the manner in which we can fix it? Provided a manner, provided a situation in which we may fix the remuneration. Other determination of remuneration is provided. The manner of determination is provided, not the exact remuneration. This is fixing remuneration done, but there are certain things which are included and excluded from your remuneration. We'll start talking about inclusions. All the expenses incurred by the auditor while conducting his audit. Whatever expenses who has incurred? Auditor has incurred while conducting his audit will be forming part of his remuneration. All the expenses will be reimbursed, and those expenses will also be called as a part of his remuneration. And while he is providing services, there are situations where he will not incur expenses. The client will incur expenses by providing certain facilities to me. So I am conducting a stock audit in a warehouse which is located in Kolkata. Travel, I'll incur expenses. It will include in the remuneration. After going there, the client to which I am conducting audit have given me accommodation free of cost. Have I incurred expenses? But who incurred expenses? Client has incurred it. The client has provided me facilities. Those facilities will also be forming part of the audit remuneration. The remuneration shall include the expenses incurred by the auditor while conducting the audit, or the facilities provided to him by the client. But the remuneration shall not include most of your cost accountants as well. Are you a chartered accountant? Why are we so dull about it? Are we chartered accountants? We are not even past 2 grand tests and you're already dull of it. Are you a chartered accountant? I'm not able to hear it. You're also a cost accountant. Do you have knowledge about costing? Do you have knowledge about how to conduct a cost audit? I mean, you'll get to know in the near future, but by the time you are a cost accountant, you'll have knowledge about cost accountancy as well. So you can do services as a chartered accountant as well as a. You were appointed as an auditor, but the company had certain problem in their cost records. And you have provided extra services, consultancy service about costing or something. Is it professional nature of service? Yes. Is it a part of your service as an auditor? Will you do free of cost? If you have knowledge about it, if you have a certificate for it, if you have qualification, will you do free of cost? I'll charge money. That money is within the audit purview or outside the purview of audit. If it is outside, it will be included or excluded. Any other services rendered. But can I provide services which are prohibited under 144? I will provide only those services which are not prohibited under 144. I can provide such kind of services, but it will not form part of my remuneration. Then section number 145, 146, both of them are connected with each other. 145, audit has been completed. 143, we have done the audit process. Once audit is completed, the audit report has to be signed. Now the point was, who will sign the audit report? If we have appointed an individual as an auditor, the person so appointed as auditor will sign it. We have no other option. He'll sign it. There's no discussion there. But the problem arises if it is a firm. And we were just discussing about it. If it's a firm, who can act as an auditor? Any partner? Any partner can act. Only a chartered accountant having a valid certificate of practice can act and sign on behalf of the firm. So he'll sign it. Once the document has been signed, the document is, now you're done with audit syllabus also, you should be able to answer this. The audit report prepared under SA 700 had multiple paras to it. It will have the date, place, it will be addressed to the, very good, it is addressed to the shareholders, but I don't know who the shareholders exactly are. I'll not go to the shareholders and give this document. I'll give it to the board of directors. Are you getting the point clear? I'm addressing the report to the shareholders, but I'll physically report it. I'll physically deliver the document to the board of directors. Now it is the duty of board of directors to forward this to all the shareholders, and we have a separate section for this. 136. Take a moment and try to understand that section. Once the board of directors receive this audit report, they have to forward it to all the shareholders. We have done this. 136. Right of a member to receive audited financial statements, in which we have sent not only financial statements, we have sent the audit report and all other documents which are required to be annexed or attached. So once this document has been signed under 145 and given to the board of directors, from 145 will apply section number 136. We'll give it to all the shareholders. The shareholders will have knowledge about audit report even before the AGM starts. Do they have access to read it? Thanks to section number, not 145, thanks to section number 136, they had this document. But the point is, the shareholders might not have read it. Even though I've given them documents, even though they had the access to documents, I don't believe, or I don't have the faith that they might have read and understood it correctly. Do we understand audit report? We have 3 months of classes and we still struggle with the subject audit. Do you expect the general shareholder to understand those technical words we have? Sufficient, appropriate, audit evidence. What will the shareholder understand these words? You're not expecting them to understand the entire audit report. Hence, we'll help them understand. We'll read it out in the general meeting. If we sit down to read the entire audit report, shareholders will go to the snacks counter. We're not going to bore the entire audit report. We're going to read only the matters which are very important. Out of the entire audit report, what is the most important part of it? The opinion para and the basis for opinion. Let me read that basis for opinion. I'll read all the observations, all the comments, and all the qualifications. 3 words. My observations as an auditor, comments on the audit on the company's financial statements, and the qualifications. The observations, comments, and qualifications on the financial statements, which will have an adverse effect on the functioning of a company mentioned in the audit report, shall be read before all the shareholders in the AGM. Must be read. Now can I say, now they actually have knowledge? If they actually have knowledge, they might be a little more curious to read the entire document now. Keep the document open for inspection. That's your section number 145. Once it is kept for inspection, after reading that, they'll have doubts on it, they'll have queries on it, they'll have grievances on it. Whom they will ask? Board of Directors will answer in their favor. I want whom to be present in the meeting? Auditor. Section number 146. Auditor to attend the general meeting. 145, he'll sign it. 146, he will attend it. Now for this attending the meeting, who has access to general meeting? Only the shareholders. The auditor should also have access to the meeting. To have access to the meeting, he should be invited first. Companies Act was very smart. They have created this logic both under section 146 as well as section 101. If you remember section 101, notice of general meeting is sent by the company to, not one. We have learned 5 category of people there. What were the 5 categories we have learned? Which member? Every member, legal representative of a deceased member, official receiver of a insolvent member, director. Which director? Every director, and auditor. We have also sent the document to auditor. Now the same concept is supported by section 146. All the communication notices regarding a general meeting shall also be forwarded to an auditor. Are you getting the logic? This is not overriding. This is just supporting both sections. It is given under section number 146 that all the notices shall be forwarded also to the auditor. It is also been portrayed under section number 101. Once notices are sent, once he has been invited, he'll come and attend. He'll come and attend on himself, by himself. But there's a chance that he might be busy on that date. He might not be available. Then he can send his representative. Either he can attend by himself or he can send his. But this representative must also have enough knowledge to answer the grievances. If I send my article assistant, he'll ask more doubts to the shareholders. Can I send my article assistant? No. I have to send such person who is qualified to act as an auditor. He has enough experience and knowledge to answer all those questions. This was an amendment, but what are the wordings as of today? It can be sent either. He can attend by himself or he can send his authorized representative who should also be qualified to be an auditor. If you observe the words carefully, it need not be a partner. Can he be an outsider? Yes, but he must be a qualified. Say, assuming I have conducted an audit, can I send you? I mean, in the future, can I send you? Yes. If you have conducted an audit, can you send me? We are not partners in a partnership firm, but we can still send each other because we are still qualified chartered accountants. That's fine. And then we always had this discussion whenever topic of meeting comes in, we'll have 3 rights to discuss, or we can add the 4th right also. Can he attend? What were the 3 rights we usually discuss was attend, speak, vote, snacks. What is more important? Obviously snacks, but we'll start with attending first. Can the auditor attend? Can he eat snacks? Double yes. Can he speak? Yes or no? If no, why did you call him to eat snacks? He can speak, but can he interfere in the business activities? Restrict yourself. Speak only on the matters which concerns you as an auditor when we are discussing about audit process. When we are discussing about our business purpose, it is none of your duty to speak and interfere in between us. If we are talking about audit process, then it is your responsibility to clarify it. Speak. You are given a right to be heard only in the matters relating to audit when it is concerning you as an auditor. Otherwise, you are not allowed to speak, eat snacks and sit silently. Can you vote? Oh yes, sir. Can you vote? Can an auditor vote? Good morning. Can he attend? Can he speak? Only in the matters relating to audit. Can he eat snacks? Can he take snacks as parcel also? Yes. Can he vote? Section number 147, punishments. Again, this is important. You have to remember these punishments. Entire auditors chapter, you have to remember the punishments, whatever we have. Punishment number 147, very quick. I'm not going to spend much time. If the company has made a default, they'll be punished with an amount of 25,000 to 5 lakhs, or if it is an officer in default, 10,000 to 1 lakh. But if the auditor has done any contravention under his 2 sections, 139, he has given declaration. If he has given wrong declaration, or 144, he provides the services which are prohibited. He will be punished with an amount of minimum 25,000 to a maximum of 5 lakhs or 4 times his remuneration, whichever is lower. But if this same offense is done intentionally, willfully defaulting willfully giving a wrong report, he has given it intentionally wrongful, then he will be punished with four category of punishments, not one. Until this point of time, we had only penalty, only one kind of punishment. Now we'll have four categories of punishments. We'll have imprisonment, fine imposed, will ask him to refund his remuneration, and he'll be liable for the damages to be paid. Four categories. First, imprisonment up to 1 year. Fine, because it is willful in nature, we have to punish him with a higher limit. The punishment will be 50,000 rupees or 8 lakh rupees, sorry, 50,000 rupees or 25 lakh rupees, or 8 times his remuneration, whichever is lower. He has to refund his entire remuneration, and he has to pay damages. Damages to the members, creditors, company, or any other authority who have been deceived by the misleading report given by the auditor. Give me all the 4 points. Imprisonment up to 1 year, or he should be paying fine of minimum 50,000 to a maximum of 25 lakhs, or 8 times his remuneration, whichever is lower. He has to refund his entire remuneration, and he has to pay damages to the members in the ascending order: members, creditors, company, or even the authorities, for providing what kind of report? Misleading report. Obviously, fraud will also apply section number 447. If you remember this logic, 447, without prejudice to, without prejudice. Remember, notwithstanding, subject to, without prejudice. Without prejudice, it is not affecting section 147. I'll also apply. I'll also, in addition to 147, apply without prejudice. 447. Cost audit. Mark it as one of the most important sections now. They have not asked a question, but deserves a question. 148 is a good enough concept to be drafting a question, but they have not drafted yet. They have not asked even a single question from cost audit. I don't know why they are hating section 148. Maybe they hate cost accountants. No. Yes. Then they should have removed it from the syllabus. The irony is, look at it. We have the entire section 148 in our syllabus for CA syllabus. Look at the CMA syllabus. They don't have section 148. They have rest of audit syllabus, rest of this entire chapter, but they don't have 148. So we'll learn section 148, start with the point. We'll divide them into, if you remember the applicability, we divide them into two parts. Applicability of cost records, applicability of cost audit. We'll fast run through the entire process. Central government has divided companies into two parts. What are the two parts? We have table A and table B. Table A are called as regulated sector, table B are called as non-regulated sector. We have total of 6 regulated sectors and 33 non-regulated sectors. In total, how many have been defined? 39. Who has defined all this? Central government. Are you getting with this? Who defined it? Central government, table A and table B. If it doesn't fall under table A, table B, it will fall under tables. Table C was not defined. We will imaginarily create it. Other products and services. So what are the 3 categories we'll have in total? Conceptually 3 categories. Technically only 2 categories. Technically they have given only 2, table A and table B. If it doesn't fall under table A, table B, I'll call it as what? Other products and service. First, regulated sector, non-regulated sector, other products and services. Now start the cost records. Cost records is similar for table A and table B. If it is a company, start with the sentence. If it is a company which is engaged in table A products or services or table B products and services and has a overall turnover from all the products and services of 35 crores or more in the immediately preceding financial year. Good morning. Where are we? Section number 148. If it is a company which is engaged in table A or table B products and services, if it is engaged in table A, table B, and is having what turnover? Overall turnover. The word is very important. Overall turnover. From which products and services? All. What do you mean by all products and services? It includes table A, table B, and other products and services of 35 crores or more in the immediately preceding financial year. Then they have to they have to maintain the cost records in addition to the books of accounts maintained under section number 128. This cost records maintained shall be disclosing the details about material, labor, and other costs of the company. What are 3 major categories I'll have? Material, labor, and other items of cost. It is in addition to the books of accounts under section number 128. Cost records under section number 148. Books of accounts under section number Now this books of accounts maintained shall provide me the cost of production of each activity, the cost of operations, the working capital requirements and the overheads, and the cost of sales per unit. I have to get it for each unit. I have to maintain books in such manner. This will provide me a cost centers. Have you heard about it? Okay, I'll not disturb it. Wait, cost audit. Okay, we'll discuss in the final level. We have something called as cost centers, etc. We'll discuss in the final level. Come to this cost audit. While conducting, then again, once the cost records have been maintained, we have to conduct an audit for the cost records. That will be called as cost audit. Cost audit is not again required or mandatory for every company which is required to maintain cost records. There are situations where companies applicable with cost records, but they're not applicable with cost audit. They are segregated into two parts for table A and table B separately. For table A, words are very, very important. For table A, the cost audit is required if the which turnover? Aggregate turnover from individual products and services for which cost records are required to be maintained. I'm not talking about all products and services. I'm talking about only individual products and services for which we are required to maintain cost records. Indirectly meaning, forget the sentence. What is it? Table A and table B. Give me the wordings here. Overall or aggregate? Aggregate turnover of individual, not all products and services. Individual products and services for which cost records are required to be maintained. If it is more than or equal to 25 crores. And second condition, overall turnover. Overall turnover from all products and services of the company in the immediately preceding financial year is more than equal to 50 crores. If both the conditions are satisfied, then we have to conduct a cost audit. Same point, if it is for table B, it will be 35 crores and 100 crores. Same wordings. I want the wordings very, very clear, ma. Forget about the words, you'll understand, you'll remember the words when you revise it multiple times, but what's the logic behind it? First case, you'll consider only table A and table B. Second category, you'll consider what? All products and services, which includes table A, table B, and other products and services. If your turnover from table A, table B is more than equal to 25, and turnover from all the products and services is more than equal to 50 crores, then you have to conduct an cost audit for table A products. Are we clear? You have done multiple examples on this already. One of the important parts, cost audit has an exception. Very, very important. When is a cost audit exempted? If you're a company who is having a export turnover, export revenue, then you are exempted. If your export revenue is 75%, what's the intention here? If you're making exports, you'll earn foreign currency for India, and earning foreign currency for India is basically benefiting Indian market as a whole. I'll give you an exception. You don't have to conduct a cost audit. Get this very clear. Exception is only for cost audit. You still have to maintain the cost records. When will this be exempted? If your revenue from exports is more than 75%. 75% of what? Total revenue. But if you have made an export and you have received Indian currency, did I get benefit? I'll get benefit only when you have received which currency? So add the extra point. If the revenue from exports in which currency? Foreign currency, foreign exchange exceeds 75% of the total revenue. Or you are someone who is simply operating from SEZ, or you are someone who have established your own captive generating plant. What do you mean by captive generating plant? I have established a plant which will generate electricity for my captive consumption. What is captive consumption? For my business purpose. I'm not generating electricity to sell it. I'm generating electricity to use it for my business. That means I'm reducing burden on the government. I'll get an exception. What are three exceptions? Either you are having revenue from exports in foreign exchange exceeding 75%, or you're operating from a SEZ area, or you have established a captive generating plant for your own electricity consumption. Three cases, I'll give you exception. From here, it should be all copy pasted. 2-3 minutes, we should be done with this. Fast, it is all copy pasted. Who is going to be appointed as an cost auditor? Can a chartered accountant be appointed? Only a no. Can a chartered accountant be appointed as a cost auditor? No, absolutely no. They are disqualified, obviously. If we disqualify cost accountants, will the ICMA Institute disqualify us? Can I conduct a cost audit? No. Can I conduct a financial audit? I cannot conduct cost audit because I am not cost auditor having a certificate in practice. You can have only one certificate of practice. I have the certificate of practice for CA. I'll conduct a financial audit. I'm a cost accountant but not in practice. Can I conduct cost audit? Can I conduct internal audit? I'm a CMA in practice. Can I conduct cost audit? I'm a CA in practice. Can I conduct cost audit? So who can conduct a cost audit? Only a person who is CMA and having a valid certificate of practice. Again, same topic for firm also. If it is a firm, majority of the partners practice in India shall be qualified to be appointed as cost accountants. They'll act as an auditor. But they have given a special point here, which is not practically possible, but Companies Act doesn't have much knowledge about CA Act. Try to understand it. Can I have multiple certificate of practices? Can I have certificate of practice for CS? Yes. If I have the certificate of practice for CS, I am not allowed to hold certificate of practice for any other category. This is under professional ethics. We have certain ethics. Do we have ethics? Yes. We also have certain concepts called as professional ethics. We have to, as a professional, we have to maintain our ethical standards where you can hold only one certificate of practice. You can practice only one profession at a time, except advocacy. So you can be a advocate in practice and also a CA in practice. That's the only thing that is allowed. Except the law practice, you cannot do any other practice if you are in the practice of one profession. So can I be CMA in practice and an advocate? Can I be CA in practice and CMA in practice? No. So if I'm not a CMA in practice, I'm not even allowed to conduct an. But they have still given a sentence. A person who is appointed as a financial auditor under section 139 is not allowed to act as an. What not allowed? I'm not even eligible to appoint. Are you getting the logic? They don't have to mention this because I'm not even eligible to appoint because I'm not holding certificate of practice. But they have still mentioned a person who is appointed as a company auditor under section number 139 is not allowed to be appointed as an cost auditor. He cannot conduct an cost audit. Who will appoint? Cost audit is done for internal purpose or for shareholders purpose? Internal purpose. Appointed by the board of directors on the recommendations received from the audit committee. If the company doesn't have audit committee, it will be appointed directly by the person having the right to appoint will also have the right to fix the remuneration. So remuneration is fixed by the board of directors, but on the recommendations received from the audit committee. But whose money is being used? Shareholders have to get it ratified. You fix the remuneration, but it has to be ratified. Talk about 142. Remuneration is fixed by the shareholders. But here remuneration is fixed by the board of directors, but it has to be ratified by the shareholders. All the qualifications, disqualifications, rights, duties, obligations of a cost auditor will be mutatis mutandis to a potato mutatis mutandis. It will be as far as possible same as a company auditor or the financial auditor. Who is going to appoint again? First, who is going to appoint? Board of directors. Board of directors are appointing in the AGM or outside the AGM? Why do I have to do it in the AGM? AGM is of shareholders. I'll appoint it outside the AGM. If it's outside AGM, I don't have to wait till the AGM. I'll appoint as per CAG topic. I'll appoint within 180 days. 180 days from where? End of financial or commencement of financial? Commencement of financial year. But before appointing, I have to obtain his written consent. He has to also give a certificate stating that he is eligible. We have just done this amount. Quick. He is eligible and not disqualified. His appointment is within the provisions of the Companies Act. His appointment is within the limits. How many companies can he act as a cost auditor? All of them are mutatis mutandis. Will apply for the same thing. He can be acting as cost auditor for how many companies? 20 companies, which is given under section number 141 subsection 3 clause G. For the 21st company, he is disqualified and he has to provide all the proceedings which are pending against him as a cost auditor for his professional misconduct and disclose that all the points he has given are true and correct. Once the person is appointed, we have to inform. We have to inform it to the cost auditor and we have to file it with the usual answer as ROC. But entire topic of cost audit is being prescribed and taken care by central government. I'll file it with the central government directly. But a slight change in the process, I'll file it with central government, but within how many days? Within original topic 30 days from this appointment. How many days? 30 days from his appointment or within 180 days from the commencement of the financial year, I want the information received. If the appointment happens, say this is the entire financial year, this is a 180 days period. Can I appoint him anywhere in this 180 days period? Can I appoint him here? 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 Can I appoint him here? No. But can I appoint him here? If I appointed from the date of appointment, file it with the central government within 30 days. But if I have appointed here, is it allowed? But do I have 30 days to file it? No. File it within 180 days. I don't care if that 30 days falls after 180 days, come and inform it within 180. So if I have appointed on 179th day, I have to inform on the 180th day. I'll not have 30 days left. What is the wordings here? Inform it to whom? Within 30 days. 30 days from his appointment, that is by passing the board resolution, or within 1 days from the commencement of financial year, whichever is earlier. Once it is implemented, central government will have maintenance of it. He'll work till what point of time? Is he appointed by shareholders? Is he required for the shareholders? He is required for the. That means his duties end as soon as he gives a report. You don't have to come and attend the meetings. His duties, his tenure will continue until he submits the cost audit report, or otherwise within 180. Why 180, sir? Because we'll appoint a new cost auditor for the next year. Removal, can I remove? One word answer. The person who is having a will also have the right to. Who will have the right to appoint? Board of Director. Who will have the right to remove? Board of Director. But before removing him, give him a reasonable opportunity of being heard. All the provisions of conducting audit 143 will be mutatis mutandis applicable to a cost auditor. And again 147 also. All the penalties under 147 will also be mutatis mutandis applicable to a cost auditor. Last leg of it. The cost auditor, after completing his entire audit, has given his cost audit report to the board of directors. Once the board of directors have received this cost audit report, they have to forward it to the central government within 30 days from the date on which it is received, along with explanation and details on each qualification mentioned by the auditor. If he has mentioned say 5 qualifications, for each of the 5 qualifications I have to give explanations and reasons why this qualification was given. I'll explain it to the central government. After reading it, if central government has a problem, central government will seek additional information. If not satisfied, they will start the investigation process. Any doubts? Given the last leg out of it, auditor gave cost audit report to the board of directors. Board of directors will have to furnish it to the central government within 30 days, along with their explanation on every single qualification mentioned in the report. Once central government received it, if they have a problem, they'll ask the company to provide additional information, and if they're still not satisfied, they'll start the investigation process. And 147, as we were discussing, is mutatis mutandis applicable to a cost auditor. Section number 148 will be important for exam. They have not asked a question. There's a high chance that they'll ask a question on this particular point. So entire chapter is important. Again, this chapter will fetch you how many marks? 5. Bare minimum. It will be upwards 5 marks. Minimum 5 marks will come. It's a mandatory question. And chapter is not hefty, nor the chapter is difficult as compared to rest of the chapters we have. It is one of the interesting topics. It will be easy to learn. Don't keep it pending. Complete it as soon as possible. You will definitely get minimum 5 marks out of it, and no questions on this chapter are complicated type. They're all regular questions. They're all repeated type of questions. You can easily answer them. Should be easy to score 5 marks out of it. Chapter number 3, prospectus. What's the actual name of the chapter? Prospectus and allotment. Allotment of not shares alone. We allot what? Securities. Securities, basically a simple answer would be securities includes both shares and debentures. That's enough for us as of now. Prospectus and allotment of securities, chapter number 3, which will be ranging from section numbers 23 to 42. But in the Companies Act, understanding the division of this process, they have divided the chapter into 2 parts. Part 1 and Part 2, where we are not dividing it for our convenience amount. This is divided by the Companies Act itself. Companies Act has divided them into 2 parts called Part 1 and Part 2. Part 1, where we'll be dealing with public offer, which will be ranging from section numbers 23 to 41, basically the majority of the chapter. Once this process is done, then we'll have part 2, where we'll be discussing about private placement, which is completely summed into a single section 42. But don't get fooled by the number of sections here. Section 42 is basically in a cover whatever we have learned under section numbers 23 to 41, all will be combined together and summed up into a single section 42. It will be a hefty section, but it will be easy once you have understood the public offer correctly. So the order of discussion will be, we'll first try to complete the public offer. Once we are comfortable with the public offer, this public offer will help us continue and complete the process of private placement in an easy manner. We'll complete private placement second. So we'll start with the first category, section number 23, which talks about part 1, public offer process, which clearly explains which company you are and what are the possibilities of raising finance under Companies Act. We have the basic chart, we have drawn this. We have two types of companies we talk about. I want section numbers also very clear. We have two types of companies. We'll talk about a private company and a public company. Private company is defined under section number 2 clause 68. A public company is defined under section number 2 clause 71. A private company can raise finances, they can raise money, but they cannot raise money from public at large. If you remember the definition of 268, it starts with the wording it restricts or prohibits. Prohibits invitation to public. We are not even allowed to invite to the public. We are not allowed to ask the public to invest into our company. Hence, we are not allowed to make an public offer, but we are still allowed to make an private placement, or we can raise money from our existing shareholders by a concept called as rights issue, which falls under section number 62. Or we can understand this word clearly, we are not able to raise finance, but we are still issuing securities under section number 63. Remember, 63 bonus shares are issued for free of a cost. Am I getting extra finance into the company? Are the amount of capital increasing? No, finance is not increasing, but number of shares is increasing. It is still called as issue of securities. We have issued securities. Give me the section numbers alone. Issue of securities is divided into section two parts, either 268 or 271. 268 I can issue securities either in three forms, either from section number 42 private placement, or 62 further issue of capital, which is rights issue, or 63 issue of bonus shares. But when it comes to a public company under 271, the three options are always available, but I have an additional option where I can raise money also from public by issue of a document called as prospectus through section numbers 23 to 41. But while doing so, I have three types of public offers. It can be either IPO, FPO, or OFS. Namely, initial public offer, the very first time I'm going for it, or FPO, follow on public offer, or also called as further public offer, the second or subsequent time, or the last category we have is offer for sale. Offer for sale is not a process where company is selling it shares, company is not introducing new shares, the existing member of the company is selling shares through the company. Company doesn't get extra benefit or finance out of it, company will get just commission out of it, a concept called as offer for sale. Now, a simple tabular format to have a clarity on all the processes. Private placement can be done by which company? All the companies, private and public. Bonus issue, both the companies. Rights issue, both the companies. But public offer can be done only by a public company. To be more specific, not every public company can go for public offer. Only such public company which is listed or in the process of getting its securities listed. So, if it is getting listed, can I say not only Companies Act, SEBI regulations will also apply? I am a listed public company. Do I have to follow Companies Act? I am an unlisted company. Do I have to follow Companies Act? But SEBI regulations are applicable only for a listed company. If they have got their securities listed or they are proposing to get their securities listed, they will be applicable with what regulations? SEBI regulations. That's your introduction, section number 23. Then in section 23 itself, they have given a concept. I'm going to explain it here itself. You know this topic of GDR, so you'll understand this now. Direct listing. What do you mean by direct listing, sir? Can I raise money from a country outside India? Yes. Can I raise money from North Korea? I can raise money from Pakistan. There are certain jurisdictions from where I cannot raise money. So what have they defined? You can raise money, you can issue securities to a permitted jurisdiction itself. Not all jurisdiction, only specific foreign jurisdictions you can issue securities. If you are issuing securities, if you are issuing your shares in that foreign jurisdiction, can I say a recognized stock exchange will not have access there? For the shareholders residing outside India, for them to have access to your shares must be listed on Indian stock exchange or foreign stock exchange. You can surpass this foreign stock exchange by giving GDRs. Are you getting the logic clear? Are you able to link the points? GDR was a process where you don't have to go for listing in the foreign jurisdiction. Rather, you will not issue shares itself. You will convert them into depository receipts and issue deposit receipts, where you are not responsible for any kind of formalities outside India. But you always had this option. If you have enough money and enough possibilities, go list it on yourself. by yourself by a concept called as direct listing. But direct listing, can it be done in any jurisdiction? No, only permissible foreign jurisdiction. Who will permit it? Central government. Central government will provide specific kind of activities. Then section 24 takes about a listed company. If at all I am a listed company, I'll not follow Companies Act alone. I'll also follow SEBI regulations, and which is more specific or which is more special for me, which is more relevant for me. SEBI regulations. Then there was a dispute between SEBI and Companies Act. Section 24 states that. I'll clarify that. If at all it is a matter relating to issue and transfer of securities or non-payment of dividend, SEBI states that I'll take care of it. If it is a matter relating to what purposes, either issue of securities or transfer of securities, I'll take care of it. I'll have rules and regulations on it. I'll take care of the process. But if it is anything other than those matters, I'll give it to you. You guys take care of it. What do you mean by you guys? The registrar, the central government, the other activities, the Companies Act will take care of it. It can be registrar. That means under Companies Act, this is central government or the NCLT for appeal activities. But if at all it is for those two specific matters, you'll not interfere. I'll take care of the process. Who takes care of it? So again, this cannot be a question drafted. Not much important. Prospectus definition. If you remember, prospectus definition we did not learn at the beginning of the chapter. We learned it after more than 70% of the chapter got completed, but now you can understand this definition proper. Prospectus is a definition which uses the word means and includes. What do you mean by means and includes? It is an exhaustive definition to include certain points. And the logics here. Prospectus means any document. I don't care what name you give it. I care whether it is a document or not. Give me the wordings here. Prospectus means any document which is described, which is mentioned as prospectus. Are you getting the word clear as of now? What is prospectus? Prospectus means any document which is described as prospectus. So it is not described as prospectus. Nothing is mentioned on the title of this document, but it was issued promoting as a prospectus. It is still called as a prospectus. Give me the basic answer. That's the first sentence you have to learn. The prospectus means any document which is described or issued as a prospectus and includes red herring prospectus, shelf prospectus, or any circular, notice, or advertisement which is issued or any other document means the deemed prospectus logic will also add there. I want 4 wordings here, 5 wordings actually. It includes what? First 2 type of prospectus will include is red herring prospectus and shelf prospectus, or any notice, circular, or advertisement, or any other document. I don't care what document is. Any other document which is inviting. Inviting whom? Public. For what? Subscription of what? Securities of the body corporate company. And the entire sentence together. Otherwise, we will divide into 2 parts first. What's the first sentence? Give me the means part. Prospectus means any document described or issued as prospectus and includes. Give me the includes part. Includes what? Red herring prospectus or shelf prospectus or any notice, circular, advertisement, or any other document. Why have we given this? We have given this for inviting the public for subscription of any securities of the body corporate, called as a prospectus. One of the important sections, section number 26. To start off, kickstart this chapter, 26 is mandatory. What is 26? Matters to be stated in the prospectus. What should be mentioned in the prospectus? On a conceptual basis, we have to remember this logic. Company is trying to introduce itself to the investor, stating that this is my background, this is where I started, this is my business, these are my board of directors, this is my profit, this is my shareholders, these are my capital, this is my business activities in the future. Basically, I'll introduce myself as a company. Company is an artificial person or a natural person. If I ask you to come onto the stage and introduce yourself, you can come and speak it out. But being an artificial person, company cannot introduce itself by speaking it out. They have put it in a document called as prospectus. On a layman language, what is prospectus? The company introducing itself to a prospective investor. The document is called as what? Prospectus. But coming to the technicality, the prospectus must be dated and signed and shall include such information or such information on financial information as may be prescribed. Have they prescribed it? Companies Act have not prescribed it. SEBI already has put in efforts to prescribe it. Why should I waste my time? I'll follow the SEBI regulations here. What will be the wordings you have to remember? It must be dated and signed. It shall include such information, regular information, and such information on financial reports as may be specified by SEBI in consultation with central government. I'll follow these directions. But my ego got hurt. If SEBI is providing it, you should also follow my law. You're under which act? Companies Act. I agree you have to follow while preparing prospectus SEBI regulations, but you should also follow Companies Act. You have to clearly declare in the prospectus that nothing in this prospectus is in contravention to the provisions of Companies Act. Then SEBI's ego got not satisfied. Then they added extra point stating that nothing mentioned in this document shall be in contradictory to three of the acts: Companies Act, SEBI, and SCRA, including all their rules and regulations. What is SCRA? Securities Contract Regulation Act. Once we have prepared the document, we have finalized the document, we will start issuing the document. But before issuing it, the ROC states that you might have mentioned a misstatement in the prospectus. I want to verify it. Come file it with the come file it with the ROC. But before you file it with the ROC, you have to get it signed by your directors. So we'll start the logic of signing of prospectus. Who will sign the prospectus? We'll remember them as three categories. It will be signed by every director, a proposed director, and a person who is an attorney of such persons, a duly authorized attorney. What are the three categories? Which director? Every director, or a person who is acting as a proposed director, or a person who is acting as an attorney. What is attorney, guys? A person who is appointed as an agent for signing purpose is called as an attorney. Either of these three people will sign the document. Once it is signed, then it is delivered at the registrar's office. Will submit a document. Obviously, ROC is money minded. It'll ask fees. Document has been submitted. But this entire hassle is not required. There are a couple of exceptions. Entire prospectus is not required in two situations. As we were learning about it, prospectus is a document where the company introduces itself. When is this introducing itself not required? If the securities are offered to the existing shareholders or the existing debenture holders, they already know about me as a company. Should I explain it again? Not required. Exception. Or second exception, where the securities offered are such kind of shares or debentures which are in all respects, in all perspectives, uniform with those securities which are previously issued and listed on the stock exchange. If you analyze the sentence correctly, I am issuing same securities, identical securities of those which have already been issued and have already been listed on the recognized stock. If they are listed on recognized stock exchange, public know about it already. Entire public know about the average price, high price, low price, the demand, supply, everything about those shares are publicly available. If it is publicly available, should I introduce myself again? Not required. But if I am issuing identical or different kind of shares, should I introduce myself again? Yes. I am not required to introduce myself if the share securities are in all respects uniform. Give the keywords you have to remember. The securities, shares, and debentures which you are issuing are in all respects uniform with those securities which are previously issued and listed on the recognized stock exchange. Even though you have drafted this prospectus with all the rules and regulations of SEBI, SCRA, Companies Act, it is not still trustworthy because it is prepared by the board of directors, boosting or portraying or telling about themselves. If I ask Jaggu to speak about himself, he'll obviously speak good things about himself. But if we start speaking about Jaggu, will there be any good things to speak? No. Who will be a better person to judge you yourself, or an independent third party? Hence, bring in the expert. An expert statement has to be added, but they have drafted in a negative sentence. The expert statement shall not be a part of the prospectus if the expert has not given his. Remember, we have drafted in positive sentences, we converted them into negative points. The expert statement shall not be included in the prospectus if the expert has not given his written consent, or the expert has withdrawn his consent even before it is delivered to the ROC, or the expert is a person who is engaged or interested in the three categories of the company I want in the same order, either in the promotion that happens before incorporation, or formation or management of the company. Give me all three categories. Shall or shall not be included. The prospectus shall not include the expert statement if the expert has not given his written consent, or the expert has withdrawn his consent before it is delivered with the ROC, the expert is engaged or interested in the promotion or formation or management of the company. Once all the formalities have been completed, we'll have filed with the ROC. Once it is filed with the ROC, we can issue it. But we have to issue it within 90 days from the date on which it is delivered with the ROC, making sure that the information mentioned in this prospectus is actually relevant and fresh new information of the company. If I issue it after 2 years, it will be outdated. I'm giving false information to public. I have to issue it within how many days? 90 days from the date on which it is delivered with the ROC. But once it is issued, how would the investor know whether all documents have been attached or not? On the face of this document prospectus, I'll clearly mention it is being delivered with the ROC. Be rest assured it has already been verified. It doesn't have misstatement. Second, I'll also mention the list of documents which have been attached or annexed to this prospectus so that you will not miss out on even a single document out there. Documents have been attached. I have to specify the list of those documents which have been attached. This will be mentioned on the face of the prospectus. That's your section number 26. Once the prospectus is prepared under section 26, we have to issue it. How would I issue it? I am issuing it to whom? Public at large or select group of persons? Where are we? Section number part 1 or part 2? We'll issue it to whom? Public. If we are issuing it to public, can I issue it to the public specifically individually? I'll make an advertisement. Advertisement under section number 30. While making this advertisement, we have to mention the details of my memorandum of association clearly. 5 points to be mentioned clearly in the same order. Go to the clauses of MOA and draft them. We have the objects of the company. We'll have to mention the capital structure of the company. We have to mention the liabilities of the members, and we have to mention the names of not subscribers to memorandum. They've used the word names of signatories to memorandum. Both of them are same. Companies Act mistake. They did not maintain uniformity, but it's our duty to learn it as they've given it. Names of the signatories to memorandum and number of shares subscribed by each of the signatories to memorandum. These are the 5 points mentioned in the advertisement of the prospectus under section number 30. While you have advertised it, you have to issue securities only in a dematerialized format. This is now basically outdated. Today is all in dematerialized format. But again, contemporaneous expositio. When was the law drafted? 2013. In the year 2013, was it mandated to issue in only in dematerialized form? No. They slowly modified the section over a period of time. States that you have to remember a couple of points here, Amma. Just note it down in the middle itself, sideways somewhere. If you are a public company, you are raising money from public. You have to have the securities only in a dematerialized format. Issue securities only in dematerialized format. If you are which company? A public company, you have to issue securities only in dematerialized format. If you are a specific kind of unlisted company, then you have to hold or transfer your securities only when they are in a dematerialized format. Public company, we have to issue. For unlisted public companies, unlisted specified companies, you have to hold and transfer them only when they are in a dematerialized format. Other companies, what do you mean by other companies? Who will fall under this other company? Private companies. Can these private companies hold the securities, issue the securities? They can issue securities either in a physical form, or they can also issue securities in a dematerialized form, or they can also convert their securities into dematerialized form. All the categories. First, we'll talk about which company, a company which is going for a public offer. They have to, give me the keyword here, issue securities only in a dematerialized form. But if it is unlisted company, prescribed unlisted companies, they have to hold and transfer the securities only in a dematerialized form. But if it is other type of company, specifically we'll include these private companies here. These unlisted companies will have either physical form or dematerialized form, or they can also convert. Anything is allowed for them. Even in 2026, today a private company can issue shares in a physical form. That is a lot more easy for them. Again, why is it easy? How this dematerialization works? We have discussed in the class, but not now. I hope you remember the diagram we have drawn for this. Investor will not give money to the company directly. Investor will give money to the depository participant. Depository participant will give money to the depository. Depository will give money to the company. Company will issue the physical shares to the depository. Depository will keep them in their custody, and they'll issue the physical shares, dematerialized shares to the depository participant. I can have my shares access my shares through my demat account maintained with the depository participant, for which I'll have to pay commission, etc. to them. But end of the day, who is a shareholder? Who is a shareholder? Depository or investor? Depository. Investor is only considered as a beneficial owner. Who is a registered shareholder? Depository. I hope you guys remember that logics. Then we have the types of prospectus. Majorly three types, but we can also include this deemed prospectus in the process. There are three types of prospectus we usually have: 31, 32, 33. Start with section number 31, talks about shelf prospectus. Shelf prospectus means a prospectus where the securities or class of securities included therein are issued for subscription over in one or more issues over a certain period without the issue of further prospectus. I hope your memory is kicking in back. Shelf prospectus means a prospectus where the securities or class of securities included are issued for one or more issues, issued for subscription in one or more issues over a certain period. That certain period shall not exceed how many? 1 year. But for the second or subsequent offer, it is not required to issue a further prospectus without the issue of further prospectus. Where what's happening here? If you remember the flow of the section 131, we will not start with section 31. We will always start with section number 26. We'll file it with the ROC. Once you file it with ROC, you can use the prospectus under section number 26 how many times? Are you able to recollect? Or section number 26, how many times can I use the prospectus? Once. Within how many days should I use the prospectus? 90 days. At the time at which I'm going for the first offer, then I'll apply for shelf prospectus. 31 arises only once you have fulfilled section number 26. What happens first, 26 or 31? 26, then we'll apply for 31. At what point of time? At the time when you're going for the first offer. At the stage of the first offer of securities, I'll make an application to the ROC submitting my shelf prospectus seeking a period not exceeding 1 year, where the period will commence from the first day of opening of the offer. Opening of the first offer, that is basically the original prospectus. But this facility is available for not all companies, only for certain class of companies. Am I going fast? Is it fine? Are you recollecting points? Because only shelf prospectus took us 1.5 hours to complete. I cannot spend that time here, or I can explain the background of it here. If you have any doubts, stop me, I'll explain it to a specific point. Certain class of companies, as may be specified by SEBI, may make an application to the ROC at the time of first offer of securities, providing a period not exceeding 1 year, which will commence from the date of opening of the first offer, where it will extend for a period. If it is extended for the second or subsequent offer, there is no need of providing a further prospectus. If there is no need of providing further prospectus, can I say I'm giving outdated information? To give the updated information of the company, we'll prepare a separate document called as information memorandum. This information memorandum will contain 3 points to it: all the new charges created, the change in the financial position that occurred between the previous offer and the subsequent offer, and such other as may be prescribed. 3 things are mentioned in the information memorandum. This information memorandum might also have misstatements in it. I'll have to file it with the ROC. But if I file it, say, couple of months before, can I say I'm still giving outdated information? The information memorandum shall be as close to the second or the subsequent offer. It shall not be earlier than 1 month from the date of issue of the second or subsequent offer. If I'm issuing the second offer here, I have to make sure that it is filed with ROC within this 1 month. It should not be earlier than 1 month. What are the wordings? It should be earlier than 1 month or not earlier than 1 month. Not earlier than 1 month prior to the issue of second or subsequent offer. Now, as a shareholder, we'll read which document to get the complete picture of the company. We'll read the shelf prospectus along with the information memorandum. Both of them combined together will be called as deemed prospectus. Then we had the advance topic. Once the company has received advance for allotment of securities for a second or subsequent offer, can it allot the securities automatically? No, because the investor was never given the updated information. Investor gave advance based on the original shelf prospectus, but his decision to invest or not to invest might change based on information memorandum. Can the company allot the securities automatically? No. Company has to provide such information to the shareholder, that person, and give him an opportunity to withdraw. If he desires to withdraw, the amount must be refunded. If he does not desire to withdraw, then you can adjust it for allotment, give him shares. But if he desires to withdraw the money, again remember, whenever we talk about refund, refund is always within 15 days. Refund the money within 15 days. That is advanced category. That's your section number. And this can be asked as question again. While you are refunding this money, back, no administrative expenses shall be adjusted. If I have given you 20 lakh rupees as money, I should get exactly 20 lakhs back. Company shall not adjust any kind of administrative or expenses incurred for communication, etc. No adjustment shall be done. Entire money shall be refunded. Entire money in the sense, for our example, I should get back entire 20 lakhs, not even a single penny shall be deducted out of it. Entire 20 lakhs shall be given back. Cannot adjust any administrative expenses. That's your section number 31 talks about what? Shelf prospectus. Then section number 32 talks about red herring prospectus. We require red herring prospectus usually when you're going for an IPO. Initial public offer, when the company is not in a position to analyze the pulse of the shareholders, pulse of the public at large to understand the demand supply. To understand demand supply, I'll go for a dummy prospectus, which is red herring prospectus, to understand demand supply. Once I've understood the demand supply, then I can sit down to create a price of the securities. Try to understand. If a company has already gone for IPO in the past, they have the securities listed on the recognized stock exchange, are they in a position to analyze the market's intention, market demand supply? I can fix the price. This is called as direct fixing, where I'll fix the price, a specific price will be fixed by the company. Or second option, where if I'm not able to fix the price, then I'll go for issuing prospectus or red herring prospectus. Red herring prospectus to understand the price of the securities. If the price of the securities is not understood, I can also say that I'm not able to determine how many securities to be sold. Quantum is also not clearly identifiable. There comes a definition. Red herring prospectus means a prospectus which does not include the complete particulars of quantum on price of the securities. What the wording here, does include or does not include? First and foremost, it is a prospectus. It has every other information except, does not include the complete particulars of quantum. I don't know how many securities to sell, and I don't know at what price to sell. So my complete agenda under section 32 is to understand and determine the price and quantity. Once I've determined the price and quantity, can I come back and fill this? If I fill it, then I can call it as prospectus. So what will be prepared first? Red herring prospectus or prospectus? Red herring prospectus. What happens under 31? What is prepared first? Prospectus or shelf prospectus? Prospectus, then I'll convert that into a shelf prospectus. But here I'll prepare first what? That's the first sentence of section 31. Red herring prospectus is issued prior to the issue of prospectus. But before I issue it to the public at large, I have to get it verified. That means I have to file it with the ROC. It has to be filed with ROC at least 3 days before the opening of subscription. How many days before? At least 3 days before the opening of the subscription, I have to give it to the ROC. ROC will verify the document. Once the subscriptions are open, this is outside your syllabus. Once the subscriptions are open, the public at large will determine the price. Remember the example you have done: opening price, closing price, floor price, cap price. Will get all the demands received. From the demands received, application will build a book building process. Have I added it in the book? Book building process, and this book building process will analyze the money and the demand and supply and come to a closing price. This is all for your knowledge. For exam perspective, one word. Once the red herring prospectus is issued, what's the conclusion on it? We'll do something called as book building process. After doing book building process, you'll come to a price. When the price is ready, let's fulfill the document prospectus. Let's fill the document prospectus. While filling the document prospectus, we have to mention 3 additional informations. We have to mention the total capital raised, the closing price of the securities. They did not mention the quantum. But can I say if I have the total capital raised and the price of the securities, I can automatically identify the quantum? They did not mention it specifically, but I can identify that. What are the 3 things mentioned first? Capital raised, total capital raised, the closing price of the securities, or any other details which could not be included in the red herring prospectus. That means these are the information which arise between red herring prospectus and the prospectus. I'll have to separate them and try to understand the logic behind it. I don't have to separate them into a separate document, because what happened under shelf prospectus topic? The prospectus, shelf prospectus has already been filed with the ROC. I cannot change it. That's the reason the new information was mentioned in a separate document. But red herring prospectus, I've still not filed the prospectus itself. I'll include that all changes that occur directly in the prospectus. But how would the investor know what is the new information? I'll highlight it. They're not called as information memorandum, they are now called as variations. Those variations shall be highlighted so that I'll clearly understand what changes have been made. Highlight the variations in which document? Prospectus itself, no separate document created. Then file it. File it with whom? ROC. And again, we are raising money from public at large. We'll also file it specifically to the SEBI. That's your section number 32. This is not required amount, just for your knowledge. You may or may not read it. Coming to this part, 33. What is it called as? Abridged prospectus in a simple sense, or otherwise issue of application of securities. Now we'll start with the application form here. To invest securities, you have to fill the application form and send it back to the company. Remember the 3 stages of raising finance? Remember the first thing we have learned in our syllabus, not even prospectus chapter. In preliminary chapter, we will learn this logic. The company to raise finances will go through 3 stages. The company will issue a document called as prospectus to the investor. Investor will read the prospectus. If satisfied, he'll send back an application form along with the application money. Now, because of this structure, the company is an offerer or offeree? Offeree. Investor is an offerer. Company being an offeree has 2 options in their hand. Technical words, either allot or refund. If allotted, they'll become the shareholder, but to prove that you are shareholder, I'll give you a share certificate. To remember that you are shareholder, I'll enter your name in the register of members. Now try to recollect that chart and give me this answer. To become a shareholder, you have to send an offer to the company. You have to send the application form. This application form will be given by the company itself. You don't apply your knowledge, you don't apply your brain. I know you're very talented, I'll give you the application form. Who gives the application form? Company itself. You fill it and send it back to the company. But if I give you the application form alone without prospectus, I'll not explain about myself, but I want you to invest. And there will be shareholders who are fools enough to still fill it, even though they were never given information about the company. Then the company side stated that every application form sent by the company shall be accompanied with a prospectus. But I agree with the fact that if you send entire prospectus to every single prospective investor, you have to basically sell half of the company. I understand the financial problem here. I'll not ask you to send the entire prospectus. At least send the abridged prospectus, which is a summary, which contains only the silent features. Now, based on this, give me the definition here. Abridged prospectus means a memorandum containing silent features of the prospectus as may be specified by SEBI. I mean, you don't decide what is important, what is not important. SEBI will decide it. Whatever SEBI decided, put it in that document. I'll call it as abridged prospectus. So, give me the concept. Every single application sent by the company shall be accompanied with an abridged prospectus. But if I send the abridged prospectus without the application form, I'm bluffing the investors. Allowed or not allowed? Every application sent without abridged prospectus will be punished with an amount of 50,000 rupees. Every document will be punished with an amount of 50,000 rupees. But there is an exception. There are 3 exceptions to it. Copy pasted from 26 itself. What are the 3 exceptions? When the securities are offered to the existing shareholders, or when the securities are not even offered to the public, they are given through private placement or given to my promoter. I don't have to give it. Or when we are entering into an underwriting agreement. What are the 3 exceptions we have? If they are offered to the existing shareholders, if they are not offered to the public, or they are offered through the underwriting agreement, I don't have to give a abridged prospectus. I can simply roll out the application form. But once an application form is sent with only abridged prospectus, there will be shareholders who have read the abridged prospectus but did not get a complete clarity on the company, were not fully satisfied. Can they request for full prospectus? On request, the company is required to provide such full prospectus, but I'll provide it only when the request is received after the closure of subscription or before the closure of subscription. If I give it after the closure of subscription, what's the meaning of it? He'll not even be able to invest it. He will, if it is requested, at what point of time? Before the closure of subscription, I'll provide abridged or full prospectus. Original prospectus as per 26 will be provided. Now give me linking here also. 33 or 26, which will happen first? 26. We'll prepare the original prospectus, then we'll summarize into abridged. So give me all three sections here. 31, what will happen first? 31 or 26? 26, then we'll convert it into 31. 26 or 32, which will happen first? 32, then we'll have the full prospectus 26. Then section number 33 or 26, which will happen first? 26, then we'll summarize them into 33. Chal, that's your types of prospectus. Then we have deemed prospectus. Interesting logic. It is linked with a case study called as Peak versus Gurney. Peak versus Gurney, remember? Again, it was not part of a syllabus. You don't have to much remember about it, but still, that is useful to understand section 25. Peak versus Gurney talks about a case study where I hope you remember the concept in it at least. If a shares are purchased in the primary market and the prospectus has a misstatement, we'll always assume that the person purchasing securities, subscribing securities from the primary market has read and understood and had relied upon the prospectus. But if at all he is purchasing it from the secondary market, even though he might have read the prospectus, we'll assume that he has never read and understood or relied upon the prospectus, he relied upon the market conditions. So when will the company held liable for misstatement in prospectus? Primary market or secondary market? This was a final conclusion of Peak versus Gurney, where the company is held liable for misstatements in prospectus only for such people who have purchased securities in the primary market, because we take an assumption that they relied on the prospectus. But if you are purchasing securities from the secondary market, we will assume that you relied on the prospectus or market conditions. You did not rely on prospectus, even though prospectus has had a misstatement. Will you be liable or not liable? Not liable in which market? Secondary market. You are still held liable under primary market. This was a conclusion of Peak versus Gurney. Now, based on this section starts. Where? Understand the definition first. Where the company allots or agrees to allot any of its securities with a view that either all or any part of them are offered for subscription to public, the document by which such offer is made shall for all purposes deemed to be a prospectus issued by the company. Good morning. What is this? Where are we? Section number 25. What's happening? Let me cut it down into multiple parts. Where the company allots or agrees to allot any of the securities of the company. Is this fine first? Company is trying to allot securities. Where the company is trying to allot securities not with an intention to sell it to a particular person, but with a view that those securities, either all of them or a part of them, are being offered for sale to the public. I'm not offering it to public directly, but my intention was to offer them to the public. I'm offering securities, if you remember, I'm offering securities to a particular person where the securities are not intended to be offered to this particular person, but it is always intended to be offered to the public. Are you guys remembering the chart? Deemed prospectus, deemed director, deemed public offer. Are you remembering it? Should I show it? Where are we? Section number 25. Shall we? Look at it. A company is offering securities to a particular person. Now give me the definition again. Where the company allots or agrees to allot any of its securities with a view, not to offer to this person, with a view that these securities, either all of them or part of them, are offered to the public for subscription, offered for subscription to public. If they are intended to be offered to the public, then the document by which those securities are offered to public shall, for all purposes, deemed to be a prospectus. Prospectus issued by the company. That means if the prospectus issued by the company to them directly, that means it is not secondary market anymore. It is considered as a. If it is a primary market, where the company is liable. liable with all the penalties under section numbers 34 to 37. All the penalties will apply to them. So what's the logic here? Is this diagram clear first of all? Originally speaking, if I did not apply section 25, if I did not assume it to be prospectus, this is second primary market, this is secondary market. But the company's intention was never to sell securities to a particular person, but sell securities to the public. Now define the definition for me. Where the company allots or agrees to allot any of the securities with a view that those securities, either all or part of them, are offered for subscription to public, offered for sale to the public. Then the document by which that offer for sale to public is made shall for all purposes deem it to be a prospectus issued by the company. But when will I deem it to be issued by a company? Three conditions are there. In these three situations, I'll deem it to be an intention to be offering to the public at large. I'll come to these three situations. If I deem it to be public offer, can I say you'll be liable? Liable under section numbers 34 to 38. I wrote it while we were discussing 25, but if I had to technically answer it, it is only till 37. Try to understand. 38 was a penalty imposed on the investor shareholder if he has given wrong information. Company will be punished from section numbers 34 to 37 and obviously section number 447. But while we were discussing this section, you did not have knowledge about 38. I did not mention it. But technically it should be 37 or 38. 37. Now this is considered as primary market or secondary market? It is considered now as a primary market. It is because the document is assumed to be issued directly by the company. It is now considered as a primary market. If it is primary market, can I say all the provisions will apply? In addition to the provisions, I also mention extra points. I'll come to that in extra points in a minute. That's not important. This is important. When will it be deemed to be prospectus? It will be deemed to be prospectus in three scenarios. What are the three scenarios? When the securities are offered to the public. Who is offering? This person is offering securities to the public within 6 months from the date of allotment. Within 6 months from the date on which he has received securities from the company, he allotted these securities to the public. That means he never had the intention to hold them. He never had the intention to hold them. His intention was always to sell it to the public. It will be deemed to be a prospectus. What are the wordings here? When the securities are offered to the public within from the date of allotment, or from the date on which these securities are offered to public, the company has not received its consideration. If the company has not received consideration, the public will pay consideration to this person, and this person will pay consideration to the company, which is coming from whose pocket? Indirectly speaking, I have sold securities to, where the company has not received full consideration on the date on which those securities are offered to the public. On the date on which securities are offered to public, company has not received full consideration at the time on which they are offered to public. Will be linked with section 62. Now you have knowledge of 62. Give me the answer. Rights issue. When we give rights issue to the existing shareholders, they have three options there. They can either approve, accept it, or decline it, or they can renounce it. Remember, I can transfer my right to purchase shares to another person. Either accept, I'll purchase it. Decline, nobody will purchase it. Or renounce. Renouncing is what? Selling the shares or selling the right to purchase shares. Right to purchase. If I renounced it, who will purchase it? Some random third party will go to the company and purchase it. So now apply this for this logic of deemed prospectus. The company issued securities to its existing members. If it is two existing members, can I say it is public offer or select group of persons? Public offer or select group of persons? Select group. They are not outsiders. They are known to me. I know these people. I identify these people. They are identified persons. So can I say this is kind of private placement or public offer? Private placement. But if I have given private placement to my existing shareholders, but these existing shareholders renounce it to an outsider, I'm indirectly selling it to outsider. But it will be considered as deemed prospectus only when the renunciations are exceeding 15 number. Given the entire concept. When the company goes for a rights issue, where they have given an option to renounce the securities and the renunciations are exceeding 50, it will be deemed to be a public offer. It will be deemed to be a prospectus. So that means the company, even though they never had intention to raise money from public at large, it will be still deemed. That's the reason section 62 has given the right of renunciation can be restricted by articles of association. So what will happen practically? Will the company give you the renunciation right? No. If I give it, and if you renounce it, and the number of renunciations are more than, it will be automatically deemed to be a public offer. That means I have to follow the entire chapter prospectus. Why would I follow entire chapter prospectus? I'll restrict that right. Are you linking with both the sections here? Here it is called as public offer. Because here it is called as public offer, I'll suffer. I have to say entire chapter 3 has to be applied now. What will I do? 62, I have an option to restrict the right of renunciation. Usual answer, how many rights should be given to you? How many options should be given? 3. Accept, decline, or renounce. But the right to renounce can be restricted by the AUDIT. Practically speaking, what will they do? Will they give you or restrict it? Restrict it. So what is section 62 linking here? If it is rights issue, they have provided you the right of, you know my spelling, so renunciation, and the renunciation is exceeding 50 members, then it is deemed to be a prospectus. If it is deemed to be prospectus, I want extra information in it. The person who is offering securities to public, this guy, should he be punished? Yes. If it is deemed prospectus, will the company be punished? Will the directors of the company will be punished? But the point is, this person is slipping out from the concept because he was never a director, he was never a part of the company, he was an outsider. But was he also involved in the wrongful activity? Should he be also punished? Then he should be named as a director. If you remember section number 35 concept, damages are required to be paid by the company, including the director, the person who is named as a director in the prospectus. This person will also be liable for section number 34-35, named as a director. The net consideration which is received or receivable from the entire prospectus topic, because the public don't know exactly how much you have raised in nature, and the terms and the time and place where this entire document can be inspected by the members. What is the document? Term, time and place where the document can be inspected has to be mentioned as an additional information in the prospectus. If you fail to provide that information, you will be punished under section number 30, 34 to 37. And then section number 28, last lemma. These are the basic points done. Then we have allotment process started. Section 28 talks about offer for sale. A very quick logic again. Offer for sale is something which is easy from the chart itself. Who is selling securities? Securities are being sold by a specific member. Specific member. Did we draw this? Did we not? Did we not draw this? Fine, I'll explain it directly. What's happening here? Who is shareholder? The shareholder wants to sell certain number of his shares to the public at large, but usually the trading in the stock exchange is restricted to a certain limit. If you're not having enough amount of possibilities to sell it directly to the stock exchange, through the stock exchange, the member of company with the help of the company will sell securities to the public. What's happening here? Who is selling? A specific member, a certain member is trying to sell securities to the public. But to sell the securities to public, because he does not have the access to do it directly, he'll take the help of the company. Now give me one more answer. Whose securities are being sold? Certain member. It is being sold to the, but who will act as a bridging gap between them? Company. Company will sell it to the public at large. But if you look at it from the public's perspective, public will be in the perspective that they have been sold securities from the company. Then the company has to issue a document and explain everything about it. The document by which those securities are offered to the public shall be deemed to be a prospectus. Here also it is called as deemed prospectus. But to sell the securities, Nemodat quod non habet comes in place. I did not scold you. What is it? Nemodat quod non habet. No one can give what he has not got. Those particular shares are belonging to the certain member, not to the company. Can the company sell it on their own? Company is not an owner of it. Company cannot transfer the ownership. Company has to get authorization from the certain member. Who should give authorization? Certain member has to give authorization to the company to do everything, all actions in respect for offer sale, offer for sale. Once the securities are sold, the company will in this process will incur certain expenses. If it is incurring expenses, those expenses should have been incurred by the certain member. It will be recovered, reimbursed from the certain member. Reimbursement will be done. I'll be able to recover such expenses. But there are certain concepts which are not required to be mentioned in this prospectus because company is never raising money. Try to understand by the end of this offer for sale, has the company's capital increased? Capital, finance, number of shares, nothing got increased. Who got benefit? Certain member for which I have helped him. I'll get commission, but my capital has remained the same. My total number of shares have remained the same, but my shareholders have changed. If I'm not getting any benefit, I'm not using it for my business purposes. There are 4 things which are not required to be mentioned: the minimum subscription amount, minimum application money, a statement from the director about utilization of fund, or such other information which could not be gathered with proper justifications. 4 points more. Such minimum subscription, minimum application, statement from board of directors regarding how and when the money will be utilized, utilization of money, and such other provisions which could not be gathered without detailed justification why the information could not be gathered. These are the things which are additional or relaxation. Required or not required? Not required to be mentioned in the prospectus. 27 is basically your object clause, alteration of object clause, copy pasted. Fine. We don't have to discuss it, right? Section 13 is copy pasted into section number 27. Variation of certain contracts. Section number 39 and 40. We'll do 39 first. What is section number 39? Both of them are important. Section number 39. Section number 39 talks about allotment of securities. Shares will be allotted. Securities will be allotted to the investors. We have a chart for this. We'll do it from the chart. Section number 39. 39 called as what? Allotment of securities. Concept is straightforward. Allotment of securities, you can allot securities only when 2 conditions have been satisfied. The 2 conditions are you have to receive minimum subscription amount and minimum application money. How many conditions are to be satisfied? 2 conditions. Both the following conditions have to be satisfied. The first condition is minimum subscription amount and minimum application money. Minimum subscription amount as per Companies Act states that the amount mentioned in the prospectus, it will be mentioned by the board of directors. What's happening here? If the company issues prospectus for rupees 10 crore, issued for how much? 10 crores. If they have received 9.9 crores, is it over subscription or under subscription? Even though it is under subscription, can I say I can adjust with this money? But if at all in the same case, the issued amount is 10 crores, but I have received only 2 CR, is it over subscription or under subscription? But if I start business with this 2 crores, will I make profits? I cannot actually start business with this little amount of 2 CR. It will not be sufficient for my business. Hence the business will automatically make a. If it is making a loss, it is a loss for the shareholders. Then Companies Act states that why to allot securities if you're obviously going to make a loss. Companies Act states that allot securities only when the bare minimum money which is required to start your business is received. That bare minimum money is called as minimum subscription amount. But who will understand what is bare minimum, how much can I compromise, etc.? Not shareholders. Who will understand that? Board of directors. They'll mention amount mentioned in the prospectus. Who will make an estimate? Board of directors mentioned that 10 crores is required. But board of directors also mentioned that if not 10 crores, if I receive 7 crores, I can adjust again and I start the business. That 7 crores is called as amount mentioned in the prospectus by the board of directors. But SEBI states that, sir, what happens if they have made an estimate which goes wrong? If their estimate goes wrong, it will be a loss for the public at large, especially when you are raising money from public at large. I don't want to take that risk. I don't care about board of directors. I'll slap in 90% for whatever business you are. I don't care what business you are. I don't care about the board of directors intention. I'll put it as 90% to make sure that Board of directors are not misusing the free hand given to them under Companies Act. SEBI states that how much percentage? 90% of the issued capital. Now we have to satisfy both the categories. At the same point of time, I am receiving the application form along with the application money. Companies Act is outdated but conceptually correct. They have to receive at least 5% of the nominal value. Face value or nominal value? Sorry, face value or issue price? Face value. Only 5% of face value. Will it create a fear of losing money? Then SEBI created law stating that it must be 25% of the issue price, but practically how much is collected in the today's market? 100% of the issue price. But on papers, 5% of nominal value, 25% of the issue price. If both the conditions are satisfied within 30 days from the date of receipt, date of issue of prospectus. How many days? 30 days from the date of issue of prospectus. If it is satisfied, yes, we'll go for allotment. If it is not satisfied, we have to refund. We have to refund the money within a time frame of 15 days. 15 days from the closure of the issue. If you have failed to refund it within 15 days from the closure of issue, you will be penalized with an interest at the rate of 15% per annum. Simple interest, but 15% per annum. Refund, if it is refunded after 15 days, you will be charged with 15% per annum. But if the answer was yes, it was both the conditions were satisfied within 30 days, you will allot. Allot within how many days? Sorry, allot. Once allotment is done, we have to inform it to the ROC stating that we have done the allotment. We will file a document called as written of allotment. The written of allotment has to be filed with the ROC within 30 days. 30 days from the date of allotment, providing the 4 basic details about my allottees. Name of the allottee, address of the allottee, occupation of the allottee. These 3 details are collected to make sure that it is not a fictitious person. I want his name, address, occupation, and number of securities allotted for each of the allottee. What are the 4 points to be included in this document? Name, address, occupation, number of securities allotted to each of the allottee. This was a section originally done. But if the securities have been allotted for a consideration other than cash, the board of directors might have allotted securities for an undervalued asset. Asset might be only 10 lakhs, but they might have allotted securities worth rupees 10 crores. It's a loss for the company. I want to check it. Loss for the shareholders, I want to check it. If the consideration received is other than cash, I want to verify it. In addition to the written of allotment, the company should also file additional 3 documents. They have to file what 3 additional documents? A copy of the contract which is duly stamped between the company and that person through which the securities have been allotted. Basically the contract between that person. But this contract can be easily manipulated. Then I want to check the trend in which the property was sold in the past. If in the past the property was sold for 1 lakh, can it be sold for 10 crores today? Are you getting the point? This contract between me and the shareholder can be manipulated. It is between us. But if I understand the previous contracts, I'll understand the actual value of the property. I'll submit all the previous contract of sales for such transaction. All the previous contract of sales so that I can understand the linking between the previous contract and current contract. Previous contract it was sold for 1 lakh rupees. Current contract it is sold for 10 crores. Is it justifiable? I'll conduct an investigation. Or submit a better option is submit a valuation report. Conducted by whom? Who will conduct valuations? Registered valuer. That's our section number 39. Once section 39 is completed, now jump into section 40. If you remember, section 40 was divided into 3 categories. We'll talk about, again, we have discussed in this class, section 40 could have been 3 different sections. It is not linked with each other. It could have been 3 separate sections, but Companies Act MCA decided to draft it in a single format. First logic, we have to get the securities listed. We have to get securities listed in the recognized stock exchange, but the problem is to get the securities listed, the securities must be existing. For the securities to exist, I have to issue the prospectus. But to issue the prospectus, I have to get the securities. To get the securities listed, securities must be existing. For the securities to exist, I should allot. To allot, I should issue the. But to issue the prospectus, I have to get the securities. The cycle will never fulfill. Listing will never happen before the issue of prospectus. A lot of people get this wrong perception. Again, not to blame them because they have only knowledge of Companies Act. Link it with SEBI regulations. SEBI regulations clearly states that we don't have to get listing at Before the issue of prospectus, we are not expected to get listing. It is not practically possible to get listed. Listing actually happens after the issue of prospectus, but before issue of prospectus, you just have to take a permission. That permission, Companies Act uses a layman language permission. SEBI regulations use the word in principle approval. We have to get an in principle approval, or simple terms, we have to take a permission. Permission from how many recognized stock exchange? Any one of the recognized stock exchange. I have to get a permission for my securities listing. Give me the wordings here. Permission happens at what point of time? Before issue or after issue? Before issue, but listing happens at what point of time? After the issue. We have to obtain a permission. Once you obtain the permission, before the issue of prospectus, mention the names of the stock exchanges from which you have got a permission in the prospectus. Can I mention only one? Can I mention 2, 3, 4? If I mention 3, I have to get approval from all 3. If I mention 2, I have to get approval from all 2, both of them. If I mention only 1, I'll get permission from 1. If there's a scenario where I've mentioned 3 names in the prospectus, 3 stock exchange names in the prospectus, but I got approval only from 2 of them. Answer to the question asked, is it still considered as, is it enough for listing process? Yes, but can I say I'm giving wrong information to the shareholders? Can I allot securities? Allotment is not allowed unless you got permission from every stock exchange whose name is mentioned in the prospectus. If I mention 3, I have to get permission from all 3. Then this application money format. Application money once received, can I use the money directly? Can I put it in my bank account of the company? I have to put it in a separate bank account, in a scheduled bank, an escrow account. This escrow account can be used for 2 purposes. Either for adjustment against allotment of securities, I'll allot the securities, or otherwise I will refund it. Refund within how many days? 15 days. That 15 days is given under section number 39. But it has to be refunded from this escrow account given under section number 40. It has to be refunded only to that bank account from which the money has been received. If I received money from Chaitanya's SBI bank account, I have to refund money only to Chaitanya's SBI bank account. I am not even allowed to refund money to Chaitanya's HDFC account also. The money must be refunded only to the bank account from which money is received. To maintain transparency and to reduce black money or money laundering process, I have introduced this logic extra. Commission point. We'll appoint a person called as important, very important commission logic. Are you still with me? Good morning. Probably another 20-25 minutes should be done. Where are we? Section number? Section number? Which chapter? Prospectus. Why are we doing this? Why are we doing this? Chapter 3, Companies Act. Why are we doing all this? We decided we will choose the toughest exam in the world. Unfortunately, unfortunately, we ended up choosing what? CA, out of which we have how many subjects? 5. Out of which we have one subject called as law, which is the most important subject, obviously. Most important? Which is more important for us? Tax or law? Tax చెప్తే బయటికి పంపించేస్తాను. Tax or SM or law? I'll agree. SM is more important. But and start commission. We'll appoint a person called as underwriter. This underwriter is responsible to invite the public at large, make sure that the information about the company is reaching to the public at large, and encourage them to come and invest into the company. For doing that activity, I'll pay him commission. Now start the process. Which company can appoint underwriter? Only such company which is authorized by its AOA can appoint an underwriter. Once underwriter is appointed, now the question is, who can act as underwriter? There is no restriction. Any person who is able to influence people, any person who is able to speak correctly, can he be appointed as underwriter? Chaitanya, he is a second class fail. Sorry, optimistic. First class. Passed. Can he act as underwriter? Does he know how to put a signature? No. He's still going to be using his thumb impression, but can he still influence people? Yes. Is there any qualification required? Who can act as an underwriter? Any person. Once he's appointed as underwriter, why is he appointed? Why is he putting efforts? I'll pay him commission. Who will pay the commission? Company. How much commission can I pay? Can I pay any amount of commission? If I lure him by paying extra commission, there's a chance that he might give a wrong information or misleading information to the public. So commission has been restricted. Commission will always start with the wordings commission shall not exceed. Shall not exceed, talking about shares first, shall not exceed 5% of face value or issue price. As an underwriter, you are putting efforts for making the public invest face value or issue price. That means your efforts were more, your commission should also be more. That means it is based on 5% of the issue price or the rate prescribed or mentioned in the AUA, whichever is lower. What's the pricings here? 5% of the issue price or the rate considered authorized in the AUA, whichever is lower. But if it is debentures, it will be easy for me to convince because risk in debentures is lower. It will be easy for me to convince because you'll get a fixed rate of return better than bank and you'll get the money on a mandatory basis. It will be redeemed, which is easy to convince to invest into shares or to invest into debentures. Hence, debentures, I'll not pay 5%, I'll pay 2.5. Now, give me clarity on it. If say it is shares itself, the articles of association mentioned 4%, I can pay a maximum of 4%. Articles of association mentioned 7%, I can pay a maximum of 5%. Articles mentioned only 2%, 1%. But from where will I pay this money? Commission will be paid out of the proceeds of issue. Whatever the money is received from such public offer, I'll use it to pay it. Or I can pay it from the profits because I want this proceeds to be used specifically for a project. I don't want to disturb that money. I can pay it out of my profits, reserves of the company, or both. Proceeds of the issue or profits of the company, or both. I'll pay commission. Why am I paying commission? So that the underwriter is taking the information of the company to the public at large. But if I'm selling my securities to the promoter, is it public? If it is not public, has the underwriter put any efforts? If he has not put any efforts, will I pay him commission? No commission shall be paid for the securities which are not offered to the public. If they are offered to public, that means you have put in efforts. I'll pay you commission. But we have done this already. We started the underwriting topic. We started underwriting topic with this logic. Remember the numbers, say, we'll keep it simple on the numbers. Issue price was, issued capital was 100. What's the minimum subscription to be received as per SEBI regulations? 90%, that is 90 crores will be the subscribed capital. How much is issued capital? 100. How much should be the subscribed capital? And we have appointed Jaggu as an underwriter. Once Jaggu was up, remember the speech given by Jaggu? Remember? No. He gave a beautiful speech and nobody invested after the speech. After Jaggu was appointed as an underwriter, he was able to attract only 70 crores of subscriptions. The minimum subscription required was 90. The actual subscription received was 70. Whose default? Companies or underwriter? Because of his speech, the number of subscriptions got reduced. Because of him, the subscription did not receive. The Companies Act states that the balance of actual subscription and minimum subscription has to be filled by the underwriter. These are called as what kind of underwriting? Conditional underwriting. He has to purchase it on the condition that he did not meet the minimum subscription. But if he comes for boosting about the company, if he comes about speaking about the company, the first doubt the investor will ask is, have you invested? For that, we have a concept called as absolute underwriting. This part is called as what? Conditional underwriting. This part is called as absolute underwriting. If the minimum subscription is satisfied, am I still required to purchase absolute underwriting? But I'm not required to have any conditional. If the minimum subscription is not satisfied, I have to purchase absolute as well as conditional underwriting. Now come to this point. Once this underwriter has been appointed, when is he appointed? Even before the issue of prospectus, his names and particulars are mentioned in the prospectus. What is mentioned in the prospectus? The name of the underwriter, the rate or the amount at which. When am I mentioning this? Before the issue of prospectus. Do I know exactly how much commission will I pay? No. Hence I use the word. The amount or rate of commission paid or to be paid. Paid or to be paid, Amma? To be paid. Commission payable to be paid to the underwriter. And the details about the subscription to be subscribed by underwriter, that is either absolute or conditional. and this underwriting agreement which we have entered into has to be delivered with the ROC. Delivered with ROC, but this did not have a time limit. It has to be delivered with ROC along with the prospectus, which is delivered under section number 26. Along with the prospectus, go deliver this underwriter commission. That's why section number 39 and 40, both of them are very, very important. The peak versus Garni just for reference, not important for exam. And then comes our misstatement category and the penalties category. Uberema fidus. Again, learn. They will be useful in your life also. All these Latin words. If you at all get angry at anybody, can we use unparliamentary words? They'll beat you up. We'll better use what? Latin words. They'll not understand it. We'll use the Latin word and run away from there. What's the first Latin? What's the Latin word we have here? Uberema fidus. What is uberema fidus? Maintaining utmost good faith. Who has to maintain good faith? Basically, it was a contract. It was a contract between two people, investor and the company, where both the parties have to maintain utmost good faith. Now, under Companies Act, we'll talk about company more in nature. The company will disclose information through the document called as prospectus, and the prospectus must be disclosing all correct information. It should be true and correct. It should be with absolute accuracy. Extreme accuracy must be maintained in the prospectus. Any information which is concealed, we call it as omission, or any information which is concealed, omitted, which is omission, or information which is mentioned but wrongfully mentioned, it is called as commission. Either it is commission or omission, it will be called as misstatement in the prospectus. The prospectus is misleading in nature. If it is a misstatement, people will be punished. Start with section number 34, 35. Give me a clarity of all 5 sections we have, then we'll start it. Section number 34 talks about what liability? Criminal liability for misstatement in the prospectus. I'll impose penalty on you. 35 talks about civil liability for misstatement in prospectus, where I'll impose damages. I'll ask you to pay damages. But these 2 sections were restricted for the misstatement in the prospectus. If there was misstatement, if there was misleading that happened beyond prospectus, I'll apply section number 36. 36 is a punishment for fraudulently inducing a person to invest. Section number 34. What is 34? Criminal liability for misstatement in the prospectus. 35. Civil liability for misstatement in the prospectus. If you have failed to fulfill under 34, 35, I'll have a backup. 36. Punishment for fraudulently inducing a person to invest money. If you are a person who got affected under 34, 35, 36, you have a right to go cry with the court, NCLT. Under section number, make an appeal, file a suit. File a suit under section number 37 if you are affected by section number 34, 35, 36. These are your 4 sections here. 34, 35, 36 and 37. 37, action by an affected person. They can cry with whom? NCLT under section number. If they got affected under section number 34, 35, 36. Then 38 is a special logic where it is a fraudulent activity induced by the shareholder, inducing whom? Company. They will be punished under section number 447 from section number 38 linking. Start with the concept. Before we start with those concepts, we have Indian Contract Act. Quickly run through the Indian Contract Act. Indian Contract Act, again, you have given false information or true information. Intentional, unintentional. If it is intentional, it is fraud. If it is fraud, it is free consent or without free consent. If it is without free consent, the contract is valid, void or voidable. Voidable is the option of the aggrieved party. Who is the aggrieved party? Investor. The investor, can he cancel the contract? If he repudiates the contract, I am using all the Contract Act wordings, not Companies Act wordings here. This is it is an extract of Contract Act. If they repudiate the contract will be cancelled. If the contract is cancelled, can I have to get the money back? I'll get the entire money refunded and I'll also get damages if the contract has been repudiated. If the contract is not repudiated, if the contract is continued, I never filed a suit against. The contract is considered as valid. Originally speaking, the contract is valid, void or voidable. Voidable, I have the right to rescission. Rescission means cancellation of contract. I can repudiate the contract if it is having a misleading information. But in this situation, if the court passes an order to repudiate the contract, I'll get the entire money refunded along with the damages, incidental cost incurred along with interest. Give me 3 words, I'll get back what? My money invested. I'll get interest on the money invested and also get Incident. What do you mean by incidental cost? Nothing but damages. I'll get damages on the losses I've incurred in the process. But there is an exception. Interesting exception. When does this Indian contractor does not apply? When are you not considered as relying on the prospectus? If you have purchased it from the secondary market, you never relied on the prospectus, the contract is considered as valid. Or you are a person who is acting as a subscriber to memorandum. When did you agree to purchase the shares? Even before? Forget about prospectus. Even before incorporation, you never read the prospectus. By the time you agreed to purchase, prospectus was not even prepared at all. Can you state that I relied on the prospectus? Were you fooled by the prospectus? No. Hence, can you repeat the contract? No. What are the two exceptions? When you purchase equities from the secondary market or you are acting as a subscriber to memorandum. Can you claim damages? Straightforward, you can claim damages. You are allowed to claim damages. If you have suffered any kind of loss, you can claim damages. That's a basic answer of that. Coming to 35. Remember, we'll not start with 34. We'll always start with 34. 35. What is 35? Civil liability for misstatement in the prospectus. If there was a misstatement in prospectus, if there was a fraudulent information in the prospectus which has misled the investor, investor has incurred a loss, damages. Those damages must be paid. Only question that lies is who will pay the damages. We have a list of people who will pay it. Remember? Shall we start? Same order if possible. Who will pay the damages? First and foremost, company and includes. Company and includes whom? A person who is the director of the company or a person who is agreed to become a director. To be in simple terms, proposed director. But I'll use the word a person who has agreed to become director or a person who is named as director, but I want proper wordings. A person who has authorized himself. Who authorized it? Himself. A person who authorized himself to be named as director and is named as such in the prospectus. Now try to understand. Jagu gave me authorization to mention his name in the prospectus, but I believe that his name mentioned will disattract the investors. I did not mention his name. Did he give authorization? Did I mention? Will he be liable? No. He did not give his authorization. I mentioned Mukesh Ambani's name. He never gave authorization. I mentioned his name in the prospectus as director. Will he be liable? I want two satisfactions here. Two conditions to be satisfied. He has to authorize himself to be named. And the company has named him as such in the prospectus. These are the first 3 points we have. A person who is actual director, a person who has agreed to become director, a person who has authorized himself and has been named as such in the prospectus, or a person who is an expert or a person who is a promoter. Expert and promoter. And last point is your favorite. At least answer this somewhere. Such other as may be precise. Such other person who has authorized the issue of prospectus shall be held liable. But they'll be liable for paying what? Damages or penalty? Damages. How much damages? If you have suffered loss of 10 lakhs, I'll pay 10 lakhs. If you have suffered loss of 100 crores, if you have suffered loss of 2 rupees, I'll pay 2 rupees. That means the liability of these persons will be limited or unlimited. Unlimited, there will be personal liability or liability to the extent of business assets. Personal liability. I don't care about company, I'll care about the personal liability of these persons. But there comes an important part of the process, exceptions. There are 3 exceptions where the people will not be held liable if he has withdrawn his consent to become a director. That means he is not a director and he has not even agreed to become a director, he will not be liable. Where the person has withdrawn his consent to become a director or the prospectus was issued without his consent or knowledge. Upon becoming aware of it, he has given a reasonable public notice that the prospectus was issued without his consent or knowledge. What's the logic? Was the prospectus issued? Yes or no? With his knowledge or without his knowledge? He did not know that prospectus issued, he never checked it, but it was issued. After he got to know that it was issued, how will he get to know, sir? Prospectus is being advertised. He'll get to know after it is issued. After knowing it, if he stays silent. Deemed acceptance. Remember, we have learned this in a concept of fraud. Silence amounts to acceptance. Silence does not amount to acceptance in certain cases. Silence amounts to acceptance in certain cases. One of the exceptions is this logic. If he remains silent, it is assumed that he has accepted it. That means he has to give a public notice, a reasonable public notice. What are the keywords you have to remember? The prospectus was issued without his consent or knowledge. Upon being aware, he has served a reasonable public notice that the prospectus was issued without his consent or knowledge. And the last point, we never believed on the, we gave a statement, right? To understand, it was a complicated topic. An expert gave a statement. Say, I'm an expert, I'm a chartered accountant, I gave a statement. My statement had false information in it. Will I be punished? Yes, there's no doubt in it. I'm not talking about this person anymore. Expand it. I gave an expert statement. Based on this expert statement, believing the expert statement, you give a statement on your own. If the expert statement itself is wrong, your statement is also wrong. But have you intentionally given any wrong? You have relied upon the authority of an expert. If you have made a statement on the authority of an expert which is misleading, I'm not talking about expert. Expert will be liable. Are you liable? You never made it with an intention to deceive the investor. Will you be liable or exempted? Only point you have to remember is you made a statement on the authority of an expert whom you believed to be a competent person. That's enough for the 3 exceptions here. Then section number 34 was very small section. 34 simply states that we are talking about civil liability. We have to punish them. What's the logic under 34? I don't want to miss anything if the prospectus, where the prospectus is issued, circulated or distributed, and it contains a misstatement which is misleading. First point, the misstatement is actually misleading. Or second point, omission or commission which is likely to mislead. Are you getting the 2 points clear? First point, it is actually misleading. Second point, that omission or inclusion is likely to mislead. Then every person who has authorized the issue of such prospectus shall be liable under section number 447. But there are 2 exceptions. If that information which you have missed or mentioned is immaterial in nature. Remember, we have done the rounding off of our profit. The profit was somewhere around 9.8 rupees or something. We have rounded off to rupees 10. Is it misstatement? Yes or no? Yes, because we were expecting what? Absolute accuracy. It is misstatement, but you will not be punished because it is immaterial in nature. Or when the person, this is regarding the topic of misrepresentation, the person issuing the prospectus believed that the statement given was true and continue to believe until the prospectus has been issued that the document given was believed up to the time of issue of the prospectus that it was true. That means, did he have wrong intention? Was it fraudulent intention? Did he have intention to deceive anybody? No. Hence, he will not be liable under section number 447. That's a summary chart of both the sections 34, 35. Go through that. Section 36. I know you have forgotten the entire sentence. If you remember, section 36 was a single sentence section. Single sentence. Entire sentence we have revised it. You have revised it. You yourself has revised in the class also, but I know you have forgotten it. Section 36. What is section 36? Punishment for fraudulently inducing a person to invest money. What is this? Any person who knowingly or recklessly makes a statement which is false, misleading, or defective, or conceals a material fact with the intention to enter into an agreement, with the intention to induce another person to enter into an agreement for purchasing, subscribing, or underwriting securities, with the intention to enter into an agreement for securing profit, or with an intention to enter into an agreement to obtain a credit facility from a bank or financial institution, shall be held liable under section number 447. What is it? Section number 447. Start. Section number 36 states that any person, either he is giving it knowingly or recklessly. What is he giving? He is giving a statement, or he is giving a promise, or he is giving a forecast, or he is making a prediction about the future. He is making a statement, promise, forecast, or prediction which is false, defective, misleading, or conceals a material fact. Basically, what happened? He is giving a wrong information. To be putting it in simple terms, he is giving wrong information knowingly. Why is he giving such wrong information? To induce another person to enter into an agreement for subscribing, acquiring, or underwriting securities, or enter into an agreement for securing any kind of profit. This is a very generalized term which includes every concept there. Or for obtaining a credit facility from bank or financial institution. If he has knowingly given such false information, he will be liable under section number 447. Now try to repeat it. Any person, I don't care who that person is, very important word, any person. It can be director, expert, promoter, third party, creditor, I don't care. Any person who has knowingly or recklessly has made a statement or forecast or a promise or any kind of prediction which is false, defective, misleading, or conceals a material fact in order to induce another party to enter into an agreement for acquiring, subscribing, or underwriting securities, for an agreement for securing profits, an agreement to obtain credit facility from a bank or financial institution shall be held liable. Liable under section number 447. Then what is 447? They have not asked yet, but it is a question that can be asked. A lot of numbers in it, so you have to remember. What is section 447? Start dividing it. Section 447. Remember, we have done this logic: compounding, non-compounding offenses. What is compounding? What is not compounding? Compounding, we have done this in LLP also yesterday. Compounding, we can compromise. We can compromise on the imprisonment. If it is non-compounding offense, can we compromise? This part of the chart is a non-compounding offense where we'll have imprisonment and fine. Both of them are mandatory. And this part of the chart is a non-compounding offense where we'll have imprisonment or fine, where imprisonment is mandatory or just an option given. Option. The court will decide whether to implement it or not. Start with the amounts here proper. Section 447 is divided in two parts. One is compounding offense, which is less grievance in nature. If the amount, what are the words? If amount involved in fraud is less than 10 lakh rupees. 10 lakh rupees or 1% of the turnover, whichever is lower. If it is exactly this amount, it will fall under the other category. If it is less than this limit, it will fall under the less grievance category where they'll have a fine up to 50 lakhs or imprisonment up to 5 years or both. Or if it is other category, what do you mean by other category? The amount involved in fraud is more than or equal to 10 lakhs or 1% of the turnover, whichever is lower. If it is more than this limit, then we'll check whether it is involving public interest or not involving public interest, which is going to have more grievances. Involving public interest. If it is not involving public interest, they'll be charged with imprisonment of minimum 6 months to a maximum of 10 years with a fine of minimum the amount involved in fraud to a maximum of 3 times the amount involved in fraud. But if at all it is involving public interest, rest of the things remain the same except the minimum imprisonment is increased from 6 months to 3 years. Section number 447. Then section number 37 to end it off. What is section 37? If you have been affected under section number 34, 35, 36, you can take an action under section number 37. You can file a suit, you can take an action against the company where the action can be taken by any person, a particular person, or action can be taken by a group of persons where we'll have a concept called as class action. All of them combined together will take a single suit. If all of them combined together take a single suit, whether say legal expenses will be reduced, lawyer fee will be reduced, your time and efforts will be reduced, you don't have to go to the court, you will be represented by a person called as petitioner. Forget about your time. Whose time is saved? Court's time is saved. Which is better? Making multiple application or class action? Or it can be an association of person, that means a company, a partnership firm, LLP, HUF, a group of people can make application as well. Group of people are usually unrelated. Association of persons are basically collective persons who are collectively affected can make an application as well. This is concept, and class action. I've given this extra points. You may read it. Class action is a process where a single defendant, a single person has harmed a good category of people, a good amount of people, where they have been, several people have been injured by a single person. Then we can file a single case. We will reduce the amount of category. Again, we'll have more discussion on section 245 in the final level. We'll have a lot more discussion on class action. Actual class action, how it happens, is mentioned in 245. We'll come to that in the final level. Last section number 38. What is section number 38? Who has done what is section 38? I am pretending to be some other person. Punishment for personation. Personating is what? Pretending to be some other person. Where whose default is this? Shareholder. The shareholder will be, investor will be held liable under section number 447. If he makes an application. How many applications? One application. But not in his own name, he makes an application in a fictitious name. That means he is having black money. Will I allow that under Companies Act? No. I'll impose section number 38 linked with section number 447, where he makes an application for allotment of securities in a fictitious name, or he does not make application on his own, he abates the application to be made. He encourages another person to make an application. Then also he'll be liable under section number 447. Given the proper words, he makes or abates the making of an application in a fictitious name for subscription or allotment of securities. Is that fine? Second case. I don't remember whose name we have taken for this, but we'll make multiple applications. Everybody? Sahiti. Whose name, Mama? I don't remember whose. Shadik. I don't remember his full name also now. Mohammed Sheikh Sahid. Okay, fine. Give me the concept. We have made how many applications? One application or multiple application? Same wordings. If a person makes or abates the making of multiple applications in different names or different combination of his names. He is a single person, but he made multiple application pretending to be multiple set of people. He'll be liable under section number 447. What are the two categories, Amma? Either he makes or abates the making of application in a fictitious name, or he makes application in multiple applications in different names or different combination of his names or surnames. He'll be held liable. He's pretending to be multiple people there. Or third category was straightforward. Take a knife and go to the company. What is the third category? Inducing the company directly. Inducing the company to do what? Allot securities, transfer securities in your name or any of the fictitious name. Then you will be held liable under section number 447. Inducing whom? Company. For what? Allotment or transfer of securities in your name or any other fictitious name. You will be held liable. Liable under section number 447. This is again linking back to IEPF. If at all I found out that you have done any kind of inducing under section number 38, you have personated, your shares will be forwarded and transferred to the IEPF. IEPF will enjoy your shares. Who will get the benefit of all that logic? IEPF. GDR. What shall we do? Should I show the chart or can you revise it without the chart? I heard only the word chart. With or without, I did not hear that. Okay, I'll keep it there, but you don't have to look at it if you're comfortable with the logic. Where are we raising? Who is raising money? I want technical words directly. No Indian company, Indian investor, foreign investor, nothing. Direct technical words. Who is raising money? A domestic company wants to raise money from domestic jurisdiction or foreign jurisdiction. To raise money from foreign jurisdiction, you have to get your securities listed on the foreign stock exchange. You have to bear the currency exchange risk. You have to follow all the foreign laws. You have to get the securities entered into depository contract with the foreign authorities. We have to get them listed on the recognized stock exchange outside India. To avoid all this and take a shortcut, we'll issue what? Depository receipts. Are we going to issue depository receipts directly? No. Are we going to go make a public offer? No. We are going to make a private placement which is deemed to be a public offer. But what's happening here? Start the process. Who is issuing? Domestic company will issue shares to the overseas depository bank, and this overseas depository bank will, after accepting the shares, because they are located outside India, they did not get the physical custody of shares. Hence they appointed an agent in domestic jurisdiction. That agent was called as domestic custodian bank. Then the domestic company has transferred the custody of the physical shares to the domestic custodian bank, and the domestic custodian bank will send their acknowledgement to the overseas depository bank stating that shares have been received. Once the shares are all secured, the overseas depository bank will convert the shares into depository receipts. If the share value increases by 5%, deposit receipts also increase by 5%. If they fall by 10%, they'll also fall by 10%. They have a I forgot this word you use in max. Inverse relation or positive relation, what do you call it? Direct proportion, directly proportionate. They're directly proportionate, 1:1. If they have increased 5%, they'll also increase by 5%. Now these deposit receipts are issued by the, get this very clear, deposit receipts are issued by the overseas depository bank to the overseas investors, and the overseas investors will pay money to the overseas depository bank, and overseas depository bank will forward the money back to the domestic company. This way the domestic company raised money from overseas investors without getting their securities listed. I have certain doubts in it. Who issued the depository receipts? Overseas depository bank to the overseas investors. Shares are sold, yes or no? Sold by the Domestic company sold to the overseas depository bank. Shares were never sold to the overseas investors. Investors are holding shares or depository receipts. Can they be called a shareholder? Who is the shareholder? Overseas depository bank. But whose shares are put as an underlying asset to create this depository receipts? Domestic company. For that to happen, the domestic company has to give authorization. Authorization by passing a special resolution. The process starts by a domestic company giving authorization to the overseas depository bank to keep my shares as underlying asset and create a depository receipts. For doing so, we have to give authorization. The authorization is given by passing which resolution? Special resolution. Once a special resolution is passed, this overseas depository bank will issue depository receipts. How will they issue depository receipts? Can they go for public offer? Can they go for private placement? Or they can go for any other type of issue which is relevant in their foreign jurisdiction. In India, we have only two options, either go for public offer or private placement. But outside India, there might be a third option available. Go for whatever option that is available as per the which jurisdiction? Foreign jurisdiction. Once the securities have been sold to the overseas investors, try to answer this. Who is still the shareholder? Overseas deposit. If he is the shareholder, who will get the voting right? Overseas depository bank. If overseas depository bank gets the voting right, technically speaking, who should have got the voting right? Overseas investor. They have invested money, but are they getting voting right? Who will get the voting right? Overseas depository bank, until those deposit receipts are converted into shares. If at all in the future they are converted into shares, the overseas investors will actually become my shareholders. If they have become shareholders, will I give them voting right? Yes. Until they have been converted, the voting right will be exercised by the overseas depository bank, but based on a tri-party agreement. What do you mean by tri-party? How many parties are involved? 3. Out of the 4 concepts we have, one is dummy. Out of the 4 people we have, one doesn't have any work. One is a dummy created only for holding the physical shares. Who are the 3 actual parties we have? Domestic company, overseas depository bank, and the overseas investor. The voting will be exercised by the overseas depository bank in accordance with an tri-party agreement entered between 3 people. The overseas investors are the depository bank and the domestic company. Section number 41. Global depository receipts. And I hope you guys remember this. Half of this chapter will be again repeated in foreign company topic. Tomorrow's foreign company topic is linked back to this. This is all copy paste again in foreign company later. The last section we have. Section number 5 to 10 minutes should be done. Not gonna take much time on private placement now. Once we are done with this, start with the basic chart we have. Private placement is a process where we are inviting whom? Inviting whom? Am I inviting public at large? No. Now again, we have done this already, the 3 stages of the private placement topic. Try to understand this very clear. That's where you'll understand the definition. We'll not issue 2 documents this time as we do under prospectus topic. We do prospectus plus application form. Here we'll give only one document which will be called as private placement offer cum application letter. What's it called as? Private placement. Don't look at me like that. We have discussed this topic. What is this document called as? Private placement offer cum application letter is the only document which will have both the invitation as well as application form. Will be sent to the identified person, or if I had to specifically mention, select group of persons. What are they called as? Select group of persons. Now, once the invitation is done, they'll send the same application letter back to the company for allotment or refund. If allotted, you'll become a shareholder. I'll give you the share certificate. Now, try to understand. Private placement is not just invitation. Private placement is the entire process combined together. Entire process combined together involves invitation, involves offer, and involves issue. That's where the definition is drafted. Private placement means either what is involved in private placement, invitation or offer or issue of securities. To whom am I doing all this? To a select group of persons. How am I able to do this? Through private placement offer cum application letter. That's your private placement definition. First and foremost thing, all students get this wrong. Private placement is not just giving the document. Private placement is all the concepts combined together. It is called as private placement. I'm not talking about that document, I'm talking about the entire process. Private placement means what? It includes invitation or offer or issue of securities, any of the securities to whom? Select group of persons through a private placement come, offer come, application letter. Start the process. Which company? Private private placement can be done by private they're matching no more. No. Private placement can be done by which company? Any company. Any company can go for private placement by offering securities to whom? Select group of persons by a document called as private placement of a come letter. From here on, we'll call this select group of persons technically as identified persons. But the point is, who identified them? Board of Directors. Board of Directors identified them by passing a board resolution and mentioning their names and addresses in the records of the company. But before they mention their names and addresses in the records of the company, they have to get a prior approval from the shareholders by passing a special resolution by conducting a general meeting. If they are conducting general meeting, can I say they are sending the notice along with the explanatory statement? If they are sending explanatory statement, they have to explain why the shares are being issued, to whom the shares are issued, what class of shares are issued, at what price the shares are issued, all the material facts of the material terms of this private placement. Are we with me? What is happening? Who is issuing? Which company? Any company issuing what document? Private placement offer come application letter to a select group of persons, which will be now called as identified persons, identified by the board of directors by passing a board resolution mentioning their names and addresses in the records. But before doing it, I have to get prior approval from the shareholders by conducting a general meeting, for which I have to send a notice plus explanatory statement, in which I have to pass a special resolution. But this special resolution has an exception. Again, once a special resolution is passed, I have to also file it with the ROC after the special resolution has been passed. But I have an exception. Three exceptions are there actually speaking. What are three exceptions? If I am issuing non-convertible debentures, what securities? They'll never be converted into shares. Non-convertible debentures, and the amount of issue is not exceeding the limit. The usual limit we have, 100% of paid up share capital plus free reserves plus securities premium. If I'm issuing what securities? Non-convertible debentures, and it is not exceeding the limit, it is not required to pass a special resolution, but it is enough by passing a board resolution. Board resolution. But second case, I hope you guys remember this. I don't want you guys to be fooled again. You got multiple times fooled in this section, but now at least answer it. Second exception, which securities? Non-convertible debentures, this time exceeding the limit given. They don't have to pass up, but they have to pass a special resolution. They don't have to pass a. There is an exception, but they are still required to pass a special resolution. Special resolution only once in the entire financial year. Special resolution, but only once in the year. Same thing happens for QIBs as well. Qualified institutional buyers, they will also get securities by passing a special resolution, but only once in the entire year for all the offers that is made. While we are going for private placement, I can invite how many persons? I can invite a maximum of 200. Shall exceed or shall not exceed? Shall not exceed 200 in a financial year for each kind of the security. What do you mean by kind of security? If I had to expand this, the word kind of securities includes three categories for me. It can be either equity shares, preference shares, or debentures. All three kind of securities have been separated. For these three kind of securities, I'll count it separately. But there are certain companies to which the limit does not apply at all. NBFCs and HFCs. These are the two companies to which the limit of 200 applies or does not apply. For rest of all the companies, NBFC, other than NBFC, HFC, where the limit applies. But there are certain type of people who are not counted in this limit. Is the limit applicable? Yes, but there are certain people who are not counted for the limit of 200. Who is not counted? QIBs and employees who have been issued securities under ESOP. What is ESOP? Employee stock option plan, and the QIBs will not be included. That's our entire introduction done for private placement. Any doubts in that chat? Clear part? Now from here, from this chart, we'll expand it from here. What's happening? Once this private placement offer come application letter has been issued to the certain set of people, the orders has been passed. Can I make advertisement of this private placement? This is a very specific answer on that. Section number 30 makes it mandatory that I have to advertise my prospectus. But coming to private placement, can I advertise my private placement offer cum application letter? Advertising is optional or prohibited? If you start linking it to section number 73, if you remember, 73 we are raising deposits from members, where we had the wordings used, the company may advertise, where it was an option given to you. But here they have clearly mentioned that it is prohibited. Making any kind of advertisement or letting the public know in any other manner is considered as prohibition. You will be punished for it. Then, if you have allotted securities to more than 200, allowed or not allowed? Not allowed. But if you have allotted, or if you have invited even to more than 200, it is no more a private placement. It is deemed to be a public offer, even though the allotment is not done, even though you have not received the entire payment, even though you have no intention to list your securities. I don't care if you have given it to more than 200, whether allotment is done or not, whether payment is received or not, whether you are intending to list it or not. I don't care. It will be assumed to be a public offer. If it is assumed to be a public offer, they'll apply part 1 or part 2. Part 1, which is ranging from section numbers 23 to 41, including all the penalty sections, including SEBI and SCRA. Entire thing will be applicable as if it is a public offer. It is deemed to be an offer to the public offer. Is it fine? Now these exceptions are done. Let's start issuing the document. From here it is all mostly copy pasted from 3940. Start the procedure. We'll issue the application letter to any person, only the select group of persons. Select group of persons, because we have mentioned that names and addresses. It must be sent, it must be addressed specifically to the person whose names are mentioned in the records. And because we will issue only specific number of documents, every document must be serially numbered. When it comes to prospectus, how many prospectus will I issue? I don't even know. I'll randomly issue to everybody. But when it comes to the private placement topic, if I am mentioning 50 people in my records, select group of persons, I'll issue only 50 application letters. Every application letter must be serially numbered. It must be issued addressed only to the person to whom it is being issued. And it has to be, this is important, it has to be issued in writing or electronic mode within 30 days. This can be a question. Within how many days? 30 days from the date on which their name is entered in the records. After 30 days, the name will elapse. Who entered their names in the records? Board of Directors. Once their names are entered, you have to issue this document within 30 days. Once the document have been issued, from here the process of receiving is all copy pasted fast. I'll receive money. Receive money through cash or banking channel. Can I receive a check, demand draft, or any other banking channel? But what is not allowed? Cash. I don't want black money to flow into Companies Act. It must be other than cash. While I'm receiving other than cash, can I receive that banking channel from any bank? No. I have to receive only from the bank account of the person to whom the securities are offered. If I have offered securities to Chaitanya, I have to receive money only from Chaitanya's bank account. And once the money is received, can I start utilizing this money? Can I use it for business purpose? No, I have to keep it in a separate bank account in a scheduled bank, which is an escrow account which can be used for any purpose or specific purpose. What is a specific purpose? Allot or refund. It has to be allotted within 60 days. 60 days from the date of receipt of money. If it is not allotted within 60 days, it has to be refunded within 15 days from the expiry of 60 days. But if you have not refunded within 15 days, you will be charged with the interest of 39. Section 39, we have charged how much? 15%. How much? 15%, which was public offer. Which is more grievance? Public offer or private placement? Public offer. Here I will not charge 15%, I will charge 12%. It has to be allotted within 60. If not, refund within 15. If not, you will be charged with interest at the rate of 12%. But there's a catch here. 12% is not calculated from the expiry of 15 days. 12% is calculated from the expiry of 60th day. Remember, you have all done mistake on this. 60 days. If not, refund within 15. If not, charge interest at the rate of 12% per annum from the expiry of 60th day. Is that fine? All good? If I am refunding the money, if I am not allotted, I have to refund the money. Refund the money to whom? Same bank account from which money is received. And I have to maintain the details of the bank from which money is received. But what happens if it is allotted? I'll go to the ROC. ROC. I've issued private placement, and these are the people to whom securities have been allotted. We'll file a document called as what? Written of allotment. Written of allotment, we have filed it under section 39 also, and we have been given a time limit of 30 days to file it. But do we require 30 days in private placement? Because the maximum people you will have is 200. When you're talking about public offer, it will have lakhs of people. For the lakhs of people you were required to file written of allotment within 30. Why to waste time under private placement? File it within 15 days. Give me all the details of your allottees and file it within 15 days. Penalties, go through them, they're important. If you have failed to file the written of allotment, you'll be charged with an amount of 1000 per day, subject to a maximum of 25 lakhs. Or if you have contravened any of the provisions of section 42, you'll be imposed with an amount of the amount you have actually raised from private placement, or 2 crores, whichever is lower. If you have raised 5 crores, penalty will be 2. If you have raised 50 lakhs, penalty will be 50 lakhs. Amount raised or 2 CR, whichever is low. Again, this is also important. This you will have to understand through a chart. Can we make multiple private placements throughout the year? Can I make multiple private placements? Yes, but the aggregate shall not exceed 200. That's the only condition we have been put under. We can make multiple private placement. Now, this is a wrong description of private placement. Can I make 4 private placements? Yes or no? But the whole of the 4 subscriptions, whole of the 4 private placement I'll make, aggregate shall not exceed 200. But this is the wrong description of it. Can I say private placement does not happen on a single day? It happens over a period of time. That is the better presentation of how a private placement happens. That's the first private placement I had. Say this is the second private placement I'll have. Third and the fourth. Can I have 4 private placements? Now from this logic, try to understand it. Even before the first private placement closes, can I start the second private placement? Yes or no? Why no? Because by the time I'm drafting the second private placement application offer application letter, the money is still not raised. That means I'm giving a wrong information to the investor. Can I start a new private placement even before the closure of the previous private placement? A new private placement can be started once the previous private placement has been closed, completed, or I have withdrawn it, or I have cancelled it. Do whatever it should be completed. Once it is completed, I can start a new private placement. There is no restriction on the number of private placements, but there is restriction on the aggregate number of members, which shall not exceed 200. And the last, our beloved neighbors, our most favorite. Who is our most favorite neighbor? Pakistan. Also Bangladesh now. So these are the countries with which we share land borders. Sri Lanka, land borders. Ram Setu is not fully connected. So what are the 5 countries with which we share our land borders? First and foremost, our favorite, Pakistan. Then second favorite, or you can argue second favorite might be Bangladesh also. Then we have Myanmar. Then we have our least favorites, Nepal and Bhutan. Basically, we have a very good relation with all our neighbors. Let it be Sri Lanka, let it be Bangladesh, Myanmar, China, Pakistan, Maldives. Everybody, we have a very good relationship except Nepal, Bhutan. If you are raising money, if you are raising or inviting any person who is in this particular jurisdiction which is sharing land borders with India, then the logic states that forget about Companies Act, FEMA will take care of it. FEMA will create rules and regulations on how to raise money from those countries which are sharing land borders with India. I'll create rules and regulations on how to raise money, where you have to get a prior approval from the central government under FEMA regulations. It will be a topic linked back to FEMA regulations. That's your section number 42. And the part 2 and the chapter 3. Chapter 3 of Companies Act, Prospectus and allotment of securities. Again, all sections are important, but note down a couple of important sections out of it. What do you mean by this? You will study only these sections? Yes and no, I will not give it. Read the entire chapter. These are sections which are given priority, but you still have to read the entire chapter. Start with section 26. Then go for 25 also. I cannot compromise on all these 3 sections. I know I'm giving half of the chapter, but It is at least reducing half of it. Be happy. This will be first priority if you had to put it. Chalo, we'll close it off on that. Chapter's name, Prospectus and an Allotment. Completed fast, Amma. This is again a mandatory chapter. It will come for 5 marks. It will mandatorily come for 5 marks. A usual, regular, and question asked. Chalo. Chapter's name, General Clauses Act, 1897. 1897, before independence or after independence? Before independence, we brought this act where the act was introduced not by the Indian government, it was introduced by the British government. This act is not a regular act we have which applies to a particular territory or a particular person or a particular entity. If you have looked at the Companies Act, we have learned Companies Act, the section 1 of Companies Act clearly states it is applicable to a company, and they define what is company. Company means a company which is incorporated under this act or any other previous company law. They have clearly defined we are not someone applicable to a partnership, we are not applicable to LLP, we are not applicable to a HUF, we are someone who is applicable only to a company, a specific entity. Or if you take in FEMA states that we are applicable to whole of India for a PRI entering into transaction outside India or a PROI entering into transaction in India. They have clearly defined to whom the act is applicable to. There must be involvement of foreign exchange, foreign currency shall be involved. But coming to GCA is slightly different, which states that I'm not someone who is applicable to a particular act or a particular territory or a particular entity or a particular format. I'm someone who is applicable to another act. General Clauses Act are of two types. We have Central General Clauses Act as well as a State General Clauses Act. Because we are writing exam at the national level, we'll be learning that General Clauses Act which is applicable for central level. GCA states that I'm not applicable to an act, I'm not applicable to a particular person, I'm applicable to another act. Which act, to be more specific? We are applicable to a central act. And states that if the central act which I am applicable to is applicable to whole of India, then GCA is also indirectly applicable to whole of India. GCA applies to a central act, and if central act applies to whole of India, GCA also applies to whole of India. If GCA applies to a central act which is applicable only to a certain part of India, say assuming only to Telangana. Are you getting the word clear? It is not a state act, it is still a central act which is applicable only to the state of Telangana, then GCA will also be applicable only to the state of Telangana, only to a part of it. Now, why did this GCA been required at all? We have always believed that the lawmaker, or we technically call them as legislator, are experts. They have drafted the law with every care that is possible to be taken. But end of the day, even though they have taken care, they are humans. Will they make mistakes? They cannot see all the contingencies that might arise in the future. They might have made mistakes. They might have made errors in them. Those errors to be properly understood, we have created GCA. GCA states that I'm not a regular act, I'm a general category act which provides certain provisions for reading the rest of the acts. There are two major purposes for which GCA has been enacted. We'll come to the objectives in a bit, complete the titles first. As usual, every single act has its own two titles, short title and long title. Short title is used only for your convenience purpose. Long title is used for understanding the meaning, scope and objective of an act. Same process happened here also. The General Clauses Act has a short title, straightforward. The General Clauses Act 1897. Then before 1897, General Clauses Act was also existing in the year 1887 and 1868. It was initially introduced in the year 1868, repealed and reenacted in the year 1887, again repealed and reenacted in the year 1897, which is being continued till date. So what is a long title? Long title simply states that I'm not making any new law here. I'm just consolidating whatever there in the existing laws and creating a new act. An act to consolidate. Not only consolidate, but I'll also extend the applicability and extend the provisions of this act. I'll create more rules. This is not a law to consolidate and amend. This is a law to consolidate and extend, I'll create more rules. Consolidate and extend. Extend which laws? The General Clauses Act 1887 and General Clauses Act 1868. Put it into wordings. An act to consolidate and extend the General Clauses Act 1887 and 1868. That's your long title. Now coming to the definition category of process, every single act has its own definitions defined in the act itself, usually under section number 2. Why do we define definitions? So that we avoid repetition in every part of the act, which will reduce the length of the act. At the same point of time, create a clarity on a technical word used by the lawmaker. But definitions sometimes have not been used in the act itself. If they're not used in the act itself, they're sometimes given as a reference to another statute, another act. For example, the definition we have learned chartered accountant. We have learned the word chartered accountant multiple times in our syllabus, but never used in Companies Act. It was not defined in Companies Act. The word chartered accountant is defined in the CA Act. If I had to look at the definition of securities, we have learned the word securities multiple times, but the word securities is not given under Companies Act. It is referred to the SEBI provisions. It is referred to the scrap provisions. So what happens here? Sometimes the definition is given in the act itself. Prospectus, given in the act itself. Deposits, given in the act itself. Charges, given in the act itself. There are definitions which are given in the act itself. That's the first option I'll search. If I don't find the definition in the act itself, I'll go search if they have given a reference to another act. If they have not even given reference to another act, there will be vagueness in the wordings. I'll not understand the words clearly. To create a common definition for all such mishappenings, we acted as a backup. If it is not defined in the act or not given as a reference, then what will apply? We'll take the definition from a GCA. Now, can I say if GCA is applicable to all central acts will have same definition or different definitions? Now, if you observe the problems under our regular acts we have, the word person is defined differently under Income Tax Act. The same word person is defined differently under GST Act. The same word person is defined differently under Companies Act. Or otherwise, you take in the definition goods. Sale of Goods Act has a different definition to it. If you have learned the GST law, is a slight differentiation of the word goods under GST law. If there is different meanings for the same word, it will be difficult for us to understand and remember and interpret the laws. Which is better, to have different meanings for the same word or have a common meaning? But if the definition is given in the GCA, it applies to all central acts. Can I say it will give a common meaning for all the central acts we have? It will shorten the language, but at the same point of time, it will also give a common meaning, which will help us interpret the laws in a better manner. Those are the first two objectives of your GCA. The first objective is to shorten the language of all the central acts. Repeat the wording some more. Shorten the language of all the central acts. Because we are giving definitions, the length of the act will reduce. Until this point of time, what happened? Definitions were mentioned in the act. Now, can I say if GCA is already existing, can I ignore the definition? Because any which ways, if I don't mention the definition, GCA will be applicable. The length of the act will be even more reduced because GCA is existing. It will shorten the language of act and it will provide a uniformity of expression. It will create a common definition for all my central acts. But the second keyword you have to remember, uniformity of expression for all the central acts by giving a definition for common use. And we were just discussing about it. There will be oversights. There will be situations where the lawmaker might have forgotten something, might have mentioned something wrong, might have mentioned wrongful information, or wrong interpretation might come out. We have to safeguard the lawmaker from all the slips and oversights. Whatever he has missed out, I'll make sure that it is covered under GCA. And the last and the most important concept, interpretation. English language is very funny. Multiple words, a single word might have multiple meanings, depends on the sentence you might use. To understand the words in a correct manner, we have had the logic, rules of construction or rules of interpretation. That's the next chapter as well, iOS as well. Coming to this basic introduction, they have given in the definition, if you remember 141, I hope you guys have to remember this section number. Otherwise, I'll give something which is we have done yesterday. Deposits. Whenever we are accepting deposits from public at large, we have to appoint a person called as deposit trustee. A deposit trustee is appointed even before the issue of circular in a document called as deposit trust deed, which will be in form number DPT 2. which has to be, we have to obtain his written consent, we have to appoint him, etc. Do we have any qualifications for a person called as deposit trustee? But there are disqualification. The first disqualification is he is not a director. They have used the word he. That means she can be a director and she can act as a deposit trustee. The concept was that we'll get influence if you're acting as a director. But the words used are he must not be a, if he is a director, key managerial personnel or officer or employee. If he is a, that means a female can be, feminine gender might be a director and still can act as a. That was not the intention of lawmaker. Sometimes the words don't do justice for the intention of the lawmaker. We don't have to read the words. We have to read the intentions behind these words. To understand the intentions behind the words, they have given certain rules for interpretation, rules for construction. There were 4 objectives. I want only the keywords. First point, shorten the language of the act, uniformity of expression, safeguard against slips and oversights, and provide rules for interpretation and construction for all central acts. Is it having any territorial extent? No. It is applicable to a central act or a state act. Central act, if the central act applies to a particular territory, the GCA will also apply to that particular territory. Then we have defined the central act specifically. What do you mean by central act? We divided them into 3 categories. If you remember the chart we have drawn, the Constitution of India was drafted on which date? Or made applicable from which date at least? 26 January. They gave you chocolates on 26 January. Don't forget it. 1950. When did we get independence? 15. Are you calculating any days? No. 15 August 1947. And it took us just 3 years to draft our constitution, how to run India, how to manage India. India was a huge country. India is a huge country. India has a lot of population to it. But the leaders of India never had the understanding or the experience of running a country. It took them 3 years to understand on how we were going to look ourselves in the coming few years. The constitution took us 3 years to draft. Now draft the process here. Before constitution, we did not have the powers given to parliament. We did not have a person called as president. After the constitution has been drafted, after the parliament was given powers, the person called as president had the signing authority in entire India. So if a law has to be drafted, law has to be assented by the president. But before the constitution, we did not have president, we did not have parliament, we did not have Indian powers. The powers and rules and regulations were followed as per the Britishers. Whatever Britishers left behind, we followed it. Britishers did not have president. Britishers had a concept called as Governor General. A person called as Governor General is of equal importance when compared with the president today. President today is equal to whom? Governor General before the constitution. But before constitution, we have one special period. A period between 15th August 1947 to 26 January 1950, which is called as Dominion Legislature. Dominion Legislature means it is still under Indian government. We got our independence, but we are still following the rules and regulations which were given by the British government. This is called as what? Dominion Legislature, where we have President or Governor General. Governor General. Before 15th August 1947, we were still following Britishers' rules, but we were under which government? British government. So we'll divide them into how many categories in total? 3 categories. What will be the 3 categories? Before the constitution, any act which is assented by the Governor General will be called as a central act. After the constitution, any act which is assented by the president will be called as a central act. But we have a special period called as what? Dominion Legislature. Dominion Legislature is a period between 15th August 1947 to 26 January 1950, in which we were under which government? Indian government, but we were still following the rules regulations left behind by the Britishers. So we followed British rules, hence the law was still being assented by the Governor General. This is not much important. One keyword, 367 of the Constitution of India has given powers, stating that even the Constitution can be read with the help of GCA. GCA will be used not only to read other acts, it will also be used to read the Constitution itself. It was given constitutional powers under article number 367. Then coming to the definition part, preamble, we have recently learned this preamble. Preamble provides the meaning, scope, objective and purpose of the act. It is basically an comprehensive discussion of the long title itself. Long title also provides what? The scope, objective and purpose, but the preamble provides it in a more comprehensive, more detailed basis. It is called as preamble. Nothing but the intentions of the lawmaker, why this law was drafted, why this law was coming into existence. That is provided in the document called as, in the paragraph called as preamble. But don't forget, preamble is not a substitute for the provisions of the law. We'll always read the provisions of the law first. If the provisions of the law are very clear, I hope you guys have a bit of knowledge on iOS, so I'll make it linked with iOS itself. If the provisions of the law are very clear and they're creating or construing only one meaning, we'll apply literal construction, where we'll apply the words of the lawmaker. We'll not take any hypothetical assumptions, will not create situations, we'll apply the words exactly given by lawmaker. Absoluta sententia, non-indicate, absoluta sententia, expositor, non-indicate. Clear words need no explanation. If the words are very clear, if the words are making sense to it on its own, we'll apply the words. Provision has to be used. But if the provision is ambiguous in nature, unclear in nature, it creating multiple meanings to it, then we have to understand the reason behind it, then we'll apply. Grammatical or logical? Logical. We have to apply, we have to understand the logic, we have to we have to understand the reason behind it. Then we'll come and read the preamble. Preamble does not override the provisions of the act. It is only acting as an aid for construction. It is helping you to construe the law. It helps or creates a law. Can the preamble add laws? Can the preamble amend laws? Can the preamble create or delete any law? It does not amend or extend or create or delete any law. It is just helping you to understand the lawmaker, which is always superior, provision or the preamble. Which should be read first? Provision. If the provision is ambiguous, then you'll come and read the preamble just to help you understand the provision, but it will not override the provision of the act, which is always superior, guys. Provision. Then bill and act, this is basic for us. Initially, when a document is introduced, before it is made as an act, it is introduced as a bill. Once a bill has been introduced in both the houses of parliament and passed in both the houses of parliament, it will be sent to the president's office. If the president gives his assent, it will be called as an act. But it should be known to the public at large. To be known to the public at large, we'll notify in the official gazette. We'll complete it here itself. We have two official gazettes of India. One is official gazette of India, which is for central acts. Then we have an official gazette of a state. Each state has its own official gazette. Telangana government has official gazette. Government of India has official gazette. Official gazette are those documents which are directly coming from whom? Government itself, the lawmaker itself, the legislative body itself is giving this document. If the body itself is giving it, if it is the official announcement made by the government itself, can I say it is authentic? Can I say it is accurate? Because they want to maintain this accuracy and authentication, they don't give it out to a third party. They'll print it themselves, they'll publish it themselves. It is printed by Government of India Press. It is published by Department of Publications. It is accurate and it is authentic. To maintain it, it will be printed by the Government of India Press. It is published by whom? Department of Publications. Then we have means and includes. If a definition uses the word means, the words have been clearly defined. Can we add more points? It is been defined. It is a definite term. Exactly defined it. It is an exhaustive definition. We cannot add any words. Give me the definition of company. Section number 2, clause 20. Company means a company incorporated under this act or any other previous company. We cannot add more points into it. They have exactly defined the word. They have used the word means. But if at all they are using the word includes, they state that we are not defining the word exactly. You can include more words. It is an inclusive definition or also called as extensive definition. Now give me the definition of deposits we have learned yesterday. Deposit includes. The term deposit includes any amount of money received by way of a deposit or loans or any other form by the company, but does not include such category of amounts as may be prescribed. in consultation with the RBI. If it uses the word includes, can I add more points? And if you apply this logic to adjust and generous, we can add more points in the same category or different category. Same category. I have to continue the enumeration which is given. Good. But there are still definitions which are using the word means and includes. Give me the definition of share. Share capital. Share means a share in the and includes a stock. It uses a wordings means and includes. It is still considered as what kind of definition? Exhaustive definition to include a specific term. Or if it uses a word to apply and include, it will add more points. It is extensive. It is applicable to a specific point, but it includes more logics. It is an extensive. Give me all the four options. Means, exhaustive, includes, extensive, or it can also be called as inclusive. Or if it is using the word means and includes, it is exhaustive. If it uses the word to apply and includes, it is extensive. It is inclusive definition. We can add more points. May and shall. If the provision of the law uses the word shall, it is mandatory. It is an obligation. It must be followed. But if it uses the word may, it can be. It is a directory. It is recommendatory in nature. It is optional in nature. We may or may not follow. But there are situations where sometimes the word may shall be interpreted as shall, or the word shall be interpreted as may, to give life to the intentions of the lawmaker. To understand the true intentions of the lawmaker, we might interchange it sometimes. We have done this in section 3. Company may be formed for a. Words used are may be formed for lawful purpose, but intention was may or shall. We'll interchange it. Even though the word used is may, we'll read it as shall. One of the most important topics, service of documents. How to serve a document. How to send a service. It is not service of documents, but a service of post actually. How to send a post. Start the process. We have three prerequisites, three conditions for serving a proper post. A post is said to be properly served, correctly served, if it is properly addressed. Address must be there. It must be prepaid. Payment shall be done by the sender or receiver. Sender, first point, it must be properly addressed. Second point, it must be prepaid, and it must be sent only through a registered post. But don't forget, the GCA topic applies only when the Act does not define it itself. If the Act has already given its own definition on how to send a post, will I apply GCA? I'll apply GCA as a second option or the first option. First option always will be the Act itself. If not, then I'll come to the GCA. What are the 3 points to remember? It must be properly addressed, it must be prepaid, and it must be only through a registered post. Now, registered post also has two options. Either it can be the regular registered post, or it can be registered post acknowledgement due. Sir, what is acknowledgement due? Will collect a signature having evidence the document has been received. Who will collect? Whose signature will be collected? Recipients. It will have a proof that on which date, at what time, and who collected the document. It will have a evidence that the document has been actually received. If the law specifically mentions it is required to be sent by registered post, acknowledgement due, you have to send it by registered post, acknowledgement due. If it is required to be sent by acknowledgement due and you have sent it by a normal registered post, the post will be considered valid or invalid. Invalid, it will be considered as void. Now start imagining the situation again. It was supposed to be sent by registered post, acknowledgement due. I have sent it by registered post, acknowledgement due. Valid or invalid? It was supposed to be sent by registered post, acknowledgement due. I have sent it by registered post only. Valid or invalid? But once I've sent it, the recipient has responded back on the document. Now the response is acting as an evidence that the document is actually. Until he receives it, he'll not be able to respond. If he's responding, that means it is confirmed that he has actually received it. Now the document will be considered as valid. Even though not properly sent, it is still considered as valid if there is a response from the recipient. Then third category, once the document is received, if the recipient does not claim it, or the recipient is not available at his residence to accept the document, it will be called as not claimed. If it is not claimed, whose default is it? Recipient. Then the law states that if it is not claimed, it is assumed to be served. That means it is assumed to be valid or invalid? Valid. I have actually served it. Effective time understand this, postal department does not work on a specific timelines. There are situations where the post might receive within 5 days, or there might be uncertainties or workload may be more, the post might be received within 6 days. If the post is usually received in 5 days, I'll assume that it is effective after expiry of 5 days, because I cannot exactly track where my post is. It is not that technologically advanced, the postal department. I'll simply state that if it is usually going to be received in the ordinary course, it will be received in 5 days, it will be effective after expiry of 5 days. Some definition, again, I am not going to go all definitions, these are not required much. Affidavit is important. Affidavit, oath or swear. It doesn't make sense, but it is important. It doesn't have proper meaning to it, but it is still important. What is affidavit? Affidavit shall include affirmations. What do you mean by affirmation? Accepting something, or declaration. Accepting something by making a declaration by yourself. Two options, either affirmation or declaration. Affidavit includes affirmation and a declaration. Who is giving this affirmation declaration? By a person who is allowed by a law to affirm or declare. Give me the definition. Affidavit includes affirmation or declaration by a person who is allowed by the law to affirm or declare instead of swearing. Swearing is a regular informal way of accepting something which doesn't have evidence in the court of law. But this logic of affidavit is always in a written statement. If it is in written statement, can I use this in the court of law as an evidence? I can use it in the court of law if it is in a written statement. Remember, affidavit is always in a written statement, which is instead of swearing. What do you mean by swearing? It is oral category where it is not having any evidence left to it. Again, this definition starts with the word. What do you mean by that? It is what kind of definition? Extensive. Can I add more points? Have the lawmaker exactly defined the word? No. Can I add more logics to it? Yes. It is an inclusive definition and it is a written statement. It can be used as an evidence in the court of law. And if the examiner has asked the definition oath, what will you write? Same point. Just repeat this word affidavit and write the word oath. Oath shall include affirmation and declaration by a person who is allowed to affirm or declare instead of swearing. Continue that. Give me the definition of swear. Swearing shall include affirmation and declaration by a person who is allowed by a law to affirm or declare instead of swearing. All three definitions are same. If you observe it, swearing definition also states that instead of. But does it make sense? But does it give you marks? Remember it. Government definition. Government includes two types of governments in India. We have federal system. We have two governments. What are the two governments we have? Central government and state government. And we have done in the very first few classes, we have three bodies in India which create laws in the same order if possible. First, law is created by legislative body. Then law is implemented by the executive body. Then the decisions for any wrongful activities are taken by the judicial body. All three bodies combined together create law in India. Legislative, executive and judicial. These three bodies combined take decisions in India, but whenever you're reading a law in a narrow sense, the government word includes only the executive body. That's the body with which we are connected on a regular basis. Are you connected with parliament regularly? Are you connected with the executive body or the legislative body? You'll go to the court every day? No, you are connected regularly with only the executive body. The law states that read it always in a narrow sense to include only the executive body. If that is not fulfilling your intention, then you can include all three bodies into the word government. Usually government means only what? Executive. Otherwise, we can also include legislative, executive and judiciary. Central government, we have just done this. After the Constitution of India, we have Parliament. And who has the highest power for signing documents? President. Central Act or central government means after the Constitution, President. Before the Constitution, Governor General. Securities is fine. Good faith is again a contradictory section here. Good faith as per GCA is different. Good faith as per your civil laws is completely different. Let's understand the GCA first. If GCA states that if you have acted honestly with no intentions to deceive another person, no malified intentions. I have acted honestly, whether or not negligently. Even though I have negligently acted, it is still considered as good faith as per GCA. What are the two category of words you would remember? He must act honestly, but whether it is done negligently or not, I don't care. If it is done negligently also, it is still considered as good faith as per GCA. But as per civil law states that it must be honest and it must be with due care taken. If you don't take proper care, if no care is taken without proper care, it is not considered as good faith. This is as per civil law. And they have given a clarification on Indian Contract Act. Usually, the definition is defined in the Act itself. But Indian Contract Act did not define the word good faith. They have used it multiple times. If it is not defined, we'll jump to which act? But here they have given clarification stating that Indian Contract Act is more of a civil law, will borrow the definition from civil procedures. From civil procedures, it is stated that it is good faith only when they have taken proper care. A due care has been taken. So give me definitions of GCA and Indian Contract Act separately now. As per GCA, what is good faith? Good faith means when the person has acted in a honest manner, honestly, whether or not negligently, whether negligently or not. But as per Indian Contract Act or as per the civil laws, it must be honest and must also take a proper care. If due care is not taken, is it called as good faith? One of the most important definitions, document. The word document, shall we start? That's again inclusive definition or exhaustive definition. Inclusive, it is extensive, we can add more points to it. Inclusive definition, what is this definition? Document. The document shall include any matter. I don't care what you are writing. I don't care whether it is a business letter. I don't care whether it is an agreement. I don't care whether it is a personal letter. I don't care what you write. Any matter which is expressed, written, expressed, or described in whatever way I want, you can express it. Write it, express it in symbols, or describe it in any other manner. Give me the wordings here. The document shall include any matter written, expressed, or described upon any substance by means of letters or figures, which is intended to be used for the purpose of recording that matter. End of the day, we want that matter to be recorded as an evidence. The document, repeat it against along with me. The document shall include any matter written, expressed, or described upon any substance by means of letters or figures which is intended to be used for the purpose of recording that matter, but does not include one thing which is important: Indian currency notes. Currency notes means those notes which are in circulation today. If I bring out 2000 rupee note, is it called as document? Yes. It is not in currency, it is not circulating today. If I bring out 100 rupees note, it will be document or not a document? What is excluded from the word document? Indian currency notes. Coins are included. They have excluded only what? Currency notes. Coins are still included. Writing is a small definition of printing, lithography, or photography, all of them. Any form of representing a word is called as a representing a word will be called as a writing. Three small definitions, but this financial year definition might be important for us. Month as per the British calendar. Year as per the British calendar, that is calendar year which starts from January to December. Financial year, we have done the financial definition. Spend a little time. I want three financial definitions now. Companies Act, I know we have not done it. Companies Act, now we are not revised in the recent times, but try to give it. Financial as per Companies Act. Financial year means a period which is ending on the 31st March of every year. But as per LLP Act, financial year means a period from 1st April of a year, 1st day of April of a year to 31st March of the following year, following year. Any doubts? But as per GCA, we have a different definition for financial year. Financial year means a period which is commencing from which date? 1st day of April. If you observe the logics, Companies Act uses only the last date. GCA uses only the first date. LLP uses both first and last. Immovable property, again, one of the most important definitions. Immovable property has four inclusions to it. Immovable property includes, again, inclusive definition or exhaustive definition. Inclusive. It includes four things. First and foremost, it includes land. Second, it includes anything which is arising out of land. That means the agriculture produce will come under this category. Anything which is coming from land, arising from land, or any benefit which is arising out of land. Third category, anything which is attached to the land. Building, is it arising from land? Yesterday building was not there. Today it will be first floor. Tomorrow it will grow a little more. Second floor, it will arise from land. We have attached it to the land, attached it to the earth. What are the three categories? First, land. Any benefit which is arising out of land, or anything which is attached to the earth. Now this AC units we have. The AC units, are they attached to the earth? But they are attached to the building. Building is attached to the anything which is permanently fastened to the thing which is attached to the earth is also considered as a immovable property. Things which are permanently fastened. What do you mean by permanently fastened? Anything which cannot be removed without any destruction. Can I remove this computer setup? Is there any destruction required? Can I remove these benches? I can remove these benches without any destruction. I can remove this fan without any destruction. I cannot remove this fall ceiling or the AC units we have without destruction. I cannot remove the lift elevator we have without destruction. If it cannot be removed, that means it is permanently fastened. What is permanently fastened? Which cannot be removed without much destruction. Some examples we have learned. I hope you have made changes in the materials already. Fast, growing crops. Growing crops, immovable or movable? Movable. Standing crops, immovable property. Land. First, soil for the bricks. Soil for the bricks, immovable. Bricks itself, movable. We are growing a tree for its leaves. Tree is still a mango tree. Immovable. A sugar cane, it is produce itself, it is a growing crop, it is movable. Or drainage system, pipelines, considered as movable. Or shares and debentures. Shares and debentures, movable. We have a separate section for it, section number 45. Electricity, movable or immovable? It is generated at one place, it is used at another place, it is still movable. But the problem, you have to remember certain points here. First thing, a right to catch and carry fish. Right to catch, carry fish is immovable. The fish itself is movable. Soil for the brick is immovable. Brick itself is. Leaves itself, once plucked, they are movable. But the tree for growing those leaves or selling those leaves is a immovable property. Timber is always assumed to be movable property unless they have specifically mentioned it is for a longer period of time. It is for standing timber, they have specifically mentioned, then I'll consider that immovable. Otherwise, I'll usually use it as movable. The building, last point, I'm going to close it off on this. Building, immovable, but I've taken an insurance on the building. Insurance will be movable. Insurance on an immovable property will be movable property. That's your definitions mostly done. Imprisonment, we have two types of imprisonment, depends on the judge. Judge will decide two categories, either rigorous or simple. Simple, no labor work will be there. Rigorous, there will be hard labor work during your imprisonment period. Which is better? That means you are ready to be convicted. Official gazette, we have done that. Commencement of a particular law. Once a law has been introduced, it is not commencing, it is not coming into effect on a random day. It comes into effect on a specific day mentioned by the official gazette. Usually, all the modern laws have a specific date mentioned. If the date is mentioned, the law will come into enforcement, law will come into existence from that date mentioned. Now get the words clear. If the law has been passed, law has been assented, but the law has not been notified, will it be applicable or not applicable? It will have validity only when the law has been notified. Unless notified, doesn't have any meaning to it. If it is notified with a specific date mentioned in it, it will be applicable from the specific date. If no date is mentioned in the official gazette, which is unlikely to happen in the modern law, but on paper, if it is not mentioned, it will be effective from the date on which it is assented. If it is after constitution, it should be assented by the Precedent. If it is before constitution, assented by the. If today a law comes in and there's no date mentioned and the president assented it on 15th of July, it will be applicable from 15th of July. Or the assent was received on 15th July, but they have mentioned a specific date in the official gazette. They have mentioned 30th of July. It will be applicable from 30th of July. Now, recently, Income Tax Act. It was already passed and assented last year itself, but they have mentioned a specific date. What was the date mentioned? What is the date mentioned? 1st April 2026. It will be effective from 1st April 2026. They have mentioned a date or not mentioned a date? Mention a date. And coming to the applicability on a day, acts are never applicable on a fraction of a day. Act is always applicable for the entire day. Hence, the applicability starts on what time? As soon as the clock strikes 12. 12 in the morning, the law starts being applicable. It is not applicable for a fraction of a day. It is applicable for the entire day usually. Who is gonna create laws? Court or the legislative body? Court will apply the law given by the legislative body and take a decision. Can the court demand the legislative body to bring the law on a specific date? But the court can recommend, but not demand. End of the day, it's whose duty or whose responsibility to bring the law into existence? Government, legislative body. But if the government creates a law but does not implement it, the court may recommend a date for its implementation, but will not force it out. Same topic for rules. Rules will be effective from the date on which it is published in the official gazette. Rules will be drafted usually after the act or before the act. After that, but then I'll also come to the other situation in a bit. I'll do it in the powers and functionalities. Repeal, an interesting logic. Repeal is a process where we are obliterating an act, we are destroying an act as if it never existed. We always have to remember this storyline. Once a repeal happens, we'll have how many books on our hands? One. Before repeal, we had how many books? One. Which book did we have? Old act. Old book or repealed book. Once a repeal has happened, the old book has been completely destroyed and it may be substituted with a reenacted act called as new act. So after repeal, we'll have how many books? One, called as reenacted act. Before repeal, we'll have how many books? One, which is that? Repealed act. Now try to imagine yourself as a judge and answer. After repeal is completed, if a case has been filed, after repeal happened, we'll take the example of Companies Act. The 1956 Act got repealed in the year 2014. 1st April 2014, most of the provisions of the 1956 Act got repealed. Now start answering it. After the new Act has been introduced, after 2013 has been introduced, we have how many books on our hands? One. What's the only one book we have? Companies Act 2013. An offense was committed here, but the appeal was filed, the case was filed here. When was the offense conducted? When 1956 Act was applicable. But when was the case filed? When the Act got repealed. Now as a judge, I have only one option. I don't have any other option to look for. I have only one option, that is Companies Act 2013, reenacted Act. I'll apply the new Act or old Act. That means the new Act will have prospective effect or retrospective effect. Retrospective effect. But if an order has already been passed in the previous Act or a case has already been initiated as per the previous Act, will the repeal affect it? No. Repeal will not have an effect on the operations or the rights or penalties, inquiries, inspections, investigations, or any punishments, privileges imposed as per the previous Act. If it is already imposed by previous Act, we'll continue to follow the previous Act. If it is not imposed, then we'll apply the new Act. The repeal will have retrospective effect or prospective effect. Opposite, contrary to that, we have a concept called as deletion. Deletion is a logic, same process, if at all. This is not deleted amount, just for example. If the Companies Act 2013 got repealed, not repealed, but got deleted, what will be the situation? Before 2013, I'll have how many books? 1956. After deletion, am I obliterating the book? Am I destroying the book? Is the book still considered to be existing? Hence, I'll have how many books in my hand? 1956 and 2013. Now you have both the options. Now you guys draft the process. If an offense is conducted here, I'll apply which law? Repealed or reenacted? Reenacted. If an offense is conducted here, because I still have access to the repealed act, I'll apply the repealed act. Old act will be applicable. That means the 2013 act, the reenacted act, will have effect only on a prospective basis or retrospective basis. Prospective basis, it is not. Old act is not completely wiped out. It is still existing in the court of law. They can still use it. Repeal of textual amendments. This is important. They can ask questions on it. They're not repealing the act completely. They're repealing a text in the act. Even though the word repeal is used, it is having a prospective effect. Until that provisions are existing, they'll apply the original provisions itself. Until the text is existing, the text will be in operation itself. Basically, one word answer, write it here itself. It will have prospective or retrospective. Prospective. It is textual amendment. It will have prospective effect. Once an act has been repealed, can it be reenacted? Can it be brought back again? The same act, repealed act, can be revived. It is called as revival of repealed act. If act is applicable, should you follow? If act is repealed, should you follow? If the act is revived, should you follow? Why is the government playing with us? They have to give a proper reason why they have to bring the act back. Only thing is, you can revive a repealed act, but provide the purpose. The purpose and the justification for such revival will allow the revival. What should be the only thing you have to remember? You have to have the purpose for such revival, then revival is allowed. This has been done multiple times, and this will seen in the near future. In the next 1 month, we'll see this logic. We under Companies Act 2013. When Companies Act 2013 was drafted, which Income Tax Act was existing? Income Tax Act 1961. But today we have what act? Income Tax Act 2025. All the provisions of Companies Act were making references to 1961. Now the 1961 will be repealed and reenacted as. But will the government come make changes in the Companies Act 2013? No. Any references that are made to the repealed act shall be construed, shall be read, interpreted as references made to the reenacted act. What's the logic, Amma? If a reference is made to which act? Repealed act, it is assumed, it is construed to be a reference made to the reenacted act. Now, if Companies Act uses the word Income Tax Act 1961, I should interpret it as Income Tax Act 2025. Is it clear? Then, rules and regulations. Our government is very fast. They're very proactive. They'll create rules as soon as the law is created. Because it's going to take a number of years for our executive body to create rules, regulations, bylaws, or any rules and regulations or bylaws. GCA states that until the new bylaws are created, the existing bylaws will continue until they have been superseded. What's the word you have to use? Superseded. What do you mean by superseded? Until they have been replaced by something new. What will continue? Old rules, regulations, bylaws will continue to apply to the reenacted act until the reenacted act creates its own rules and regulations. Until I create my own rules and create a priority, superiority, I'll continue to apply all the old laws and provisions which are existing for the repealed act. Now this will happen in the Income Tax Act now. The Finance Act 2020, I came in. This has made certain amendments already. Are you guys understanding it? Act did not get effective, but they already made amendments to it. Income Tax Act is applicable from which date? 1st April 2026, and before even the applicability comes in, before even the document is finalized, they already made an amendment. This Finance Act 2025, they have created new rules for the purpose of Income Tax Act 2025. They'll supersede. For those rules which have not been clearly identified yet, will apply still which rules? The rules which were applicable to the Income Tax Act 1961. One word answers from here. Next couple of provisions will be all one word answers. If I use the word from a particular date, always remember will exclude the first date, will count from the second date. If they've used the word dividend has to be declared. Once a dividend is declared, dividend has to be distributed, paid within 30 days. Give me the proper sentence. 30 days from the date of declaration. If the company has declared dividend on say 1st of January, I'll include first or exclude first? Exclude first and start counting from second. Whenever they've used the word from, exclude the first day of the series. Similarly, if they've used the word 2 will include the last day of the series. It is from so and so date to 5th. I'll include 5th or exclude 5th. Include the last date of the series. Then computation of time is very logical process where there's a chance that the office, the government office or a court might be closed on the specific date or the last date in which you have a right to appeal for it. Say for example, you have a right to appeal for a period of within a period of 30 days. And this 30 days ends on, what's the date today? It ends on 10th of February. Can you make an appeal on 10th of February? But for whatsoever reason, the government has closed their offices on 10th of February for whatsoever reason. Did I have a right to apply? But was I allowed to apply? Then the government states that if the last date of that series or the date on which you are supposed to make application is a date on which the office is closed, will allow you to make application on the next working day. Because I had a right to make application in our example on 10th of February. If that day was a day on which office is closed, if 11th was a day on which it is open, I can still make an appeal on the 11th. What happens here? If the court or office is closed on a particular date, then you can still make application on the next day on which the court or office is open. If the 11th is also closed, I'll make application on 12th. 12th is also closed. Whenever it is open, I'll come make application. I'll have an 1 day extended to it. Distance. We are going to Goa after exams. You know, you have already asked your parents. No, they'll kick you out now itself. Whenever you're calculating distance between 2 points, point A to point B, we'll calculate in what manner? Straight line? Okay, fine. Straight line, if there is a mountain in between. Straight line? Can I even change the altitude? That will also increase the distance. They have always calculated on a straight line on a horizontal plane. On a straight plane, if there is a mountain, go through the mountain. If you die, die. But calculate distance correctly. What is the distance to be calculated? In a straight line on a horizontal plane. No altitude changes, no direction changes. If there is a road, if there is a forest, go through that. But distance must always be calculated only through straight line on a horizontal plane. Then pro rata basis. Pro rata is nothing but proportionate basis. How to calculate exercise duty or any kind of duties here? If they have mentioned for every 1 kg of a good you have imported, I'll impose rupees 100 as a custom duty. How many? 1 kg of goods, some random goods, I'll impose a custom duty of rupees 100. So I have imported 2 kgs. I'll pay how much? It will apply the same rate for a higher quantity. Not same amount, same rate for a higher quantity. Or if I have imported only 0.5 kg, I'll be imposed with rupees 50. Is it applying same rate or different rate? Same rate for a lower quantity, higher or lower. What are the words you have to remember? They'll apply the same rate for a higher or lower, greater or lesser quantity. They'll have a proportionate calculation for this excise duties. Gender, we were just discussing about it. Masculine gender includes the feminine gender, or vice versa, feminine gender includes the masculine gender, unless the law is specifically made for a gender. She team. Himanshu makes a call for. No, he cannot make use of she team. It was created only for she. It was created only for feminine gender. It is specific law. Or otherwise, we have this law. In India, we treat cows as a goddess. We cannot kill cows. Killing cows in India is an offense. Killing bullocks, the male version, is allowed. Killing the female version is disallowed because the law was made only for a specific gender. We have gender discrimination. We'll fight for it after the exams are done. But as of now, do we have gender discrimination? Yes, ma'am. I've tried to find an act which is made only for males. I couldn't find any. There are laws which are made only for feminine gender, but there are no laws made specifically for. We will fight for our rights afterwards. But next point. There are situations where they've used the word singular, but it will be including plural. They've used the word partner. That includes the word partners. They've used the word signing of a document. The word document includes documents. It can be as if they have used the word singular, it will be assumed to be including plural, or vice versa. Powers and functionaries, very rarely they're going to ask it, but still. Again, they're all one word answers. Someone try to be a little active on this. If you have been given a power, is it mandated that you should use all your powers on an everyday basis? You'll use your powers only when it is required. When the occasion requires it, you will use the power. You have a power to, for example, give me any category of process here. Surya sir has a right to stop you if you come late to the class. Does he have a power? He has a power, but when will this power be used? Only when the occasion occurs. That means you have come. If the class starts at 7 a.m. and you come at 6:30, can he stop you? He will use his power. He can exercise his power only when the occasion requires. Only when the situation demands it, he'll use the power. Second category, whenever you are appointing person, we have done this yesterday in IEPF. When you are appointing a person, appointment can be done in two ways. Either appointment is done by a name, simply mention a particular person's name, the person will be appointed. Or I'm not mentioning a person's name, I'm mentioning an office by a concept called as what? Ex officio, by the virtue of office. Ex officio is a Latin word, but where is the concept? By virtue of office. And IEPF, give me the wordings of IEPF itself. IEPF is constituted with three category of people, remember? Chairperson, other members, and CEO. Other members shall not be more than 6. Chairperson, one guy who is appointed by the central government by ex officio. Who will act as chairperson? Secretary of MCA will automatically act as a chairperson. If I am appointed as a secretary of MCA, I will also act as a chairperson of IEPF. If I am removed from secretary of MCA, I will be removed from the IEPF of chairman. If Ashish is appointed as a, Aditya is appointed as a, Aditya is appointed as a chairperson. Unfortunately, he was appointed as a chairperson of, he'll be appointed as a secretary of MCA, then he'll automatically act as a chairperson. This is virtue of office, a concept called as what? Ex officio. Come back to our auditors topic we have done. Who will appoint the auditors? Who will remove the auditors? The person who is having a power to appoint will also have the power to remove or suspend his office. If I have the power to appoint, I'll also have the power to dismiss or suspend. Same logic I'll apply here also. If I have the power to create a rule or create a bylaw, I'll also have a power to add, amend, modify, or rescind, cancel those laws. If I have the power to create law, I also have the power to add those laws, add extra laws, or amend the laws, or rescind or modify, vary the laws. Same process is used for appointment also. If I have the power to appoint, I'll also have the power to suspend and dismiss. Subordinate functionaries. Usually when the government defines any functions, they'll not define it for a particular person. I'll not state that Narendra Modi has to do this particular activity. I'll mention that these are the responsibilities of a prime minister. I'm giving responsibilities or functions to a particular office title. Anybody sitting in the office title will be applicable by such rules and regulations. If I state that it is the responsibility of Prime Minister, if he has received any gift from outside India, he has to come and deposit to the government. Any gift received in the position of Prime Minister belongs to Government of India, not to him personally. He cannot take any personal gifts. I'll not mention the word Narendra Modi, I'll mention the word Prime Minister. Any gift received from any foreign delegate to a Prime Minister shall fall in the government treasury. It will be becoming the fund of the government, not his personal fund. Can he take it home? No, it will belong to the government. Any money received will belong to the government. I'll mention the office title rather than a particular officer. Whosoever is sitting in that particular office will be applicable by that laws, by that functions and duties. Successors. If what happens? If Narendra Modi tomorrow exits his office and some other person comes in, he's a predecessor. Some other person who is appointed is called as a successor. The successor will also be applicable to the same rules and regulations. Is it mandated? Again, the government offices keeps on changing. Say, take in the Andhra Pradesh government, for example. One of the major construction that is happening is Polavaram Dam. You have heard about it, right? At least. It's been constructing for the last... How many governments have changed in this period? 3 to 4 governments have changed in the period of this 20 years we have. can I say the project which is initiated by one government, one authority, one person, it is not mandated that he should only complete it. It can be continued by the successor. If a successor comes in, can he continue the same process? They'll continue to implement it. It is not essential for the same authority to initiate and same authority to implement. An authority may initiate and authority may complete it. Even this ESI, the new hospital is being constructed, TIMS, Telangana Institute of Medical Sciences. Seen it? Very big construction happened in the last 1 year, TIMS. It was initiated by a different government. It is now been implemented by different government. It was initiated, the project started in different government 2 years back. Now it is being implemented by the different government. It will be executed or it will be inaugurated by different government. It is not always mandatory that the authority initiating it should also implement it. It might be a successor who might implement it. Bylaws, you have already done this. This is an interesting topic, extension of law. Try to understand with an example itself. What's the date today? 10th of February. We'll take it slower, try to understand the situation here. 10th of February, an act has been notified. Act has been notified. When will the act come into enforcement? You have to ask, is the date mentioned or not mentioned? If I say the date is mentioned, it will be effective from which date? That specific date. Act was notified on 10th of February and they have clearly mentioned it will be applicable from 1st of March. Give me the two dates here. When was it notified? 10th of February, but it will be effective from 1st of March, and until that point of time, can I say act is not existing? On 1st of March, the act will be effective, act will be in enforcement. Now, for this act created, the executive body drafted rules and notified the rules here. When were the rules notified? Say, assuming rules were notified on 20th of February. Even before the act came into existence. Give me generalized answer. Rules will be effective from the date on which it is notified. But here, by the time it is notified, the act itself is not in effect. Act itself is not in enforcement. Will the rules be effective? Even though they are notified on 20th of February, they will be effective from which date? 1st of March. The date on which the act comes into enforcement. If a law has been made even before the act comes into enforcement, those rules and regulations will be effective once the act has come into enforcement. This is your enforceability of acts. And then a special provision again. Remember the definition they have drafted recently, the small company definition? I'm not sure whether I have this circular here or not. No, it might be in a different tab. Fine, forget. The notification given by official gazette, in the official gazette by the central government have used the word small company. They have defined the word small company. While defining the word small company, they have also used the word financial statements. Sorry, profit and loss account. Will they define this word again? This is a technical word. If a technical word is used in a notification or rules or bylaws, the technical word will have the same meaning as it is used in the act. They don't have to specifically mention it again. It is assumed that if they've used any technical word here, they've used the word paid up share capital. Is the word paid up share capital defined in this particular notification? No. But it will have the same meaning as it is mentioned in the act. That's your powers and functionaries. Rules. This is important. They've asked this question, straightforward, direct question. They've asked it 3-4 times already. How to make rules? Rules will be made by legislative body or executive body. Which body? 5-10 minutes we should be done. We have only 2 topics left. Offences which are punishable under 2 or more enactments and this rules point. Rest of it all done. Be little active on these 2 logics. Both of them are important. Offences punishable under 2 or more enactments and this, both of them are important. Start with this. Procedures for making rules. Rules will be made by legislative or executive body. Executive body, from here we'll simply call them as authority. An authority, being a democratic country, we are. Are we democratic country? At least on paper, we are. Democratic country, we are by the people, of the people. Laws are made by the people through their representatives, that is MLAs and MPs, etc. Now, what happens here? The authority cannot draft a rule and slap it on the public space. They have to get it consented from the public. So, what will happen? They'll create a rules and regulations. They'll not implement it directly. They'll not notify it directly. They will create a draft. A draft document which is not finalized yet, a draft document is distributed to every person who is likely to be affected by such particular rules. Give me the wordings here. Who prepared it? Authority will prepare final document or draft document. This draft document is published and given to all such persons who are likely to be affected by the rules. And the notification publication clearly mentions this is a date until which if you have any problem, send it to me. I'll consider all your objections and representations, then I'll create modifications in the rules and regulations. So what happened here? They mentioned a specific date asking you to send your considerations, after which they'll take every representation into consideration and create modifications in the rules. Is it draft or finalized? Draft. Who has a chance to represent it? Public at large, the persons who are likely to be affected. But there are situations where a law created by Companies Act is not going to only affect companies, but it will also have the effect on other authorities. FEMA might be involved. SEBI might be involved. If I'm talking about listed company, it's not only Companies Act, it is not only MCA, it's also going to take process from SEBI regulations. I should also take approvals from the SEBI regulations. If I had to take approval or concurrence of another authority, the other authority will also have their objections and suggestions sent to the authority. If I'm creating law which is having impact not only on my authority but other authority as well, that other authority can send their objections and suggestions. Now give me the situation where we are standing. I created a draft, published it, gave it to all the persons who are likely to be affected, and also gave it to the authorities who are affected by this particular law. All of them have given representations back to me. Representations must be considered or may be considered, because who is better in making laws, the experts or the public at large? Public might not understand the consequences of the law. Every single representation need not be accepted. If required, I'll make suitable changes. I'll not make changes in every aspect. I'll make changes only when it is required. I'll make suitable changes if required. Once the suitable changes have been made, I'll notify the document. Am I required to republish it? Because I'm not required to republish, because I'm not even required to accept your representations. Once a representation have been considered, I'll not republish the document. I'll make amendments if required, and I'll directly notify in the official gazette. Once it is notified in the official gazette, it is considered to be a finalized document. It is considered to be rules implemented. But try to understand. Once you have given representations, I have understood a loophole in the law, and I created a new law. I drafted a new provision altogether. If I'm creating a new provision, this new provision was never read by the public at large. If I'm creating altogether new law, then it is mandatory for me to republish the document. Because of your representation, assuming I found a loophole, to cover up the loophole, I created a new provision. Have I made amendments or new law? If it is a new law altogether, can I say I have never given this chance of representation to the public? I have to republish it. Republication is necessary or not necessary? Answer is not necessary unless you make a new law. If there is no new law created, there is no need of republication. Unless it is a foreign subject. What do you mean by foreign subject? It is not a part of the original draft. It is newly added. A new law is created. Give me the entire flow. Fast, Amma. Who is preparing it? Legislative or authority? Authority will prepare draft or finalized. This draft will be published, given to all such persons who are likely to be affected. Not only such likely persons, I'll also give it to all the other authorities which might be connected with such law. And I'll in this publication mention a specific date, after which I'll start considering your representations. That means if you send your representation after this date, will be considered or will not be considered? It will be, if it is sent before this date, it will be considered. After considering all your representation, is it mandatory to take into consideration every representation? May or must. May make suitable changes if required, and after making suitable changes, is it required to be republished? No. It is not necessary to be republished until there is an introduction of a new law, a foreign subject, new point is being added. Once the amendments have been made, I'll notify it in the official gazette. Once it is notified in the official gazette, it is a conclusive proof that the law has been made. It's been effective. Who creates all this? Legislative or executive? Executive. Citations is nothing but making references to any title or any word or any definition of another act. That is, similarly, we have done this in definition part itself. Either given in the act itself or made as an reference. That references technically are called as what? Citations. This is an interesting logic. A offense is punishable in two or more enactments. What happens here? You are board of directors of the company. You have conducted a fraud. If you have conducted fraud, will you be punished under Companies Act? Punished under Companies Act under section number 447. But at the same point of time, you will also be punished as per the IPC, Indian Penal Code 420. You are? For the same offense, you are punishable under two or more enactments. Have you done one offense or two offenses? How many times should you be punished? Once. Can you be punished more than once for a single offense? Can you be tried upon multiple enactments for deciding whether you have done offense or not? Trial can be done in how many enactments? Any of the enactments, all or any of the enactments, but punishment shall be charged only in any one of the enactment. There is no restriction on the number of trials. There is restriction on the number of punishments that are imposed. If it is an act, if it is an offense which is punishable under two or more enactments, we can try it in either one or any of those enactments, but we can be punishing only on one. This is a word you have to remember. There is no limit on the trial of offense. There is only limit on the amount of the number of punishments charged. This is an important point. Third category. Once say assuming two laws. I'll simply put it as Act 1 and Act 2. Two of the acts were trying the offense. A trial was happening, a prosecution was happening in both the acts. Act 1 stated that you are not guilty. You have not done any wrong. You are free from any offenses or free from any punishments. It does not mean that Act 2 should also declare you as not guilty. The intention of Act 2 might be different. The perspective might be different. Act 2 can still continue to try their offense even though another act has declared you as not guilty. If an act has declared you as what? Guilty or not guilty. If a verdict given by one act as not guilty shall not prevent the other enactment to continue the trial. They can still continue the trial and they can still prosecute if required. Last, this is where questions have been drafted, this logic. You have smuggled goods to India. Okay, you have smuggled goods to India and you have sold those goods in India. You have smuggled drugs into India. What have been smuggled? Drugs. For smuggling, there's a separate act. For drugs, there's a separate act. You selling drugs in India is a different offense. You smuggling goods into India is a different offense. If the offense are of two different natures, two different perspectives, two different intentions, can you be punished twice? If it is one offense or more than one offense, more than one offense, or otherwise it is a single offense, but it is distinct. The acts are looking at this offense in a different manner. Narcotics Act never looked at it for smuggling purpose. I am looking only that you are selling drugs. The Smuggling Act looked at what goods have been smuggled. I don't care. You have smuggled something into India. The intention of that act was different. They are not identical in nature. Then you can be punished by one or both the acts. Both the acts. There are questions drafted on this part itself. If they are distinct in nature, you will apply both the acts. If they are similar and identical to each other, you will apply only one. Fraud, the first example we had. Fraud is same intention, either it is Companies Act or IPC, it had the same intention, it will apply only one punishment. Smuggling of drugs into India, two. Smuggling is different, drugs is different. That's your chapter GCA, general. Again, first and foremost, a lot of people take this chapter as a choice. Reason they live in the dilemma that chapter is difficult. Remove that mindset that chapter is difficult. Chapter is very easy, very scoring. I agree we'll not be able to score much marks in the exam hall. If a question comes for 5 marks, don't expect 5 out of 5. Any other chapter of Companies Act or any other chapter in FEMA or etc. will get full marks. But iOS and GC are those chapters where you'll usually not get full marks. The words are very, very important. And it is not expected for you to replicate the words exactly. If you can convey the concept of GCA and iOS, you'll at least out of the 5 marks, you'll get 3 to 4 marks. And GCA iOS, both of them combined together will come for 20 marks more. GCA and iOS will come for 20 marks. If you can score at least 12 to 13 marks out of it also, 12 to 15 marks also, it is more than enough. You have to get 40 to pass end of the day. And if you're taking these 2 chapters as choice, you're writing for 80 marks. And these GC and iOS are defined between 4 questions differently. 4 different questions will come for GC and iOS in different questions. It will be in question 2, 3, 4 and 5. So you cannot take them as choice. They are mandatory questions. They'll mandatorily come for 20 marks, at least 20 marks, if not more. If you're taking them as choice, you're writing exam paper only for. And don't expect an exemption out of it. And even passing will also be difficult if you're writing for 80, especially when it's a theory subject. You have to be sure with 100 marks, only then you can start expecting 60, 70s. So these 2 chapters will be very, very important. I'm also agreeing you're not going to get 20 out of 20. You'll get hardly say 12 to 15 out of it, but that's more than fine. They're not difficult chapters. They're not drafting much difficult questions out of GC and iOS. Take in share capital. Which is better? GC is a lot better, but start removing that dilemma or that mindset that this is difficult chapter. Easy chapter, just have to put in little extra efforts, or my suggestion would be to, while you're reading this particular chapter, do a little writing practice. Have a pen and have scribble down all the keywords which you have learned. Have the scribbling going on continuously, or highlight the keywords at least in the material. They are already highlighted, but you start highlighting with your pen or highlight or something. Make sure that keywords are a little more familiar for you. Form sentences, it should be more than fine. Chalo, we'll close it off on this GCA. What's the time?